IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका fan बनाया. आप बहुत सारी चीजें बना सकते थे.
Attenberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Attenberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open and we're bringing you this show from the NDTV Profit Suzlon studio. Morning, folks. It's looking like a good one. I think the new normal is where the street accounts for a few skirmishes in the Strait of Hormuz here and there. It'll happen for a day or so and then it will settle down.
Well, I hope that is the case.
I think that's the new normal because the way crude has bounced back and then all your global markets have bounced back, Indian markets have bounced back is good.
Yeah.
Yeah.
Let's take it a day at a time these days.
I know. But for us, I suppose the big thing is that the official kickoff of the Q1 season always happens with TCS, and it seemed pretty decent to me.
Yeah.
I think best hiring numbers in 15 quarters, and you spoke with the top team.
Yeah, I mean, we'll of course, the viewers will have a chance to listen to them, but yeah, I think that says it all. Frankly, amongst everything else that happened in TCS, the hiring numbers stood out so well.
So, but broadly, there were modest expectations heading into the results, and they more or less hit the mark.
Yeah, so it's so difficult to disappoint when expectations are so low, right?
There's that.
Yeah.
Thankfully, they didn't.
You know, the problem though is that the street is so confused on IT. I don't know what the reaction is going to be. That I think is up in the air. So we'll just report it as we see it, I suppose. All right, here's what's happening globally. US markets posted a winning day after Trump says Iran wants to make a deal. Nasdaq gained on semiconductor stocks. So which is why if you pull up all of the indices, you'll see Nasdaq with the best results, 1.5% up at close. Let's pull up US futures and see if they're trailing the same trajectory. Pretty much flat, 0.25% down on the Nasdaq futures. Treasuries have cooled off as the US-Iran flare-up calms. For now, the 10-year is at 4.55%. Oil prices have eased as vessels start moving through the Strait of Hormuz. And this data coming in last evening from the Indian government that 53 vessels, including 20 Indian-flagged vessels, have transited on Thursday through the Strait of Hormuz. The Brent is currently at $76. So this seems to be the range, 74 to 76, or it seems to be the range where crude is settling, all things considered. Let's pull up Asian markets for you this morning. The start for one was strong, but let's see if it has really continued, and absolutely it has. 2% up nearly on the Nikkei, Hang Seng 1.5%. You're probably going to see that on India as well. Let's pull up the Indian implied open before we get to William Lee, Chief Economist, Global Economic Advisors. 118 points up is what is showing us. William, very good morning to you from where we are. I just want you to come in on that core, the new normal that the street has to get used to, because we'll always have a flurry of statements on, and we're showing you some of those right now with the Israel Prime Minister saying war is not over according to us. So no one quite knows what happens. How do you find a balance and a sense of normalcy in the middle of all of this from a market's perspective?
I think the markets have learned to focus on things that are really important to it at the moment. And right now, the geopolitical risk that is always going to be hanging over the markets seems to be calming down and settling into a steady state where there is a lot of tension, but the traffic at the Strait of Hormuz is flowing. And as you just mentioned, for important countries like India and in all of Asia, their supply of oil seems to at least be somewhere in sight, if not fully back to where it was before. So I think that's where the markets are calm. And what markets are really focused on now would be the earnings season and some verification and vindication that the AI trade is not only on, but continues to accelerate. And you're mentioning of how the semiconductors have done so well today in the United States and done so well recently over the last week or so. It's a sign that says the certainty about infrastructure spending is there. The certainty about the need to build up AI capacity is there. What's not certain is how the AI will be applied. And I think that's where you see in the software stack and the application stack, a lot of uncertainty about where it is that the compute will be taking place. Is it going to be in data centers or more localized computing? And that is, I think, is where the cloud of uncertainty is starting to show.
Interesting. William, so therefore the question arises, at this moment, a lot of projections of growth are extrapolating what we're seeing right now, and there's uncertainty how this is going to pan out. So that's one end, and that's the growth angle. But the other side, there's the inflation angle, and we were speaking from India's perspective in the second half of FY27, ending in March 2027. You're anticipating that inflation will shoot up quite rapidly. And that could well be the case in the US as well. What bearing does that have on growth and monetary policy?
I think you have to be very careful when you look at output and growth. Right now, we're getting a tremendous boost in productivity that's working its way through the output numbers, not just in the United States, but around the world. So we would anticipate in most countries that GDP will be doing quite well. But you really are very spot on in terms of where inflation is. And I have to say, from a policymaker's perspective, a central bank's perspective, we have to ask the question, do we see a wage price spiral? Do we see excess demand driving prices? Or are these prices being driven up because of supply constraints? And if it's the latter, then no reasonable economist in their right mind would say tighten monetary policy in the face of supply constraints that don't affect inflation expectations. And that's really key. And if you look at the case of the U.S., inflation expectations, 5-year break-evens, for example, have dropped by easily 1/4 to 1/2 percentage point over the last month. And the decline in these long-term expectations show that the markets are not concerned about runaway inflation. And even though you heard minutes of the FOMC are showing this wildly split committee, I am embarrassed to say that the FOMC are acting like a pack of political crazy people trying to jockey themselves for position in anticipation of what Chair Warsh is going to be doing. And Chair Warsh has already announced today a whole set of review committees to look at the methodology and data requirements and communications requirements of 21st century central banks. And the one thing we learned about the central bank meeting in Sintra in Europe right now is that all central banks are reconsidering their frameworks. And I think the news to come will be one where inflation hawks are going to have to be very careful in making their positions clear, which is, where are the sources of inflation coming from? Is it coming from sources of demand that central banks can do something about? Or is it from source of supply that the central banks can do nothing about and shouldn't do anything about?
Yeah, that's well put. The other question, William, of course, is where is the money flowing? And much as we would like to believe that EMs, etc., might be beneficiaries, I was reading a statistic, and I'm just pulling it up. I mean, that statistic seems to suggest that the US semiconductor ETF, attracted some 7 billion in fresh capital in a single Tuesday. It just shows the appetite towards semicon stocks even now, right? Does that trend continue, or some of the laggards start performing? Because India, for example, amongst EMs has been the best performer in the last 1 month, but doesn't quite compare to what's happening in the rest of the world.
I hate to say that I have always been one that's advocated that capital should go to where capital is used most effectively. And right now, the AI trade is sucking in all the available capital in the world and is sucking it into the United States where the innovations are taking place. Now, I agree with you. India has really benefited tremendously as in the shadow of this AI trade, because India represents, I think, to the world a second center that is able to perhaps compete with China as a center of production and as an alternative supply route. And I think that's where I think India can benefit most in terms of being able to position itself as not so much a frontier model driver, but rather an applications driver, and applications in manufacturing. And if India can really get its infrastructure and its famous bureaucracy in place so that it can actually be more welcoming for foreign capital to come in, I think India will continue to be a great recipient of a lot of capital. But the main focus right now of where capital flows are going is where it's going to be most efficiently used and most effectively used. And I still think that's going to be the United States.
Got it. All right. William, thanks so much for taking the time today. As always, thanks so much for speaking to us.
Thanks for having me.
All right, let's talk about what happened in trade yesterday. And in fact, it was a day of gains. But the thing is that we lost ground from the top. But first, the flows data, you had foreign institutions that sold to the extent of about 533 crore rupees on a net basis, domestic institutions mopping up as much as 2,060 crore rupees. Equity markets recouping some of the losses on Thursday. The benchmark ending with gains of about 0.33%, but it failed to hold on to that 24,000 mark. It slid in the last hour of trade, dropping as much as 0.7% from the intraday high. The Sensex weekly expiry possibly had a part to play in that choppiness. Dr. Reddy's Laboratories, and we'll talk about this in more detail today, was the worst performer on account of the disruption in their semaglutide supply. Sun Pharma, Bharti Airtel, as well as Bajaj Finserv on the other end of the spectrum were top gainers. Most sectors ended in the green, with realty outperforming, and we're going to do a deep dive on the realty indexes as well, because in the span of a month, I believe the gains are 18% or thereabouts. It ended as much as 3.5% higher yesterday. Macrotech, Brigade, Signature Global, all of these stocks ending with gains of over 5%. The Nifty Bank ending higher by as much as 1% or close to it. IT and auto on the other end were underperformers. A few stocks that stood out in the broader markets, and we should in fact talk about this today as well. Kalyan Jewellers was one of them, gaining 18% on the back of a 7-8% gain in the previous session, and of course it dropped in the session before that to the extent of 7%, but it's made up ground, and how. And there's also CE Info Systems that gained quite considerably in trade yesterday, along with Choice International, who we're going to speak to later today.
Yeah, interesting to watch some of these, but I think the moot point came in that while we were talking about supports and at 24,300 and 23,800, there was a joke on the channel as well yesterday. But yesterday, selling pressure emerged at this 24,150, 24,200 mark, right? And therefore, be mindful of that maybe there is that bit of near-term resistance zone as well. And the template for now seems to be just this, that use rallies to book profits near the resistance zones, while accumulating quality names on declines towards the support zones. I mean, I think that's what everybody seems to be doing right now. And when the herd does it, the behavior of the crowds, I mean, then the market tends to do that as well. Because everybody tends to follow that, this is what is happening currently. So unless there is a clear directional breakout, this seems to be the wedge in which we are kind of stuck in, if you will. Chemical stocks starting to see some buying action, evinced in the blue jet QIP as well, and we'll talk about that, as well as the price moves in some of the other chemical names yesterday and the last few days. And I'm not going to speak too much about TCS because we will talk about it in detail, but the hiring number is TCS is positive, but analysts are less enthusiastic about the short term. Though, let's see. I think the TCS reaction, and we will have to take it as it comes, because it becomes difficult to kind of preempt this per se. But I think the TCS reaction could well mean what large cap IT by and large does as well. So keep an eye out for IT names today. Maybe they react a little bit, but time will tell.
Yeah, if you're hedging now, you don't know what to say. Will it react positively or not? Difficult to complete that sentence. Okay, if I were to stick my neck out with the complete understanding that it could go wrong, I would say that TCS is actually a positive surprise in a lot of factors, because when expectations have been managed to the extent that they have, this is definitely looking better. But like I said, I reserve the right to be proven wrong. When it comes to factors this morning, it's an unconvincing recovery. Market has fought back bravely from the previous day's bloodbath yesterday, but a late session profit booking bout shaved 170 points off the Nifty's intraday highs. Near-term trend continues to be range-bound, 23,800 acting as a crucial support and 24,200 to 24,300 remaining the key resistance zones. Decisive breakout above 24,200 could trigger fresh short covering and revive a bullish momentum. A break below 23,800 may open the door towards 23,600. For the Bank Nifty, cautiously positive is the way to look at it. Leading the recovery charge but lacks momentum backup. Supports at 57,000, resistance at 57,000 as well. So those are some of the key levels as far as the Bank Nifty is concerned. But let me go across to Puneet, who's joining in for the F&O setup this morning.
Well, thank you for that. It's as you rightly mentioned, it's been an unconvincing recovery because what you saw in terms of impact on Wednesday, I think IT has been one of the spaces which is yet to recover. Now, if that happens today, led by TCS earnings, amongst other key factors, will be something to watch. But overall, still yet to go back to that 24,400 mark on the Nifty. For the Bank Nifty too, we've been hovering around that 57,200 as well as 57,700 mark for a while now, and yet to see that that upper band and the resistance crossed at this point of time. So what you will be watching out for, of course, is earnings that start for the big banks next week, but largely continuing to be that at that important support zone. Now from there, 56,800, 56,400 are some of the other levels to watch on the downside, but continue to monitor the Bank Nifty as well for the recovery. But in terms of cash markets, yet again, it's been very topsy-turvy kind of a week, because just in terms of a few hundreds of crores kind of transaction, given the base for foreign investors, today we are seeing a net sell number. So we've seen a breaking of patterns from the start of the week, where we've seen about 100 to 400 crore kind of buy figure come in on each days. And the index long itself continues to be very weak at that 9 to 10% odd mark. So 90% shorts still being maintained by foreign investors at this point of time. For the open interest distribution though, you've consistently highlighted that 24,000 continues to be a very important level as a near-term support, and you've seen the highest put open interest being built at that level. Once that breaks through, you could see some carnage in the near term as well, but that has acted with some historical evidence as an important level to watch for the markets. 24,400, 500 for the calls continue to be showing decent open interest at this point of time too, but it could be a stock specific market today. We've seen benchmarks largely dominate over the last few days, but look out for IT, of course, in that. Dr. Reddy saw build-up of shorts yesterday with the highest open interest, so watch out for further pressure, if any, on this particular stock. Also watch out for Dixon Tech as well. That big approval for Vivo JV has come through. Solar Industries has seen short build-up over the last few sessions, so monitor this stock as well. And for the open interest losers also, you've seen a couple of them get highlighted. Swiggy as well as Amber Enterprises were both short covering candidates yesterday, so if the momentum continues, will be something to watch. But overall, expect a more stock-specific market today compared to the benchmark-led move that we've seen over the last few days.
Okay, Puneet, thank you for that. Let me start with the stocks on our watch list. I'm starting off with TCS. It's the big one. I'm giving it a thumbs up. Numbers are in line with estimates. Margins are impacted by wage hike, and the constant currency growth is also in line with estimates at 0.4% versus 1.2% in Q4. Net headcount addition of plus 9,279 quarter on quarter is the highest in 15 quarters. One of the highlights of this season and the results as well. The Q4 annualized AI revenue is up 13% at 2.6 versus $2.3 billion in Q4. I look at that as a positive as well. The deal win at $9.5 billion versus estimated $10 billion. What are the core numbers? Revenue up 2.23% and EBIT is down 3.09% at 70,317 crores. So this is soft, but this was estimated. EBIT margins are down 131 basis points at 23.95%, so a tad below estimates, which were at 24.15. Net profit is down 2.68% at 13,349 crores. The estimate was 13,504 crores. AI annualized revenue at $2.6 billion, up 13%. Here's what Citi is saying on TCS. They've maintained a sell. They've cut the target price to 1,825 rupees. They're saying it's an inline Q1. International revenues and a flattish QOQ. They expect demand to improve sometime in Q2 given pent-up tech backlog. FY 27-28 EBITDA estimates are unchanged. Expect low single-digit revenue growth to continue. Key debate remains on the fair valuation for the stock, and they expect continued sluggish growth to weigh on valuations. Of course, watch that the first cut of that interview that Neeraj has done with K. Krithivasan and Aarthi Subramanian at 8:35 this morning. So stay tuned for that. Mahindra & Mahindra, the other one on my radar because of their monthly numbers, it's a thumbs up. Production in June is at 110,795 units, so a fair bump up. versus June 2025 a year ago, which was at 85,232. Sales have also improved. They're at 1,03,502 units versus 78,142 units. Exports at 5,954 units versus 2,698 units a year ago. So almost doubled. Model-wise growth, the 3XO production is back in growth at 7,733 units after a 27% fall in May this year. Scorpio production is up 16%. Electric Origin SUV production is up 41% year on year. And the Thar and Thar Rox is back above 10K units at 10,931. So good set of, I would say, updates that are coming in for the month of June, which is why that thumbs up. I'm going to look at Bajaj Finserv next. Also a thumbs up. Strong growth in both insurance business. Again, this is monthly updates. General insurance growth indicates strong underwriting momentum. Life insurance premium growth is led by robust growth in individual insurance premiums as well. The gross direct premium underwritten rose 31% month on month to 1,760 crores. The Q1 FY27 premium stood at 5,769 crores. That's an uptick of 22.6%. Total new business premium also increased 21.7% month on month, and there's a 40.4% growth in individual single, 24% growth in individual non-single, and 25% growth in group single premium. So the total premium has reached 3,676 crores, which is a 49% uptake. On the face of it, pretty robust set of numbers for Bajaj Life Insurance.
Yeah, absolutely. Certainly something to watch out for in trade. On top of my list actually is a stock that tumbled in trade yesterday, Dr. Reddy's Laboratories. It could well be in focus at the start today as well. Clarification has come through. In fact, NDTV Profit was the first to report on this issue. The stock dropped, and then there was a clarification that came through later in the evening by Dr. Reddy's. What has happened is that there is a delay in the semaglutide outflow, or rather the production, on account of an impurity. What is semaglutide? If you're unaware, it's a drug that is used to manage type 2 diabetes and aids in chronic weight loss. And impurity was found or detected during the semaglutide API testing, and the impurity emerged while scaling up the API production. The validation will be completed before commercial supplies begin. So there is no impact on what has already been marketed, and there is no recall risk, as the affected batches were pre-validation batches, but there may need to be a write-down of inventory related to these batches. The commercial timeline gets affected. Commercial supplies are now expected from November onwards, and the FY27 supply guidance remains at 6 to 7 million pens. The earlier expectation was about 12 million pens, as a result of which the stock already took a bit of a beating in trade yesterday. The issue will result in a delay in commercial supplies. A few brokerages have weighed in on Dr. Reddy's with regard to this issue. Kotak, for one, has maintained its reduced rating, but it's cut its target price from 1,175 to 1,160. It says it's another dose of disappointment. Semaglutide API impurity issue is set to partially squander the early mover advantage that the company might have otherwise had. They estimate that semaglutide Canada sales will come in at $56 million in FY27, $38 million in 38. The slowdown of semaglutide scale-up is set to take a toll on earnings, according to them. The second stock on my list is Muthoot Microfin. It's a relatively small entity, but they've put out their business updates. The AUM growth is coming at 18%. Disbursements have risen as much as 49% on a year-on-year basis, pretty robust. And the collection efficiency is actually also improved. This is something of a sign that you've seen in all of the players in that space. That number stood at close to 98% compared with 96.43% in the fourth quarter of FY26. The digital collections have also improved to 40% compared with 23% in Q1 FY26. Now, it's interesting because they've actually also put out an outlook for 2030. They're targeting a 30,000 crore AUM by FY30, so it's doubling. They're targeting 53.4% JLG. Now, what is JLG? It's Joint Liability Group. This is the majority of the loans given in the microfinance space, and for Muthoot Microfinance, it accounts for 3/4 of their loan book currently. They're also targeting an ROA of above 5%. They're well below that mark right now, and ROE above 20%, and they're targeting 75% digital collections by 2030. That stands at 40% right now. Anand Rathi Wealth is the last one on my list, and they've seen a decent top line and PAT growth despite market conditions. In fact, I believe the expectation for the PAT number was at around 90 crore rupees. They've come in at 116 crore rupees, so it's better than what the street had anticipated. Still, PAT margin has dropped just a tad bit to 33% from 34.4%, and the company has achieved 24% of the full year revenue guidance, 25% of the PAT full year guidance. Remember though that this is a company that has consistently under-promised and over-delivered, and so if they manage 25% of their target in the first quarter, it's not necessarily the track record that they have established in previous years, but it's still a decent number.
Yeah, I mean, it is a decent number. Just that from the heady growth numbers, maybe just come off a little bit, right? So let's see. I mean, a company compounding at 25, 27% versus maybe 18% or 19%, will the street see it differently? Yeah, it would be interesting. But Muthoot Microfinance was very interesting.
It is, right?
They're off too as well, right?
Doubling of AUM. Particularly from the perspective, I thought that these loans are not necessarily very long tenor loans, right? So therefore, from that perspective, if you're saying that you will double your AUM, you anticipate the disbursements will go up very materially.
Yeah, and wonder if that entire microfinance cycle, therefore, is now improving. It's gone through like 3-4 years of a very bad crack. Let's see if it changes. The stock on my list, Dixon, and very likely the large cap stock of the day. Massive. And the news is known, so of course the news, and then there's some numbers to kind of tell the viewers why this news is so important for Dixon. Now, Dixon and Vivo Mobile India have signed a JV agreement. It's gotten the permission now. Dixon will hold about 51% stake in the JV company. The JV will manufacture electronic devices, including smartphones. Now, why is this approval so impactful for Dixon? Here are some numbers to just make you think, and some of these numbers could change depending on which analyst is tracking it how, but I've taken it from what the management has said in the past. So one, the Noida facility of Vivo is expected to be integrated, therefore it provides some immediate capacity to Dixon for executing orders of this. Now, in the past, management has indicated that the JV could add about 12 to 15 million smartphone units in FY27. Now, because there is a bit of a delay in these 12 to 15 million could possibly be 10 million to 12 million, or it could well be 12 million to 15 million. Remains to be seen, because there are 4 months that are gone, right, per se, in FY27. But be that as it may, you have the basic numbers for FY27. The scale to a full annualized run rate is about 20 to 22 million units. Sorry, a tongue twister out there. Now, remember, Dixon's existing numbers were 33 million units in FY26. That gives you the scale of what this JV means for Dixon, and of course Dixon has 15% stake, so people can do the math. But the long-term revenue opportunity is cited at around 30,000 crores, and FY27 revenue based on annual numbers, of course, could reach about 64 to 72,000 crores, which is about a 30% growth versus the base of 15 to 17% that people had assigned thus far. So if all goes well, if there is a proper ramp up, etc., and stuff like that, then from a 15 to 17% number, or maybe even flattish revenue growth that some people have penciled in, Dixon will immediately come into a fairly large growth in FY27. So near term, both FY27 and FY28 revenues get visibility, solid visibility, confirmed visibility, and I think that is something that the street will like. So expect some fireworks in Dixon today. Remember, it has gone up a little bit in anticipation of this, but I still believe that there could be some fireworks here. So keep Dixon at the back of your mind. A really big piece of news.
I'm just wondering, since this was anticipated widely, we have reported that it's cleared, going to happen any day now. Is it all priced in?
So the debate out there, Tamanna, in your view and Alex's view could be very different from what I believe, or all our three views could be different. But just because where I'm approaching this from is Amber actually got the approval before Dixon. So people started wondering, is there something that out there which is holding it back? Now that it is clear, maybe there is an immediate pop here. Some bit of it is priced in 100%.
Yeah.
Maybe not all.
Okay.
It's a big one. So let's see. I mean, again, remains to be seen, but it's one more large cap which could have a good day today. So it's the point for large caps. And very quickly, the two other stocks. Sorry, can I just get the two other stocks out before we get to Gurmeet? So the second one is Blue Jet. Yeah. Now, what has happened? Blue Jet is closed its QIP, allotted about 1.58 crore equity shares at 506 rupees per share. The pricing is immaterial. What is important is this. Shamyak Investment, which is the investment vehicle of Mr. Nemish Shah of Inam, and ICICI Pru bought out the entire QIP. This is blue chip investors taking off the whole QIP that Blue Jet put out, and which is actually really good, which is why the stock has reacted the way it has, of course, by the way. And remember, the key product, which is bempedoic acid, that tailwind for Q1 could actually lead to a very strong Q1 for Blue Jet and others like Newland and Morpen. There are only three players in the fray, and therefore keep an eye out for Blue Jet. Maybe some more fireworks here. Last but not the least, Premier Explosives, Apollo Micro, finally out. Sumit has spoken about it in the past in the dealer's check, that Apollo Micro is likely to buy Premier. The news is officially out. 41.33% stake from the promoter. Will launch an open offer as well at about 698 rupees per share. So this could bring about maybe some, if not an explosive move, then certainly a move in Premier Explosives. So keep an eye out for this one as well. Okay, let's take it to Gurmeet Chadda. Well, you know, you can ask him about almost everything, including Premier Explosives, because Gurmeet is a very large shareholder in solar, remember, so he understands his space well. But we are going to go to him on TCS, because that is the big one to talk about first, right? And Gurmeet, thanks so much for joining in. What did you make of everything circling around TCS, but predominantly that hiring number, over 9,000 employees hired in Q1? Does it show the intent and the demand for both Q1 and the near term for TCS?
Good morning, Neeraj. I think you rightly said. I think the most heartening part is the hiring number, more than 9,200, 9,300, and also the Neeraj, I think the whatever little I could see in terms of the tone of the voice, body language was much better. Last few con calls, it's just that, you know, I mean, sometimes you say the faces show, right, for what the uncertainty is. So I think the numbers are in line because, you know, the expectations have been quite soft post Accenture and what's been happening. Also, the hiring also indicates that they want to build capabilities around AI infrastructure, skill set, you know, capabilities, etc. So that's the second part. Third, the deal win was pretty good, and this is in an environment where a lot of companies, you know, I speak to a lot of my friends who work in tech companies, but this companies are holding back some of the large IT spends. And I think there is some concern on token capital eventually becoming more expensive than human capital, and the need to have the right synergy and combination of the two. So I think numbers are good, and it probably could lead to some bit of allaying of concerns. Also, once obviously we have detailed management costs, etc., and more will come out. I think the AI revenue also at more than 2 billion is also very heartening, which also shows the focus shifting. So let's see, and there's a lot of action now. Persistent acquiring, Navarro, Coforge doing large capex. So I just think that because it's so beaten down, maybe tempted to look at it tactically now.
You know, Gurmeet, I've learned of a new analytical tool, which is tracking how someone's voice is sounding, body language and confidence skills. Becomes important in these times, isn't it?
So, Tamanna, we deal with, you know, HNIs, ultra HNIs clients all day, right? Speak to them, interact with them. Have been on, you know, taking a lot of flack for what markets are doing for the last 2 years, right? So I think I just found it. I mean, it could be my personal take. It's just that I found some bit of it was a bit, maybe there is a bias here because maybe you're looking for reassurance.
No, don't qualify. I think it's I'm not even saying this in jest. I think it's an important, piece of analysis that you're sharing with our viewers. Of course, everyone knows they have to make their own decision. Do you think that at these current valuations, with the numbers you've seen, if you cut out the atmospherics, TCS is a buy right now?
I think tactically maybe yes, because it trades 12-13 times. But as I said, it could be a tactical bounce. We own very small quantity in some of our non-discretionary portfolios as a disclaimer. We do have HCL Tech, which we think has relatively done better. They also had a large deal win a few days back. But now it's important that some other large cap IT companies also do a follow through. Especially Infosys, because that's also been under a lot of pressure. So I think tactically, yes. I think the risk reward is favorable. Structurally, I'm still not sure. Before I see a more better 2-3% kind of a constant currency growth versus almost flattish constant currency growth. But I think the deal wins will improve in second half, assuming geopolitical tensions taper off.
So, Gurmeet, just less than a minute, but what is that deal win number that you'd be happy with in the second half? How much do you anticipate it could go up to?
I think it should go up in double digits. It's what I've been speaking to a few colleagues who work in different companies amongst the top three. I think it should improve. There already is a little bit of a pickup in inquiry in few verticals, which is BFSI, consumer. And as I said, they are now trying to use some of the money for building AI-led services, vertical, agentic AI, etc. Third, most importantly, I would like to watch out the buybacks from 1st August as the taxation becomes, more friendly. I think IT companies are seeing a lot of cash. They used to do a lot of buybacks before the taxation begins. So I think that's something that could be as I said, it could be a tactical call to begin with. And maybe structural if things improve.
Yeah, in fact, Gurmeet, you will hear the management right now because I did ask them about the buybacks piece as well. In fact, so thank you so much for joining in, Gurmeet, because I have to go across to the management of TCS. They spoke to us yesterday, and of course, we're bringing you a slice of that conversation about what is it that is in the results and what is it that is in the outlook ahead. Hear them.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is the ticket size of our AI projects are growing. And the discussions we are having with our customers on AI, so that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I would like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter and what does that signal for the quarter?
I think as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of it's a completely net new win and cuts across multiple services that will deliver for SKF. Complete AI first IT operations in terms of how the business would work, enterprise transformations, and also AI-led business transformations. I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, And, again, all these renewals require a very clear AI powered proposition, and we are doing well there. And with a, US based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and, customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And, you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Yeah, I mean, the annualized AI revenues are great, but I was just looking at it, and correct me if I'm wrong here, but considering that all IT companies in India are kind of starting off and you are the leader out there, but the pace of growth quarter 1 or quarter 4 versus what you did in quarter 4, quarter 3 or quarter 2, that is...
See, that's what she mentioned, right? Many of these programs are all short tenure programs.
Okay.
So you have to win it's not like a annuity program. When the growth is on top of what you already have.
Okay.
Many of these you have to win almost. So previous quarter probably you would have won the 2 points. Now I have to win all the 2.6 or nearly all that. So like the annuity part of it is very limited. So because of that you would see some lumpiness.
It may be erratic.
Yeah,
Yes,
and also what you call AI revenue is, it's not an industry definition. We have defined only pure play AI transformation work that we do as AI revenues. For example, if we did AI in software engineering, we don't call that out as this thing. So I think it's up to the company. But I think what's important is this a metric that we have put out, and we want to run our race with this metric and drive growth momentum at a time where the AI adoption is only picking up and enterprises are, calibrating their motion. And as we create more value, I think acceleration will come.
Acceleration will come. I think that's a good summation of this conversation, and you will hear the whole conversation, by the way, at 9:25 on NDTV Profit, because they spoke a lot about what could happen to margins. They spoke a lot about what is the AI versus non-AI mix in deal wins right now. And, well, we prodded them a lot about what could happen in terms of revenues ahead as well. So certainly something to watch out for. Okay, we need to break. We need to go into a very quick break. Come back and ask Parag Thakkar and Kush Bora if indeed this table will be safe after TCS numbers, or do they want to thump it very hard? They join on the other side. Stay tuned.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg.
Welcome back. You're watching India Market Open. Let's pull up the implied. Implied is showing a good start, and will TCS be a big engine powering that 153-point gap up for the Nifty? That's possibly the biggest question. Parag Thakkar, Kush Bora in the studios. Parag bhai, should I start with you on TCS?
Yeah, you can start.
Yeah? What do you make of it?
Table thumping buy. Yeah.
Table thumping
That
buy.
was a very tentative thump.
Let's have a nice thump.
Big thump, bus.
Okay.
It's a table thumping buy. First of all, see, positioning is light. Everybody is underweight IT. Even people might be short, hedge funds and all. And then you have this commentary that from Q2, 79% of the verticals will show growth. Already in this quarter, BFSI recovered. Right, so I would say that it seems that worst is getting over. Of course, as per the management, it will get over in sometime in Q2, and from there, we will gradually start. 13 PE for 5% dividend yield. I would say that the only negative argument which I have is that Cognizant and Accenture are trading at lower multiples than TCS. So if you are a global investor, you have a choice that you can buy Accenture also, you can buy Cognizant also, you can buy TCS, Infosys also. But if you are a value investor like you who you want to buy stocks, high quality stocks at a PE multiple of below 15x, then definitely TCS fits the bill.
Is it also flagging off a direction for the rest of the IT pack?
Maybe. Let's see company by company. See, TCS sounded very confident about margins also. Of course, this quarter margin hit was one time because of salary hikes. But otherwise, they were confident about margins also. Let's see how other companies play out. Because, for example, HCL Tech won that last big order from European OEM. There, I don't think the margins will be very good because it's a very big order. So same thing happened with Wipro 4-5 quarters ago when they won large orders, but the margins were lower.
TCS sounded sanguine about margins for the SKF order, which is also large, 800 million, part one. And part two, just because the margin commentary is here, they said explicitly that while we are at 24%, our guided range is 26 to 28.
Yes.
And therefore, and we've done that. So I asked them that, do you therefore reckon that quarter 2, quarter 3, quarter 4, you go towards those numbers to aggregate between 26 and 28? And the answer was an unequivocal yes.
Oh, interesting.
So I think EPS.
So that side also table is being thumped.
And see, what many people think is that it's a management promoter, they have vested interest, so they can say always positive things like that. But I think I will trust Tata's from that perspective, and TCS management. I'll put trust on TCS management. Nandan Nilekani.
And when things are looking bleak, they also say it's looking bleak. This is not a. There's not a management that window dresses. Okay, we need to go to a big story and then we'll come to Kush Bora for the technicals. It's Newsbreak confirmed. And we just want to highlight that this morning as well. The centre has given its approval to Dixon Tech to execute a joint venture agreement with Vivo Mobile India. Remember, we reported this on the 16th of June that the Interministerial Committee had backed the proposal on this. Shimi joining in with more details. Shimi, what's the latest?
Yeah, so, this has ended the months of uncertainty around this deal, essentially because under the press note 3, you need approval, Vivo being the Chinese firm, and that falls under the press note 3, and that's very crucial that now the government has finally given the green light, and of course that will allow companies to manufacturing venture in India, and what the exchange filing of course suggests that the Dixon will now hold 51% in the joint venture, and the remaining 49% will be held by Vivo India, and that's important because one aspect which exchange filing also highlighting at this point that they are going to manufacture all the electronics, including the smartphone, and across the brand, the Vivo brand and the other brands as well. So that's also important. And of course, it's a news they confirmed when the interministerial briefing, happened on, somewhere around early June. And we got to know on June 16 that, the Interministerial Committee has given the nod, and just a mere regulatory approval was required, procedural process was required to kind of give a final nod to it. And the important aspect here, Tamanna, is also that under the press note 3, and you required approval, especially with a Chinese company. And in the recent past, we have seen the government has eased the China policy, and we are seeing the investment coming, the FDI coming in the non-sensitive sector. And this also aligned with how government is kind of pushing the electronic manufacturing space in a big way. We have seen that in the budget, greater allocation of 40,000 crore in the contract manufacturing. Plus, we are seeing a lot of tax incentives coming, for this space. So clearly a big sort of, boost for the electronic manufacturing space, plus the big boost for Dixon as well. And we have been tracking this story. We got to know that this has been approved after lingering on for so many, months, I would say, and then finally the green light has come.
Okay, thank you for that, Shimi. And indeed, it's a news break confirmed. And we were looking at that data, right, of how the stock price has behaved since we broke that story.
Since the 16th of June, the stock is up as much as 13%, and it has done pretty well since those March lows.
Yeah.
It's up as much as 39% from the 30th of March.
Yeah, internal debate whether all of this is priced in or not. What do you think?
I think it is priced in. It was known event, so I think it is priced in. But still, the stock is done well. It can continue to do well. I don't track the space so closely, but for me to buy this business, this business at 57 times trailing, I cannot buy.
Okay, so that's the valuation guru in Parag Thakkar saying.
No, not guru.
Okay, Kush Bora, just will quickly come to you on Dixon first to start with.
Not a bad move. If you look at it positionally, the tide does look like it's turning. The volume action is also very healthy, and now the news flow. So I think if you have a position, no harm in holding. 12,000, 12,200 thereabouts remains your stop loss.
Okay, Renu Bed Pogalia, Senior VP Research at IFL Capital, joins us on the show as well on this piece of news. Renu, really appreciate you firstly taking this call with us. So thank you so much for that. This is Neeraj here. Good morning. What do you make of this development coming through now? Does this add a further layer to the stock price attractiveness? Because we know it adds a layer of growth or layer or two of growth. But does it make a material difference to the stock, or some of it has been priced in because of the rally?
Well, I would say the market to that extent over the last 2 to 3 months has been pricing this development. And news flows over the last 3 weeks are very clear that the approval is in place and the documents or final letter could come anytime. So to that extent, I would believe the recent up move in the stock of almost 10% plus that we have seen is come against this backdrop. It already prices in this. Partially investor and analyst expectations also price in the JV numbers. But yes, the JV coming to picture and there is no uncertainty around this adds confidence in the volume stack up which is expected in fiscal 28-29. Management is targeting almost 20 million annualized volumes coming in from this JV. So to that extent, we see 8-10% upside coming in from the JV approval, and now clear volume visibility of 45-50 million units on the base case side for Dixon. And if we look at the JV numbers full stacking up, then 60 million annualized volumes should be doable for Dixon on the EMS, mobile EMS side of the business.
But Renu, Renu, just because FY27 has seen 3.5 months gone, what is your number of the volumes in million units added for FY27? Just so
FY27? For fiscal 27, along with some positive tail coming from other OEM brands with this service, we were expecting close to 40 million units, including 4 million coming in from this JV towards the fag end of the quarter. So to that extent, we see numbers getting slightly revised, maybe close to 44-45 million units in the base case for fiscal 27. And clearly for fiscal 28, as we had, a 60 million unit number looks fairly comfortable for now.
Okay, Renu, very quickly, would you tell your clients to buy Dixon this morning on this?
Well, I would say for long-only investors, the investment arguments and the case become stronger. The concerns on growth visibility narrow down, and we would definitely ask investors to add. But yes, there are different type of funds, and few funds that have already positioned for this news flow. So we will not be surprised if there is some profit booking also in the stock this morning as the news flow comes through.
Well, okay, that sums it up. Thanks for that institutional view, Renu. Really appreciate your time and all the best for the day today. Really appreciate. Well, that's IIFL view, and I think it sums it up, right? In some sense, some rallies happen if there is a pop. She's saying she won't be surprised if there is a bit of profit booking as well. Puneet has been tracking this story from day one along with Shrimi as well, and Puneet Johnson. Puneet, what more? You heard Renu speak about what the institutional investors could do like as well. You've seen a lot of notes as well. What's more to keep in mind with this story?
Well, yes, thank you for that. It's definitely a lot of perspective being covered, but a 19-month wait has essentially ended because the company had actually alerted the exchanges on 15 December 2024 for the joint venture with Vivo. So it's taken a really long time for this approval to come through, and as you rightly mentioned, that one key aspect that management had mentioned, that 45 to 60 days ramp up is still yet once the JV will be approved, will take. So you will see 2 quarters, Q3 and Q4 essentially, and most probably at this point of time for the Vivo volumes to be visible for in Dixon numbers as well. And the other aspect that the management had guided for 32 million smartphone guidance for FY27. That's a similar number that the management achieved in FY26 as well, but this does not have the Vivo JV numbers in. So the IIFL estimates is around 40 million. For brokerages like Jefferies, they see a 43 million volume guidance for FY27. So they will see essentially management coming out in Q1 and upping their guidance, and that's what most brokerages also feel. So JP Morgan has actually hiked their target price to 16,700 versus 14,300 earlier, and hence a lot more management upward guidance revision is likely on the cards.
Thank you for that. So comprehensive coverage on Dixon Tech from us this morning. We hope it's helped you figure out what you want to do with the stock now that this major overhang is out of the way. Kush Bora, let's come to the Nifty.
I thought सीधा कट करके stocks पे जाएंगे because I have so much to talk today.
So let's do the rapid version of it. Because it's 8:55.
Okay, fair enough. Too much news flow, too much action. So Nifty, Bank Nifty both gave away the high from the high point of the day. Not a good sign. 24,000 on the Nifty and then 57,300 on the Bank Nifty. Not a good sign immediately. For Nifty, there is 24,000 straddle at play once again, which means the range now becomes 23,700, 800 to about 24,300 on the upside. I wouldn't really create fresh long positions just yet looking at the market positioning. Bank Nifty, yesterday we spoke about how the the cooling off in private banks will help, and then you could have a rebound. We saw that, and oversold PSU banks will also see a rebound. That too played out. 57,300, the 200 DMA acted as a bit of a resistance, but I still remain constructive. You know why? Because HDFC Bank, that has actually popped up on our radar, which actually typically tracks momentum. In fact, not just HDFC, Bharti, Marico, Parag Bhai smiling in a corner. So some of these names, because he tracks these stocks and has recommended more than just once. So I remain more constructive on the Bank Nifty. If you have a position, you should continue holding on. If not, you can still create it with the low on Wednesday, which is 56,500, that as your stop loss. Also, yesterday we spoke of a very important point, which is the Trump tracker. I could not make one, but I came close to finding something which could help us.
Which is?
In all seriousness, बगल में छोरा गांव में ढिंढोरा. The FII index long short, बराबर? Big deal. हम तो हर दिन ट्रैक करते हैं, क्यों नहीं देखा? You want to know something very interesting? All of last week or even 10 days, markets were going up. FII index short positions remained at 89 to 91%. Now, ठीक है, आप बोल सकते हो अगर आपने ट्रैक किया तो क्यों नहीं बताया? Two reasons why I did not highlight कि अभी भी मार्केट में caution हो सकता है. One, the number of contracts that they were short kept on reducing every day, which was perhaps an indicator कि हाँ ठीक है थोड़ा short कम कर रहे हैं, but the percentage did not. Two, they were buying in cash. So it just suggested that perhaps there is a change in sentiment, but it did not play out that way. You have to hand it to them. FIIs for the most part of this trade have got it right. So unless the FII index short positioning changes meaningfully, I think we're going to have some cap on the upside. Also PCR. We've spoken about that enough times. The range is 0.7 and 1.3. Whenever the indices go, whenever the number goes past these numbers, you want to perhaps play for a reverse trade. So watch out for these two indicators.
Got it. Okay, so that's certainly something to pay attention to at the start. Let's quickly go across to my colleague Somit Sarkar, who's standing by to tell you what he's hearing from the dealing rooms. A lot of action in individual stocks. Somit, what stands out this morning?
Well, Alex, firstly, it's Kalyan Jewellers. Now, we have been seeing this counter buzzing in the last couple of trading sessions, and dealers are indicating that there are strong buy flows coming in on the FII desk. Dealers indicate that Capital Group is an active buyer in Kalyan Jewellers for the last couple of trading sessions. For Maruti Suzuki, there are sell flows on the large HNI desk. Dealers expect a weak Q1 numbers here. And then when it comes to cement names like Ambuja, Dalmia Bharat, Ramco Cements, there are some buy flows on the PMS desk. Dealers indicate a big price hike of around 25 rupees per bag has been taken in southern India, but we need to still wait and watch and see whether this price hike sustains or not going forward. When it comes to the demand side, the demand has been quite strong is what the dealing checks are indicating for the month of May, June and July also has started on a stronger note. And multiple news flows that we indicated earlier. TCS, yesterday we did say that dealers are expecting a decent Q1 and we could see a bounce from the current levels, and that is expected to happen given the fact that the numbers were quite pretty much in line to better for TCS. Apollo Micro and Premier Explosive were part of our segment on June 30th, where we did indicate that there's a buzz of Apollo Micro Systems acquiring Premier Explosive, and that has come through. And lastly, on Blue Jet Healthcare, we did indicate that Inam Capital and ICICI Pru AMC were among the top buyers in the QIP. And if you look at the names that have been come out from Blue Jet side, it's an Inam group company and ICICI Pru's various funds that have been the major buyers in the QIP of Blue Jet Healthcare.
Quite a few khabar confirms there by Somit Sarkar. The equity markets have opened, at least the pre-open session should have, so you should pull that up on the screen. Let's see where the benchmark Nifty 50 is starting out. Of course, these rates will settle early days. You may not hold on to that 24,300 mark for very long. But some of the contributors perhaps in the large cap index that we have to focus on, TCS, pull that up front and see where the first ticks take you for this large cap IT stock that has posted numbers in line with expectations, and the headcount data is really something that perhaps the street will focus on, starting positive, and let's see if that holds on. Dixon Tech, it's the confirmation of a story that NDTV Profit brought you exclusively on the 16th of June. And that stock is up as much as 10% in trade today. Whether it holds or not, Renu Bed, who spoke to us earlier today, suggested that you might have a situation of buy the rumor, sell the news. So profit taking might actually come through in this stock. Watch out for it later in trade. Dr. Reddy's Laboratories, I wonder whether after the clarification that the company is set out, and based on yesterday's move, the stock is up in the pre-open session, and so that's certainly something to watch out for. By the way, the USD INR, the rupee has opened up, and it's just a bit, it's clawed back a little bit of the ground that it lost a day before yesterday, and it's at very close to that 95 mark as well, 95.25. I wonder if it builds strength through the day. Yesterday it gained in trade as well. I'm curious about Muthoot Microfinance as well, because the targets that they've set for 2030 are pretty robust. There, the stock is up as much as 5.5% as well. So a few of these stocks, I want to actually, before we get into the stocks that I mentioned, ask you about Kalyan Jewellers, because in 2 days it's gained 20+%, right? Would you ride that rally?
does not really inspire confidence, if you ask me. I mean, the price movement, the price and the volume action has been stellar, no two ways about it. Not even overheated, but it's just close to the 200-day moving average. So, you could see some selling pressure after this kind of a move. So, yeah, I wouldn't really buy into it. I mean, I have my favorites there, right? Thangamile on declines. So, yeah, not now.
Did we mention the stocks that you had for us this morning?
Not yet. I could cover them quickly.
Let's
Yeah, sure. 3 stocks, all 3 of them on the buy side. Marico makes the cut for targets of 880, 900, 840 being your stop loss. Forgings also makes the cut. You've got a good volume and price action here. 520 to 540 targets. 498 is where you keep that stop loss. And Taj GVK for targets of 371 and 382. Stop loss at 356. By the way, a lot of hotel names are starting to pop up on my radar. Indian Hotels, Taj GVK, EIH, etc. So just keep an eye out on that space.
And very interesting names that you've pointed out. It seems like the start today is going to be pretty robust, at least based on the number of stocks that are in the green. From what I can see right now, 40 plus constituents on the Nifty 50 in the pre-open session are trading in the green, led by, guess who? And not Tata Consultancy Services. It is in fact Infosys. And I wonder whether that is a stock that you should keep on your radar. Kush, Parag, both of you, if you can weigh in. Tata Consultancy Services, certainly based on what you've said, is a table thumping buy. But can you extrapolate that to Infi?
So I'm saying that valuation wise, Infosys and TCS are trading at same multiples,
Right.
13, and both have 5% dividend yield. So you can say that both are good. Right now, what we have heard from TCS commentary is that Q2 onwards, they are seeing a recovery. Whether Infosys tells you that is to be seen. But I would say that overall, I think the sector is close to bottom.
Okay, very quickly, news coming in. Apollo Microsystems has agreed to acquire a stake in Premier Explosives in an all-cash deal worth around 1,550 crore rupees. That stock up nearly 3% this morning. Because of that, we are joined by TV Chaudhary, Deputy MD, Premier Explosives Limited. Mr. Chaudhary, thank you so much for speaking with us at NDTV Profit this morning. Tell us what you can share on the contours of the deal and how is this a game changer for you?
Yeah, as far as the deal is concerned, you already heard everything. And about what it matters for Premier Explosives is, up till now, Premier Explosives is a high energy materials manufacturing company and also high energy devices for the defense and aerospace. Now, as the future is entering more and more electronic warfare and communication systems and all those which become important, this is a strategic participation of both the companies with their expertise, long expertise and all those. So we expect a lot from this association.
Now, since there will be a controlling stake that Apollo Microsystems has, will there be changes affected in the management of the company? How does this move going forward, Mr. Chaudhary?
I don't think there will be any major changes in management because both are in the different fields. And in our expertise, there is no crossing of the expertise available within the companies. So, as far as Premier Explosives is concerned, the manpower and all those, there are not going to be any change. And also the control of management are also going to remain same.
You've talked about, and good morning to you, you've talked about the tailwinds that can emerge from supplementary business lines, right? What are the kind of numbers that you see and what's the opportunity that you see if you project it forward perhaps 2 or 3 years?
No, it's too early to project for 2 or 3 years. The current year, yes, current year is for delivering the 1,500 crores of order book Premier Explosives has. Our concentration will be to maximize our deliverability and execution of these orders. And the strategic partnership between Apollo and then Premier will come, it will come into effect by next financial year. That's what is my expectation.
Could you take us through some of the complementary technologies that you might pursue post this acquisition, sir?
See, there are a lot of things which are now electronic and electromechanical and then electronic and chemical combination. Important thing like landmines, which are now everywhere, intelligent landmines have become very important, and then we are producing the landmines, and then we have a partner with the electronics background in the intelligent one. It will definitely helpful. And now you know that loitering munitions is another field where the munitions are delivered by communications and electronics and all those. And ammunition also now different fields where we require both expertise. So here either we are all these days we are partnering with external company and all those. Now it becomes a joint effort of both the companies which support each other.
Chaudhary, now you've said that this acquisition will come through in the next financial year, FY28. Once it does come through, do you anticipate that it will require additional investments to facilitate this joint development that you are talking about, or do you think that existing capacities and things as they are right now are enough for that?
Already our capex plans for the expansion and additional capacities are in place and they are going on. They are in the construction stage and then we expect to complete them within this year with the inner strength of Premier Explosives itself.
Is there any, Mr. Chaudhary, hi, is there any kind of capital infusion that Apollo will do additionally? Is there any outlook of revenue bump up that you get with this deal? Can you give us some sense on that end?
As on date, we are not expecting any capital infusion because, like I told you, already our plans are in place and the capex also fund requirements that also are in place. So it's more of a strategic partnership where to complement each other's skills and our expertise of so many years. Both are a first-generation entrepreneurs, the promoters, Dr. Gupta as well as Mr. Reddy. So with their aggressive and technical skills and all those, we see a much growth rather than expecting a capital infusion by Apollo Micro into Premier.
Absolutely. And just very lastly, Mr. Chaudhary, and appreciate that you've taken the time. Just the last point, once these two entities do come together, the opportunity that you see in the domestic market versus export, how do you see that panning out in the first year of operations and then subsequently?
Yeah, we look more, we feel that there will be much better growth with this association in domestic business rather than exports.
No, one second. So just trying to understand, you talked about the promoters just a short while ago, Mr. Chaudhary and Mr. Gupta on your end, but just trying to understand what this deal entails because the promoters are now effectively exiting, right? So are we looking at a possible merger down the line?
Right now, that is Apollo Microsystem has to tell about it. I won't be able to comment on that. But yes, as on date, there is no change in the management or system of the operations or anything. Yeah, the shareholding pattern has changed, but at least coming 1 year, we don't see any change in the operational system and all those.
Is that something which has been quantified by both sides, that at least in the next 1 year, there will be no change in management or operational methods for Premier Explosives? So there's a 1 year period that they've given, is it?
No, I am saying this 1 year at least will be. Afterwards, when we study how the growth is and there, if any complementing each other are needed, further it will be thought of and then decided. That's what I feel.
Okay, thank you so much. Okay, so this is your view. That's very clear. Thank you so much, Mr. TV Chaudhary, for joining us, taking our questions. I mean, it seems in eventuality, right? If you have 41%, the promoters have exited, you have an open offer. So there is eventuality that even though Premier Explosives could continue in its own brand, that at some point it becomes an extension of Apollo Microsystems. It effectively has at this point.
Very likely could happen, and therefore we invite the Apollo Micro management to come in as well to talk to us. But by the way, just before we get to the next story, have to mark this: IT starting off on a firm footing. TCS up 2.9% or thereabouts, and I think that is rubbing off on some of the other IT names as well. So you will see HCL Tech, maybe Infosys, maybe Tech Mahindra, maybe Wipro, all of those likely to do well. So keep that at the back of your mind, and we'll get in some tech checks going for that. Kush, Bora, quick 30 seconds. At these prices, because there is a momentum on open, would you take a trade on any of the large cap IT names very quickly?
I still prefer HCL Tech and Tech Mahindra, but TCS is massively oversold. This positive bump up could actually make for a rebound trade. So yeah, for
Buy 3% higher?
Why not? The risk reward ratio still remains favorable with yesterday's low.
Okay, fair call. Okay, now let's with a bit of a delay though, get in the top brokerage note as well, and Sharad joins in with that. Sharad, what do you have for us?
Well, it's a very interesting lens cart, and we have been seeing for the last 1.5 months a lot of initiating reports are coming in, and today it's not different as well. JP Morgan have initiated this with a target price of 635 rupees per share, and they have stated that it's a formidable disruptive model set to get in more market share in the domestic market as well. Now, internationally also, it's a second important growth engine going ahead, and the operating leverage might have a 33% EBITDA CAGR over the next 4 years. Also, the positives includes volume growth, premiumization, and high retention in their gold members. The key risk is, of course, the execution which is there, but nevertheless, the brokerages are turning bullish and sustaining their views for Lenskart.
Got it, Sharad. Thanks so much for giving us that view on Lenskart. Mayuresh Joshi, who's head of research, MarketSmith India, is joining us. Mayuresh, apologies, we had to keep you waiting while we were speaking to the management of Premier Explosives, and I'm guessing that you listened to that conversation. What do you think about it, and what would you do with Apollo Microsystems right now? I think you might be on mute.
Apologies for that. Good morning, Alex. So I think hearing the management, I think it seems it's going to be back-ended starting in the first by 28. So largely nothing changes from a balance sheet perspective. The deal obviously I think leads to consolidation and better scope in terms of the product mix as the regulatory approvals and clearances come through. And therefore, I think it should start positively playing out by 28 onwards. However, at this juncture, from the entire defense space, I think BAL is one counter that will continue owning in a global focus.
Tech, it's up about 3% in trade today as well, or at least in the pre-open session. What do you make of the announcement of the Vivo deal? We have 30 seconds.
Very much in the price, so I think this is a sentimental reaction.
Okay, quick view on Tata Consultancy Services. Were you sanguine or were you positive based on what you saw?
Absolutely in line with estimates. I think the only differentiating factor was the transformational AI deals that they've probably had.
Top pick in the IT space based on what you know so far?
I think I've been tracking Datamatics for a long time. I think exceptional outperformer in the entire volatility that the sector has faced.
Well, that was a rapid fire between Mayuresh Joshi and Alex Matthew. Great to get that conversation, Kush Bohra. As rapidly, your top call for the day today.
Forgings targets of 522, 540, stop loss 498.
Forgings, well, that's so brisk that we didn't get a chance to bring that stock up. But Forgings is the stock that Kush Bohra is recommending as his top technical call for the day today. But it'll all be about IT. I'll throw in a Dixon Tech out there as amongst the key large caps to watch out for because it's likely to start off well. And a slew of broader end of the spectrum names, but Nifty up 0.8%, I believe, courtesy Nifty IT. Pull up Nifty IT for you very quickly. Just show whether it's a 2%, 2.5%, nearly 3% up move for Nifty IT. Strong showing by that. And by the way, the mid caps and the small caps are not left behind because the market breadth is looking positive. The Nifty TCS is starting off bumper. Nifty mid caps 0.78%, small cap index starting off 0.74%. Great start. Let's get the heat map and look at the IT bigwigs right at the top of the pile here. TCS 3.7%, and it is determining what large cap IT is doing. So Infosys, Tech Mahindra, both of them up about 3.5%. HCL Tech 3.2%, Wipro 2.43%. Indigo bounces back because crude has come off a little bit from that $79 per barrel mark. Brent, that is. ICICI Bank in the green, Ultratech in the green, but you can't take your eyes away from the top five. They are right now charting a different course relative to the rest of the market. What is not doing well though? Dr. Reddy's, no surprise there. Again, 3% lower. This is not great news for Dr. Reddy's and a lot of allied suppliers as well. So got punished yesterday, getting punished today as well, now down 3%. Airtel sees a bit of a profit booking, but really it is about IT and how well it has started off. We're talking about legs to the market and how Reliance and banking were giving that and IT wasn't. IT is starting to do that. Is this the start? And if this happens, can the Nifty firmly eclipse 24,300 and beyond and start going towards to a higher level? So I think that is the key thing. But rip and roaring start to IT. Let's see if this is held on. Tamanna, I'm actually happy that it's not like TCS started off 7-8% higher and then cools off to 4%. It is 3% higher and it can actually build on from here. It's a great start.
I'm also happy that we stuck our neck out and took a call this morning that TCS is a positive, and we did it across the board, right? Even though there are many out there, and you would have seen right from yesterday giving quick commentary saying, oh, it's dismal, etc. That's not the case. Infosys about 4% up, so is TCS. Now on a day when IT and banks are both firing, you have that strength coming in. Quick look at the Nifty contributors before we get to the broader markets, because then that's the test, right? Everything has to fire together, not just the Nifty. Dr. Reddy is there with that semaglutide overhang continuing, but it is ICICI Bank that's the top contributor, followed by Infosys and HDFC Bank. So it's equal parts both. Reliance Industries also joining the party this morning. Let's look at the small cap and the mid cap indices this Friday morning and look at what's happening there. 0.74% on the Nifty small cap 250, the mid cap 150 also 0.78% up. The advanced decline ratio looking robust. India VIX is down a little above 12, so you have the bulls in charge at least this morning, 5.5% down right now. Let's pull up the sectoral heat map for you, and no prizes for guessing that the Nifty IT will be right on top there, 3% plus. Firing on the Nifty IT, metal stocks following through 1.5% up, so are consumer durables. My guess is Dixon is bumping up there. Pharma stocks are seeing a bit of a muted start, and this could be courtesy Dr. Reddy's. Nifty Realty about 0.5% down right now, but it's largely a green screen. Let's go to individual stocks and see what's happening there. I'm going to start off with Dixon, because really if there are two contenders for stock of the morning, TCS just by its sheer weight and a 3.5% pop-up comes in there, and so does Dixon, 3% up. Now from its lows earlier this year, that stock is already about 40% up. It's adding another 3%, and that earlier upswing was in the hopes that this would happen. It's finally happened. The Vivo joint venture is cleared, so you're still seeing some bump up and some ways to go there. Blue Jet is the other one, and this is exciting. Top investors, a top HNI has come in, a top mutual fund has come in and lapped up their QIP, 5.5% up on that stock. Let's look at results impact. We've got TCS and then we've got Anand Rathi as well. Anand Rathi not so exciting, frankly. Business updates. Let's look at Muthoot, M&M, Bajaj, Finserv. Muthoot there having a rocking start, about 8% up. Bajaj, Finserv also positive, as is M&M. HFCL has an order win this morning. Let's look at what's happening with that stock. That's about 2.5% up. So it's a good day, Alex, when you have enough winners to pick.
Yeah, absolutely. Tamanna, but before I even go to the broader markets, I want to pull up the constituents of the Nifty IT, because that has to be the story of the morning so far. It's not just Tata Consultancy Services, which incidentally is the top gainer on that index. It is also the likes of Coforge, which is up as much as 3.5%. You have Emphasis from the smaller pack, which is gaining about 3% or so. Persistent Systems. So therefore, that bellwether phenomenon with regard to Tata Consultancy Services and the results that it has posted is playing out. My only concern is that this story has played out in the past as well. If I remember correctly, Q4 numbers had this similar reaction where Tata Consultancy Services, Parag bhai, correct me if I'm wrong, Tata Consultancy Services came out with numbers, the street was positive on the numbers, the rest of the pack gained, and then some of the rest of the pack disappointed. Do I remember wrongly?
No, first of all, I think you might be right, but the price of TCS itself at that time would have been higher.
Sure.
So price has corrected, that much margin of safety has improved, and plus this time, remember one thing, this time they have said that Q2 looks better.
Okay.
And net headcount, as you rightly pointed out, 9,000 people added, right? AI revenue is now 2.5 billion, which is annualized growth of around 30%. So there are many internals. BFSI clearly looking at growth. So I think the internals are much stronger this time. If you see, just analyze TCS commentary.
Okay. So Kush, I'm pretty sure that you pulled some of these stocks up on your charts, right? Something like a Coforge, something like a Persistent Systems, Emphasis, Oracle, all of these stocks are up 2%. We're not talking about the frontline companies, right? What would you do with these?
Yeah, in a way, I'm glad we're not.
still believe that despite being oversold and TCS and Infosys looking good, I still think the bulk of the money in this space will actually be made in the names that you've mentioned. In fact, all four of them. OFS has already run up quite a bit, so maybe on declines, but the the rest of the three good traction on the way up. In fact, just a quick word on Nifty IT index as well. From a medium-term perspective, there is a falling wedge which started August, September 2025. If the Nifty IT index closes above, and I'll round this off, 28,500, that's when that resistance will be broken. So you could see some more traction coming in from the index perspective as well. Of course, the large ones, will perhaps lead. But like I said, I think the bulk of the money here will be made in Coforge, Persistent, and Emphasis.
Mayuresh, fundamentally, I'm sticking to IT again. Fundamentally, would you differ from that technical view? And the reason I'm asking is this, that every IT company is now kind of charting its own course. It's not same for everybody. So this is, ये आप blind नहीं खेल रहे हो TCS, right? तीनों पत्ते देखे हैं आपने और बाद में आप चाल चल रहे हो. Is that a better ploy right now versus trying to second guess today? 1 week, 2 weeks down the line when the results are out of some of the others, it's separate. But today, is it better to bet on a TCS where the numbers are known, where they've given the declaration about what they will do in quarter 2, quarter 3, where the hiring is known and the valuations are comfortable, versus trying to bet on a Persistent, Coforge or an Emphasis? Fundamentally, is that a better bet?
That sounds to be a very logical way of looking at the entire sector as a whole, Neeraj. But the important perspective out here is the consistency in terms of revenue growth that probably comes through, not just for TCS, but the sector as a whole. And therefore, I think there will be outliers within the broader markets. Coforge and Persistent have given very positive commentaries, and their earnings have also relatively stood out compared to the rest of the pack. However, I think the entire investments that are probably happening on the product and the hyperscaler front, as far as the global markets are concerned, they're probably looking in excess of $1 trillion as we exit calendar year 27 as well. And therefore, I think the massive investments getting through the deployment of more innovative AI agents that are probably happening across domains makes us believe that our companies probably need to pull up their socks and pull up their game faster than before and have this deployment done in a more aggressive fashion to probably compete in terms of not just the global platforms, but to probably secure that their clients probably stick with them in terms of additional orders that probably come through. So I think the overhang still continues in our opinion. And therefore, I think the stock that I mentioned, Datamatics, right? I think if you look at how the stock has probably performed in the entire aftermath of the entire sector probably going through pain, they've actually transpired from a generative AI to agentic AI, and their journey has been pretty transformative. And the deployment is very obvious, as you see on the P&L. They've deployed AI agents and fast track systems on the metro system as we speak. They have a large order as far as AI agents are concerned for a global insurance platform. They have a cash-rich balance sheet. So to that extent, I think you probably need to find out outliers in this space. The sector in general probably will still probably go with the construct of what the global dynamics are doing. The Datamatics, in my opinion, again, has probably stood the test of time as far as all these factors are concerned.
Got it. Okay. Thank you, Mayuresh, for that explanation. Really appreciate your time. Parag Bhai, Kush Bora, thank you so much for the call today. Remember, Parag Thakkar is a table thumping buy on TCS. I presume it still stays at 2.5% higher at the end of the day. Kush Bora also constructive there. And speaking of TCS, speaking of IT, remember you heard a slice of the small conversation, of the conversation that we had, a small slice of the actual conversation that we had with TCS. It is up and about, and therefore it's great to bring to you that entire conversation that we had with K. Krithivasan, the company's MD and CEO, and Aarthi Subramanian, who's the ED, President and CEO of the company. Listen in.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, obviously if there is a beat, we are all happy about it. Our order book has been good. We are our largest vertical. BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that ticket size of our AI projects are growing, and the discussions we are having with our customers on AI. So that's also resonating very well. Our customers like the overall 5-pillar strategy you put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I would like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter, and what does that signal for the quarter?
I think, as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of it's a completely net new win, and cuts across multiple services that will deliver for SKF. Complete AI first IT operations in terms of how the business would work, enterprise transformations, and also AI-led business transformations. I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, and again, all these renewals require a very clear AI-powered proposition, and we are doing well there. And with a US-based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double-digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and, customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And, you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Yeah, I mean, the annualized AI revenues are great, but I was just looking at it, and correct me if I'm wrong here, but considering that all IT companies in India are kind of starting off and you are the leader out there, but the pace of growth quarter 1 or quarter 4 versus what you did in quarter 4, quarter 3 or quarter 2, that is...
See, that's what she mentioned, right? Many of these programs are all short tenure programs.
Okay.
So you have to win it's not like a annuity program. When the growth is on top of what you already have.
Okay.
Many of these you have to win almost. So previous quarter probably you would have won the 2 points. Now I have to win all the 2.6 or nearly all that. So the annuity part of it is very limited. So because of that you would see some lumpiness.
It may be erratic.
Yeah, yes, and also what you call AI revenue is, it's not an industry definition. We have defined only pure play AI transformation work that we do as AI revenues. For example, if we did AI in software engineering, we don't call that out as this thing. So I think it's up to the company. Sure. But I think what's important is this a metric that we have put out, and we want to run our race with this metric and drive growth momentum at a time where the AI adoption is only picking up and enterprises are, calibrating their motion. And as we create more value, I think acceleration will come.
Yeah, your team handed me the leaflets, and there's some 3 pages of large companies talking about these AI deals with you, which is great. Hiring. my colleague Jasmeet was telling me, start off with hiring, because I want to know this. I don't know if it's as big a deal, but when the results came out and we in the newsroom were thinking about it, or 9,200 net hiring, right? Versus what? 2,500 or 2,600 in quarter one. So what's led to this? I mean, is it confidence about the future or current execution? What is it?
Both, right? We were constantly looking for top talent within the organization. And we also look at what is the demand that we have in the current quarter, demand we have for the subsequent quarter. So when we realize that we need to hire the top talent proactively, some of it is based on the demand we have on our hand, some of those hiring is being very proactive because we want to hire good talent from the market. So both led to it. So definitely it's a reflection of the confidence we have. And of course, being ready for the future as more and more complex engagements, AI engagements come our way. We should be ready to respond to that very quickly.
Got it. Yeah, but I'm sorry for pressing this, but since this has been, kind of choppy, these numbers, I'm wondering if this hiring is an indication of what could happen in quarter two or quarter three. Can one read into it?
You can, Neeraj, as I said, I'm not going to guide you into something. But as I said, this definitely reflects the confidence we have. Reflects also the kind of conversations, kind of project wins we have. So based on that, we went ahead and said, this is what we are going to need in future. And we need to build that and scale that competency. Based on that, we did this hiring.
But Aarti, can I ask you about the margin picture as well, right? Because in some sense, it's come exactly in line with what people were estimating, maybe 10 basis points below some estimate, but that's hardly anything. And it was a quarter of wage hikes, etc. Is this a net new normal of sorts? I know you won't guide, but I'm just trying to understand still.
No, I think if you know that Q1 margin came out at 24%, and you spoke about the wage hikes. Yes. And you know that, from a TCS perspective, we want to operate in a 26 to 28 range, which we have called out, externally. And, if you look at our performance last year, I think quarter after quarter, we have looked at how we have improved. And that would be our endeavor for this year as well.
So you reckon things could actually move northwards and northwards quite substantially?
Yes, and we have done in the past.
We always, our CFO likes saying, 26 to 28 is our guiding beacon, and so we'll be guided by that targets that we have set for ourselves.
To either of you, the consistency of the deal TCV could be heartening, right? I mean, one brokerage note, the first cut that I received said, it's slightly below, but 9.5 billion. I mean, that's a large number, right, per se. So, and it's consistent. So that must be heartening for you guys.
It is, like, as I said, as Aarti was mentioning, one is the overall number. Two is the quality of the deals that we have won. We are happy with both because we have, apart from one mega deal that Aarti just now spoke about, and then with the number of large deals that are there and the kind of AI deals that have come and the spread of the deals that are coming from multiple industry verticals and geographies, all of them put together. And I mentioned some time ago, the kind of conversations we have, the pipeline we have, we are quite confident about the overall pipeline and the order book that we have today.
I wonder if the conversations, so we speak to a few PE players and they are saying in all our portfolio companies, our conversations with them are that what is the human cost, what's the token cost? I'm trying to understand, as you are delivering AI-led solutions to your clients, is the conversation coming around, now that the token costs have gone so high, all need not be AI and therefore the human plus AI combination, etc. Is it getting a lot more relevance than what it probably was in conversations 12 months ago?
Definitely, I think that whole token cost of AI is a top conversation with customers. And if you really look at it, right, over the last 3 years, right, we had traditional AI, generative AI in December 2022 and agentic AI since Jan 2025. And now a combination of generative and agentic AI solutions coming together in production with the reasoning capability, the kind of workflow redesign that you can do, right? Those possibilities are getting better. So I think the token costs are definitely going up. But I think what we are doing is, what is the need now, right? So you saw this with Cloud Clause also, and FinOps came into picture. So I think the conversation is all about AI governance. How do you govern the token cost? How do you control it, right? And secondly, I think as we are learning more about the models, I think you just don't choose a model, in an ad hoc manner. The workload that you are, developing chooses the model. And so I think that whole matching the nature of the need of the work and the model is becoming important. And lastly, I think when you are building, I think the efficiency of doing development cannot be undermined because you have a coding assistant. So that, hardcore engineering skill set also becomes important. So this is definitely, but I think in terms of building the agentic control plane, and just like FinOps, AI Ops, all these things are emerging. And I think like we did with the digital and the cloud wave, I think our teams and the industry is quick to learn and respond.
Yeah. No, my question was also stemming largely from the fact that if the conversation was always about how AI will disrupt tech, I mean, and then external players like Jeff Bezos, etc., have come out and said that, listen, don't lose out on the relevance of what IT services will do. So
absolutely. You see, like again, you're talking about token cost and human cost as somehow being a total sum, but as customers start seeing business value, they will continue to spend more on technology. We expect that the overall spend on technology to continue to go up, and as they get more and more value from AI on their business value chain, the spend will increase. I don't think this is a zero-sum game on the token cost plus human cost.
Got it.
And if I may just say,
please.
I think to your point on SIs, I think making technology work, a product work in an enterprise is significant work, right? And that's what we have seen through various generations of technology transitions. And the same is true or more true for AI. And that's where I think being there in the customer context, serving them for decades, gives us that, extra grounding, the contextual knowledge to really help customers make this AI transition.
One final question, and that's around what the strategy could be, because a couple of I won't call them your peers per se, but a couple of companies in this space have done very large acquisitions as inorganic routes in order to kind of gain growth, etc. What is your optimum utilization of cash on books? Would you believe buybacks, dividends, acquisitions, inorganic moves? What could the bent be towards for TCS the next 12 to 18 months?
See, one, we have been consistently returning a significant 80 to 100% of free cash flow, and we will continue to stay in that. But if there are opportunities, like a strong opportunity towards acquisition, we will not shy away from that. And what we look for is wherever there's a quick scale of competency that's available. Like we don't look at for as a revenue game, or we don't look at it to just shore up our growth. We look at it for a true competency and synergy benefits that would come. So if a right opportunity and right asset comes through, we will look at it, but we actively are considering multiple opportunities at any point in time.
Yeah. Sorry, just to qualify that, you will not get a company your size. It's impossible, right? You're a behemoth. My question really is that would it be still, by your definition, a large sized one that you're looking at, or would it be string of pearls?
No, all, like as I said, like our approach would be, am I getting a new competency in the organization? If I'm getting a new competency in the organization, we will do it.
Is there something like that left for TCS to search for?
There are organizations that we always look at. So some of the, as I said, it's about our ability to quickly scale. If a particular capability comes along, which helps us in scaling, for instance, AI, scaling in cybersecurity, scaling in any other area that we believe that there's a great opportunity, we will not shy away from that.
Perfect. I won't keep you. Thank you so much for speaking to us today, and all the best for the quarters ahead.
Thank you so much.
Thank you.
Okay, so there's so much to take from that interview, and it should be available on our social media platforms. You can check that out. By the way, the IT index from the heady highs of this morning has given up a little bit of ground. It is trading with gains of just about 2% or thereabouts, but the benchmark Nifty 50 is holding and must be pretty much at the high point of the day. Pull that up, the intraday chart for the Nifty 50 up about 1% or so, and well above 24,100, in fact heading to 24,200. Let's focus in on our corporate conversation of the morning. One of them, at least, Gulf Oil Lubricants India is looking beyond its core lubricants business with expansion plans spanning EV charging infrastructure and data center cooling solutions. And even as the crude volatility remains a key factor and therefore affects their input costs. We're going to be speaking with Ravi Chawla, who's the Managing Director and Chief Executive Officer of the company, to talk about the path ahead. But before we do, let's go across to Somit Sarkar just to set the context. Somit.
Well, as Gulf Oil definitely remains in focus given the fact that nearly 50% of the raw material cost is a derivative of crude oil, and given the volatility that we have seen in crude oil, it will be important to know from the management how they are managing this volatility and what the margin outlook looks like. So the first key thing to note from the management would be the margin outlook and how they are managing this crude volatility. Apart from that, what is the capacity expansion plans? How does the volume growth runway looks like going forward, given the fact that there is competition coming in from EV vehicles as well? But do remember that the company is also diversifying into EV charging. Their subsidiary in which Gulf Oil owns close to 65% stake, Tyrex, is also gaining momentum. They have around, or they aim to get around 35 to 40% market share. So what are the bigger outlook or bigger plans for this subsidiary is also something that we would want to know from the management. When it comes to data center, that seems to be a big opportunity, but still the products that Gulf Oil is looking into are into development and trial phase. So when does the commercialization of these products start is something that we'll try to get to know, or we would want to know from the management. And lastly, when it comes to their capital allocation policy, now in FY26 the company had increased their dividend payout significantly because they were not because they were still exploring for growth opportunity. So what are the growth opportunities that they're now looking at going forward? Are they looking to do any acquisition is also something that we would be asking the management today.
Absolutely, you've lined things up very well for us, Somit. Thanks so much for that. Mr. Chawla, thanks so much for taking the time, and good morning to you. My colleague has already given you a sense of what we'd like to learn from you today, but let me start with the question I think that is on everyone's minds. For a company that is very susceptible to getting affected on account of crude oil prices with your input costs therein. What is the kind of impact that you're seeing in the first quarter one, and do you see that dissipating in the second quarter, and what is the margin guidance?
Well, I think we're seeing the prices of obviously our raw materials going up, as you have highlighted. So there have been a series of price increases both in our B2C, which is a retail market, which happens, and that is quite disciplined. But we have seen a lot of increases every month practically. So we are keeping pace with that. And on our B2B, we have formulas which work. But clearly there is obviously price increases happening. And as we look at it today also, it will take a couple of months, but we are happy to share that in terms of supply security, we have done very well. We continued, quarter four has been a very strong quarter for us, so there is good momentum. And we will manage our margins at the 12 to 14% band. Obviously, some costs we look at, obviously advertising, etc. But overall, price increases, yes, putting them in the market, and that has taken a lot of our sort of efforts. But I would say that it is in a good shape, and we hope after a couple of months, if crude and other exchange rates comes down, we will see some drop. But 2-3 months more, I think this is going to continue.
3 months more. Okay, so Mr. Chawla, that's actually very interesting to note that you will manage the margins between 12 to 14%. I'm just wondering about the lag effect though, because to a certain extent there will be an impact of inventory that you will have in the system, even though oil prices have fallen pretty dramatically from the very high point of $120 per barrel, and that's the indicative price that we look at, Brent, right? It's fallen to sub $80. So you're saying that if it maintains at below $80 to the barrel, the disruption you anticipate will take another few months?
Yeah, in addition to what you're saying, you're right. And is that our raw materials are basically base oil, additives, which are chemicals, and packaging material. So you see there, we are not seeing, there is a lag time, but we still find the prices holding. And definitely this is chemicals, especially additives, etc. I've seen a lot of increase. So it will, at this price of crude, there will be a time lag when we see it coming into base oil and other components. So hopefully that will happen. But as of now, we still see prices increasing in terms of our cost. And of course, inventory management is also key for us. But important is supply security. And I think there we are in a very good shape. We have a lot of OEM accounts, a lot of infrastructure accounts, B2C. So I think in that we are very well prepared. We have 2 plants actually working at full capacity to make sure that we are able to ensure supply security for our customers.
Mr. Chawla, good morning. Tamanna here. The fact that you're confident of maintaining margins in the 12 to 14 range despite a hike in the core raw material, which is Brent, leads me to ask, have you passed on any of these price hikes yet, or do you intend to?
No, price increases started from March, end of March. So we have seen that increase right across market, right across customers and the industry. So it is, as I told you, a very significant increase in raw materials. So that has happened, and we are obviously looking at so price increase, a continuous process as of now.
So just to clarify, you've already taken price increases and you will take more?
Yes, yes.
Okay. Have you managed to pass on the extent of price hikes that you have faced?
Yeah, so we have that is obviously a challenge, and we would look at some costs also. But I would say that it is in the B2C, there's a lot of discipline, but of course there's some lag time also. And B2B, the effort is on to obviously work with our customers based on a formula. But I think what we have seen in industry today is quite unprecedented in terms of the cost increase.
Fair enough. Just one follow-up, because you mentioned that at your plants you're now working at high capacities to ensure that there is supply security for your customers. What are the capacities you're currently working at both Silvassa and your Chennai plants?
So Silvassa is at 90,000 two-shift capacity, and our Chennai plant Ennore is at 50,000. So we are practically working at a 95% plus. But that is manageable because we do have pipeline stock. And as we have announced this year, we will also increase the capacity by 70%, but that will happen towards Q3, Q4 financial year. But at the moment, obviously, the coming season, July, August, September is generally a lower season for monsoon. So I would say right now, this season is a good season, and you've seen all the growth in automotive and other things, a lot of good growth in tractor, and a lot of our OEMs, plus our B2C distribution doing well. So I think we are working at that capacity, but obviously July, August, September, there will be some respite because the market generally tends to be slightly lower in the monsoon season.
Mr. Chawla, good morning, Neeraj here. So the capacity expansion that was announced Q3 for Chennai and Q4 for Silvassa, that's on track?
Yes. So that's on track, and that will see. So we have a lot of blending capacity. We add packaging, and there's a lot of storage and some expansion in Silvassa. We have some additional land acquired. So those things are on the planning and on schedule.
So at the end of FY26, you had mentioned that you forecast or foresee over 10% volume growth in FY27. Now, I presume that the volume growth numbers don't change too much, but you're talking about a pleasant surprise in Q1. You didn't say it that way, but I'm kind of, taking that as an inference, if you will, right? Because it's turning out to be stronger than what you anticipated. So therefore, does it? Sorry.
Yeah, sorry, please go ahead. Sorry.
No, so does it change any estimates for FY27 therefore?
No, our strategy has clearly been 2 to 3x the market. The market grows at about 3 to 4% in certain seasons. So that also has some seasonality. We continue with that sort of outlook right through. Obviously, Q4 ended very well for us because we have declared 14% growth in our core loops. And Q1, we'll have to obviously wait and watch. But as I mentioned to you, the first thing is to give your supply security because we have very important OEMs. We have other businesses we are growing in. So we are trying to do that. Obviously, we have to wait for the Q1. But in the year, I think we continue to focus on our 2 to 3x, and certain segments where our market share is lower, we want to do better. But overall, yes, that is the outlook for the year, 2 to 3 times the market growth and 12 to 14% band in the margin.
But sorry, just a quick question here. You were at that 10% or double-digit growth at the end of FY26 on the con call. Am I getting that right? And now you've had a better than expected Q1 from what I gathered from your conversation with my colleagues. So therefore, wouldn't that number go up logically?
So Q4, which for us is the Jan-March quarter last year, we ended at 14%. Right. So I think for us, we will obviously have to wait for Q1. But over the year, you see the market generally grows 3 to 4%. If the market grows 3%, obviously we try to aim 2 to 3x. So for the year, we'll have to wait and watch because seasonality comes and other demand conditions come in. But yes, as I said, supply security for us has been really good, and we hope that we can do well in the segments we are doing well in Q4 last year.
Mr. Chawla, a couple of business lines for you that are relatively futuristic, right, beyond lubricants. And here you're talking about Tyrex, which is the charging infrastructure that you're working towards. The question on that is, what is the trajectory that you foresee with regard to top line and EBITDA over the next 3 to 5 years? And when do you anticipate that this business line will become meaningfully profitable?
Well, we have done 100 crores last year in Tyrex, and we've done about 1,000 plus DC charges and about 30,000 plus AC charges. And as we have shared earlier, that as we see the EV, penetration going up both in buses and other vehicles, cars, etc., we do EV fluids, but chargers now, which we are presenting to the OEMs, to presenting to this charge point operators, as the penetration of the EV vehicles, whether it is buses and the others, now even you're finding some construction equipment, etc., going EV. So if all these are going to go the way it goes, obviously we have seen, like, just to give an example, last year we expected about 9,000 EV buses, but we had about close to 7,000. We expected about 10,000. So the buses, though they are, put into the pipeline, they take time to fructify in terms of the depots, even the number of EV buses, just to give an example. So we hope that this continues, and obviously EV is getting very, part of the penetration. And if it goes well, then obviously a 300 to 400 crore turnover in 3 to 4 years, because at least the way we look at it, we also have to wait and see how many of these EV buses, EV vehicles come in. And obviously there is a competitive environment here also. So we hope that we can generate that and obviously try to make a similar margin in these segments as it evolves. But we are breaking even today, but obviously once the revenue goes up and other things go up, we are investing in terms of people, service, in terms of technology, and we will obviously look at double-digit profit from this segment as we look at the next 3 years.
Sure. And those economies of scale, one would think, will play through over the course of the next 3 years. But I do want to ask, EV fluids compared with the traditional lubricants in terms of the margin metrics, etc., and the return on capital, how do they compare?
Yeah, so they are slightly notch up, but obviously this is a developing area. As you see, thermal management and other chemical management, other things that the EV fluid requires, we have a global range. So it's very nascent, I would say, because it's mainly going into the factory fill, and there's no replacement market, as you know. But I think it's a good product, and as the penetration goes up, we are already well placed with OEMs and others. But it is a tad better than the normal lubricant, and of course we have to be competitive. So I would say that we are already making good inroads in this area.
Just quickly wanting to understand, and one exciting announcement from your end has been the cooling solutions, right? Especially when it comes to the data center opportunity. Where are we at that? Are some of those products still in development? Are they now ready to roll out? Can you just tell us more about that?
Yeah, so I think you covered it in your summary earlier, but we have 2 candidates which the global range has. One is a synthetic data cooling solution, one is mineral based. These products are ready as far as we are concerned in terms of the formulation. But what happens is you need to test these products with actual hardware and verify that. So we have targeted close to 10 data centers coming up. There are obviously few, and there is obviously the future of the market is there, and it's obviously going to come in a big way with high speed and data cooling with liquid rather than air, because it takes in lesser density. So these products will get verified with these hardware specialists, and happy to share that we have started the talk, but as you had also covered, we have not commercialized it because these tests do take time, and we have a global portfolio. So we are also doing things on the portfolio there. So as soon as we get the tie-ups, we'll be happy to share with you.
Okay, we look forward to that. Thank you so much for speaking with us this morning. That's Mr. Ravi Chawla, the management of Gulf Oil Lubricants. But we keep the corporate action on. Choice International next on our radar in focus after NH Investment and Securities announces a 900 crore rupee investment into its broking arm. We're going to get Ajay Kejriwal, Executive Director of Choice International, in, but Parth is joining in for the setup first.
Absolutely. So the biggest news is that NH Investment and Securities will be investing 900 crores in the equity broking arm of Choice International. Now this investment will be done via compulsory convertible preference shares, which NH Investment will subscribe at 2130 rupees per piece. This transaction is still subject to regulatory approvals, but the closure is expected within the next 12 months. Now this matters a lot for Choice International because Choice Equity Broking contributed to 51% of their FY26 revenue, and it also accounted for over 25% of Choice International's overall net worth. So that's a pretty big chunk of Choice International if we talk about the equity broking arm. This investment will fund the Choice's largest operating lever, and it will bring in tech capabilities and institutional experience that NH Investment and Securities already has. Now, Choice has already guided that they will be growing this equity broking arm more than 5 times in the next 3 years. So the key monitorable to track for investors going forward will be if Choice is able to fulfill this ambitious target in the 3 years timeline which they have given.
Okay, thank you for that, Parth. Ajay Kejriwal, Executive Director, Choice International, with us this morning. Mr. Kejriwal, thank you for your time. Let me start by just understanding what are you going to do with the 900 crore rupees that's coming in?
So, first of all, I would tell that NHIS is a leading institution of South Korea. It is a flagship subsidiary of NH Financial Group, which NH Financial Group holds around $400 billion. And by pouring this money, while we getting this money, this is primarily will help us to boost our MTF book, our wealth management activity, our tech enhancement, AI-led research and advisory services. So this will give us a multiple growth in the coming future.
All of these spaces highly competitive as well right now. What is the kind of edge that you think you have, and this capital infusion in a sense will help you with?
So in this segment, in the securities broking segment, everyone has created their own niche. So some people are banking on digital only, some people are, so we have, Choice has a separate integrated hybrid model. We have the branches model and plus digital also. So this funding will help us to expand our branch network, our digital enhancement capacity, which is rarely seen by any industry player in the broking industry.
Mr. Kejriwal, good morning. Neeraj here. I'm trying to understand what led to this choice of the entity that has put in capital into your company. I mean, is it a factor of valuations, or does NHIS bring something else to the table which other suitors may have not?
So from NHIS, we are seeing that it will help us in growth in the various sectors. Besides the Choice equity broking, it will also help in institutional broking, our investment banking activity, our AMC business. So this will be a cumulative overall growth of the group ETSA. Further, they are convinced with the business model which Choice is following, a hybrid model, as just I have told, the branch and the digital, combining both, and the presence across. We have a strong presence across the 2 to 3 tier, 4 tier cities, which will help us to expand our investor base, client base across the country.
Okay. And okay, so what is the ambition for growth? Because as I look at your numbers, Mr. Kejriwal, even without this capital, I mean, if I look at what you've done from, let's say, FY23 to FY26, the growth has been fairly rapid, right? Revenues have grown 3x, profit has grown 4x, or EBITDA has grown 4x. So you're doing well on all counts. With this capital coming in, what are the new targets that you set for yourself? Because I'm sure when NHI has put in the capital, you would have given some idea to them as well about what the growth numbers could look like. I'm sure your minority investors would love to know that.
So the growth capital has already been told. We are targeting a 5x growth in the broking itself in the next 3 years. So you have seen the 4x, 3x growth in the past continuous year, but we are talking right now only of the broking activity, and it will help us to 5x, minimum 5x of the growth.
Broking, right, sir? And your business yeah, your business, but I mean, the money is coming into the mother entity, and I believe the mother entity is doing a lot of things. So if I look at the consol numbers, right, if you moved from 400 crores in FY23 to 1100 crores in FY26, where do you move from 1100 crores in FY26 to, let's say, in FY29 or FY30?
So first of all, I would clarify that money will come in the Choice equity broking and not in the mother
Only
company.
broking. Okay, fine.
Only broking. So this will fund only broking and distribution business.
Does have an impact on the overall numbers? Yes. So
Yeah.
therefore, Could you give me some targets therefore for the entire entity? So broking will grow 5x. What impact does it have on the overall numbers?
So overall number in the next 3 years, of course, it will come on the 4x, 3 to 4x minimum.
3 to 4x.
In the next 3 years.
3 to 4x. So therefore, effectively, what you're saying, Mr. Kejriwal, that your other business lines would also have to grow effectively double or at least triple. What would that have to be?
So that the other business line is our management consulting business, where we are driving with the government projects. That is on the rapid growth. We have a large pipeline in the order book. Otherwise, we have a secondary is our investment banking activity, where we are scaling with more IPOs. Almost more than 25 IPOs are in line pipe, and the NBFC activated. We are going in the MSME lab business and plus multiple other lending activity. There also leveraging is still very big room is there. So we are expanding in all activities.
What percentage of your revenue is accounted for by broking business right now?
Right now it is around 55%.
And it could go up to what, 70-75% on account of this rapid increase?
In the short term, yes.
Okay. And this deal has been structured through compulsorily convertible preference shares. And obviously there will be a conversion at some point. What will the stake in the entity be, and what will it have? How will it have a bearing on the overall ownership in the consolidated entity?
So we estimate after 3 years conversion, it would estimate around 12% dilution.
12% dilution. Okay. Mr. Kejriwal, thanks so much for taking the time, and I'm looking forward certainly to speak to you after the earnings, and we look forward to the trajectory of the company going forward.
Thank you very much.
Okay. All right. So the management of choice. By the way, the stock is up 1% in trade. Yesterday, it was one of the top gainers in the broader markets, gaining as much as 7 or 8%. By the way, digital rewards platform Gifter, have you heard of it? Well, this is an interesting story because it has made its NSE debut today and it enters the public markets. But without a traditional IPO, the company is actually listed through a reverse merger with a company you might be familiar with, LKP Finance, which has now been rebranded to Gifter. Nimit joining in to talk about this very rare phenomenon of a listing via reverse merger. Nimit, what can you tell us about this?
Absolutely. It sets a benchmark for people to go into the listed market without the entire DRHP process and going through all the pains of listing, especially in a market like this, without price discovery. It's quite an interesting thing that Gifter has done. In January, LKP Finance, a former NBFC which was listed on the BSE, bought stake in Gifter's parent, Muffin K, because of which they gave up their NBFC license, and then Muffin Pay's subsidiary Gifter, which is now listing, took over the brand as well as the business of LKP Finance, and along with that also took over its listing. Now the name change was registered with the MCA in April. Along with that, on the BSE, where LKP was already started trading as Gifter. Finally now this is going to the larger market, with the NSE recognizing on July 8th the share trade of Gifter and listing it today. Now it's going to be determined as to how well the market is going to take this listing, and the complete change from an NBFC business to a digital platforms business, where gifting business, it's going to be a change how the investors are going to say, and the share price historically has moved similarly. If you see in January, when the deal was announced between Gifter and LKP, the share price moved to a record high of 240. Then it tapered down to about 170, 172. Yesterday it closed at 169 on the BSE. Today on NSE opening, it's about 3% up, trading at about 174. But we'll have to see how the market takes this, but definitely lays down an interesting benchmark which other companies also might look at to list in the future.
Okay, thank you for that. An interesting story there, that Gifter stock about 2.5% up right now. Do your due diligence before you're looking at it as an investment, but we're covering this from the point of view of an interesting way to enter the listed space. Very short break. We're coming right back with our big conversation with Vineet Sambre this morning. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea. What idea? We were desperately hunting for it.
Welcome back. You're watching India Market Open. It's looking like a good morning. Just look at the boost that the Nifty is receiving from IT stocks. Above 250 points up right now, and it's not just TCS, the entire pack sort of joining in the celebrations, whether it's an Infosys, a Tech Mahindra, and HCL Tech, all of it. TCS off its highs, though, as is the entire IT pack, so you're seeing a bit of a cooling off and a little bit of profit booking there, but that is continuing to be one important story of the day. That's not the only one. We're putting the focus on Kalyan Jewellers as a stock. It's been on a glittery run, with the stock surging nearly 37% from its lows and just about 30% in the last 3 trading sessions. Even investors remain positive about robust earning growth. But what really is this fresh trigger? Mahima, is it about their business updates? Because when the business updates came, the first response was not very positive.
Yeah, so overall, a lot of things panning out, right, Tamana? It's not just about the business update, but, as Somit was mentioning in his, heard on the street yesterday also, there is, big buying also coming in. That's probably why the stock is surging in trade. But we'll try to look at what factors have worked so far and overall how it has a better valuation comfort as compared to Titan. Now, if you take a look at how the stock performance has been seen over 40% gain from its lows, and in the last 3 days it's up over 30% odd. In terms of the top line, the profitability and the ROC growth, if you take a look at the last 3-year numbers, overall the top line CAGR growth has been at 36%. So that's the number of the top line growth in that trajectory, 32% in FY24 versus a 43% in FY26. Profitability has also seen a CAGR growth of 44% from 20% to 92% in FY26. ROC has gone from 14% to 21% in FY26. So all of these three, financial metrics looking very strong. With regards to where valuations go, I mean, if we try to compare this with Titan, it has a valuation comfort. If you take a look at the 1-year forward PE for Kalyan Jewellers, it stands at 27 times versus that of 64 times of Titan. Thangamile at 49 times, considering the way it has run up. But Senco still has a slightly better valuation comfort, but the scale at which Kalyan stands is much larger as compared to Senco. Now, on the other side, what's not working? I think something that one needs to for sure look at in Kalyan is that it has a very high Middle East exposure. International markets overall is around 14%, of which 10% comes from Middle East. This is as of Q4 FY26. And overall, in terms of the exposure of showrooms, it has around 38 showrooms in UAE as a whole. And if the crisis continue or if they escalate, then there could be possibility of pressure in terms of international growth, in terms of top line revenue as well as the bottom line as well. In terms of FI selling, this is not a very positive number as of March 26, because as of March 24 it stood at 21%, which has come down to around 14.5% in March 26. Plus debt has also been on a rising trend, because overall if you take a look at the balance sheet, the total debt has gone up by around 23%. This is the total borrowing that I'm talking about, by 23%, and other liabilities has also inched up by 55% in FY26. The cash flow from operations to EBITDA metrics, this has also been falling, and that's something is a metric that analysts track and that one should take a look at, because that's gone down from 116% to around 70%, though it's healthy but it's on a falling trend. Lastly, in terms of where analyst recommendations stand, overall it has got 8 buy calls and no hold or sell calls and a return potential of 50%. So this is an entire perspective of Kalyan Jewellers, though it has a valuation benefit as compared to Titan, but the Middle East exposure could be something that everybody needs to watch out for, considering the geopolitical situation.
Okay. Well, great analysis. Thanks so much for that, Mahima. And you could argue that even the markets per se are actually not shining bright despite all the uncertainties. We need somebody, head of equities at DSP Mutual Fund, Johnson, to talk about how is an institutional investor thinking through all of this. Vineet, great having you. Thanks so much for taking the time out and being with us. And we'll talk about the results season as well. But just want to start off about how you're thinking about the investing process, considering that what seemed like a sure shot piece deal has also unraveled a little bit. Are you taking it in your stride, and do you believe that it is more noise and therefore investing continues as usual, or is it better to be a bit prudent about risk management currently?
So, Neeraj, in the 28 years of my working history, I can say that we have been actually living through very uncertain periods and uncertain times, and this is a kind of environment which, I mean, we have seen many events through the journey, but the uncertainty which we have been sort of going through in the last few years has been quite a bit, and I think we have got to sort of start getting used to this kind of uncertainty, and maybe live along with the uncertainty. So I don't think that the uncertain periods will sort of end as far as we are concerned. And like you mentioned, we just have to maybe keep navigating and try to find our own path in these periods. So right now, as we see most of these, uncertainties around the geopolitics, the good thing is that markets are also giving opportunities in segments where generally the sentiments also sort of turns negative because of these uncertain period. So for the long-term investor like ourselves, institutional investors, what you spoke about, I think these periods also create those pockets, and we try to use those pockets to build our long-term ideas. Because as you know, I think these are noise at best for till the time these events just pass by, and beyond that, I think the fundamentals matter. So what we have seen in the long run, what eventually will drive the returns for the investors would be the earnings growth, the cash flows, ROCs, and we have to sort of be sure about those as far as the companies are concerned. One more thing I want to add before I pause is the fact that not only the uncertainty around the external environment, but we have also seen businesses seeing a lot of disruptions nowadays. So while we think long term, we have to be sure about the sustainability of businesses from different kinds of disruption which are happening. So I think that's the core to our long-term thought process, Neeraj.
Got it. Okay. Vineet, the other factor, of course, is earnings and the Q1 updates thus far, and what TCS has done, at least to our mind when we were talking to them yesterday, seems that they are confidence personified. It seems that Q1 is starting off on a better footing than what people would have penciled in sometime in May or June. Is that your reading too? And if indeed Q1 turns out to be good, does it have the ammo to give further legs to the markets?
So overall, I believe, Neeraj, we would be in the accelerating phase of earnings momentum every quarter is my sense from here on, because of the fact that we've had 2 years of slow earnings growth. As far as Nifty is concerned, let's say we were at a single digit growth, and the broader index did much better than the Nifty in the last in FY26. But maybe I can call it a low base. Secondly, what we now have is some bit of that inflation increasing has led to the price points for various products also going up. So on a nominal basis, I think we will definitely see much better growth. Now, add to that the fact that companies have taken price hikes, and once we see moderation across the commodities, whenever things moderates and normalizes, which we have seen that playbook in the last few days, crude oil price has corrected down. I mean, while it can remain volatile till the time the uncertainty prevails, but I think the fact of the matter is that the oil has to go down, and I think that will create opportunities for the companies to show better profitability. I'm not calling those numbers will show up in the first quarter. What I'm saying is first quarter may be really we see more impact on the as a margin pressure, but going forward every quarter I see sense of earnings momentum sort of coming back.
Vineet, hi, good morning. Tamanna here. Great to hear that positive view as well as the acknowledgement that we have to learn how to live with uncertainty. But when you're talking about corporate performance improving, how do you bucket IT companies in that overall picture? And now that we have the first bits of information to make an assessment from TCS, how do you see that?
Yeah, so I think the IT industry overall has been grappling through this deflationary kind of environment which has happened because of the AI as such. But just also looking at the TCS numbers which they announced and the management commentary. I think the companies there are also trying to find their way out and path to eventually see them participating in this AI implementation aspect. And I think this was clear when the company yesterday announced that there's a multi-million-dollar deal which they have signed for the AI-led transition for a specific company out there. So my sense is that that's just maybe one example, but I think it also lays the fact here that the companies will eventually scale up. They will enhance their capabilities to sort of make themselves available for the global companies as and when the volumes of those AI work goes up. Some kind of deflation risk is there, but I think it will be company specific. Some companies I think should emerge better as compared to the others. The ones which will raise themselves up, improve their skill set and capabilities. I think those will find better days out there. In terms of valuations, we all know that these companies are trading at good 7-8% kind of FCF yield, and which is a good number to go by. So valuations are good, but just that the current environment is more due to the AI narrative is actually leading to the such valuations out there. So my view is slightly more on the better side, on the positive side. It may take 2-3 quarters, but I think eventually these companies will find their way out to grow in these environments.
So worth coming in at this point and betting on that recovery mode, or these companies finding their feet in post-AI world?
Yeah. So,
okay. Yeah. Okay, that was a short answer. No, so let me come to the other sectors that look exciting as we're heading into Q1 from your perspective, Vineet. Are you seeing banks and BFSI as the bellwether this time, or are you more excited by some of the other stories, whether it's industrials, whether it's the EMS space?
So I think you said it, Tamanna. I think these are the sectors which are definitely looking quite positive from the expectations from the first quarter perspective. Banks, definitely we have seen the system credit growth improving. The asset quality environment is pretty solid for the banks. NIMs could be under a bit of some pressure, but I think overall it should be a good environment for the banking sector, is what I feel. Beyond that, I think even for the within the banks, I think NBFCs should also see decent growth out there because of the de-escalation which has happened and oil price sort of cooling off. The momentum should sort of pick up for them. I would imagine the businesses which are linked to the power value chain, the electronic manufacturing value chain, the auto value chain. I think those are definitely looking good. Auto, we have seen sustainability of very strong growths taking place. And I'm actually quite bullish. You look at my portfolio, there's a lot of exposure into the auto ancillaries as such, because I feel that's a better way to play the auto upturn, because these companies generally tend to outperform the OEs as such. So that's where we are seeing, let's say, this continuity of better growth. Beyond that, I believe even consumer non-discretionary or the FMCG sector has been progressively seeing better volumes pick up. And maybe they may see some bit of margin headwinds, but that also should sort of moderate going forward. So as a combination of, let's say, banks, some bit of those manufacturing consumers, these are the areas which should do well, is the assessment I have.
Okay. Okay, Vineet, one, one, one question around pharma and chemicals, because the conflict has, of course, had multiple implications on end product prices as well as input prices for chemicals. But just the market reaction to, let's say, health or pharma stocks, not healthcare, but pharmaceutical stocks, CDMO, etc., and even the appetite for some of this paper, right? Bluejet QIP got taken by just two entities, institutional entities. So therefore, there's a lot of appetite for some of this paper right now. Are you at DSP constructive on select chemical and select pharmaceutical names?
Yeah, we are, Niraj, because I think, and so I would imagine, I would believe that.
Yeah, actually, Vineet, you ran one of the, sorry to cut you, but you ran one of the most successful healthcare funds, right? I mean, splendid returns. What are your thoughts there? So I just wanted to let our viewers know that you got really good experience in this space. Please continue.
Yeah, so Neeraj, see, actually, we have a very strong positive view on the healthcare sector, and there are very simple reasons for that. On the demand side, I think the demand will continue to be there. It is a good long-term demand. People are getting old, even in India, while we have the youngest population, but the number of old people are also actually increasing. Plus, anyways, the penetration, the insurance coverage, all those improvement, those are, all the positive factors which would mean that the demand for the pharmaceutical products are going to be good. Secondly, Indian companies have actually been competitive and also capable of supplying to the world at the most competitive prices. So I think eventually a few companies will find decent opportunities in the international market. And you spoke about CDMO. I mean, those opportunities are maybe just sort of opening up next 5 years. The companies will grow in that, and a few companies will grow in that space as well. So I think from a perspective that the market for the Indian companies is just not India but the world, I think we'll see good wealth creation opportunities happening here. What we have to be sure about is the strong chemistry skill set what these companies have, the product selection, the R&D, and I think your client servicing strength. So I think those will actually mean that we can have a combination of good companies within the pharmaceutical space. At the moment, right now, I would also say that if you just maybe monitor the monthly pharma numbers, we have seen in the last 4 5 months a marginal inflection from that 8 9% to 11 12% kind of growth which is happening, and the sector is also not very expensive. So I think selectively we are long term positive, but selectively we are generally also positive in the short to medium term on the pharma side. On the chemical side, it's been a mixed bag, I can say. China is a factor which comes out as a risk because they have been putting pressure on the prices. But again, right now we are sort of witnessing some bit of change happening, post this war. There has been in certain areas price increases being taken by the Chinese players. And if that sustains, I think the outlook for some of the specialty chemical companies should also improve. One has to remain selective in this. There is no broad brush trend change for the sector as such as of now.
We have very little time left, Vineet, but because we're speaking at the half point of the calendar year, what do you think this calendar year ends at for Indian markets? Do we see a dramatically different picture than the first 6 months?
So I would not like to hazard a guess, but I believe so because I'm just going by my view around the earnings momentum, which will eventually accelerate every quarter from that standpoint. And the other criteria where the foreign investors have actually sold down so much. Rupee has been at the lows. At some point when the global AI trade reverses, I think they will find some value and virtue in the Indian market, which is sustaining at decent growth. So I think I'm imagining that those trends should feed into better numbers for the markets as such.
Thank you, Vineet. Always a pleasure to have you on. Thank you for your time to us here on NDTV Profit. Vineet Sambre, the head of equities, DSP Mutual Fund, and his optimism really reflecting on the street today, Neeraj. It's been a good day.
Yeah, it's been a good day, good end to the week, Tamanna. Hope it holds that way. But it's been a great show as well. We had some fascinating conversations and some management conversations. So that's it from Tamanna and me and the team that put this show together on India Market Open. But stay tuned. Ask Profit up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो
हर पल मनाओ केसरी त्योहार. विमल, बोलो सुबह केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea. What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed. Shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin rises near the $64,000 level mark. Bitcoin ETF inflows return. Swift launches blockchain shared ledger. And Brazil's B3 stock exchange launches crypto futures. Well, the Bitcoin has rallied near that $64,000 level mark, and there are two reasons for it. First is, of course, there is a regulatory optimism, and the second is a momentum buying. Of course, the progress on the crypto regulations is also helping the institutional sentiment, and the market is following Bitcoin's lead in this rally. Looking at the next news, US spot Bitcoin ETFs have recorded fresh net inflows of almost $265 million. BlackRock's IBIT has remained a key driver of this institutional demand in the category. Now, these flows matter because Bitcoin is trying to recover from the recent government wallet sell-off pressure. Another deep dive, Swift has moved into its new blockchain-based shared ledger into a pilot with 17 major banks. Now, this enables a 24/7 cross-border payments, which is using tokenized bank deposits. Now, Swift means Society for Worldwide Interbank Financial Telecommunications. And the last one is Brazil's B3 stock exchange has launched options on Bitcoin, Ether, as well as Solana futures. Now, this expands its regulated crypto derivatives lineup, and more offerings would be coming in for the crypto investors. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, we see Bitcoin, Ethereum, XRP all gaining almost 2 to 3% in trade, and even the support resistance bands has moved up. It's between $63,000 to $66,000, and interestingly, Solana has also seen a good buying. Well, now time is there to look at the crypto strategy for the day. Here's what's there to keep in mind today. So the overall market outlook looks cautiously optimistic right now. A little bit of bullish momentum you can expect, especially during this weekend. Historically, during the weekend, the volume levels generally goes up for crypto, and the range of 64 to 65,000 levels becomes the immediate resistance range on the top. Now, the most important thing is that the regulatory developments still remain key trigger. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide and guide and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Watching Ask Profit here at NDTV Profit. By the way, let's take a quick look as to how the markets are doing. Let's try to pull up the Nifty 50 and see as to where it's trading at right now. The markets seem to be under pressure today. The expectation, slightly though, it's recovered, but is up by about 1%. Let's also pull up the Bank Nifty, and then Anand Rathi has been in focus on the back of its earnings, and we have Sharad joining by because he's the one who spoke to the management on the back of the numbers. Sharad, what is it that you're picking up, and go ahead.
Thanks a lot, Mahima, for that. And largely the numbers were pretty decent coming in. And remember, March is the quarter where there's a lot of volatility at play. And of course, company has done well. The AUM, they have touched that 1 lakh crore mark also. Of course, some PAT adjustments are there. But largely, if you remove those adjustments, the numbers have beaten the street estimates as well. And I had an important conversation also with the management. Feroz Aziz had joined in. He's the joint CEO at Anand Rathi Wealth. And of course, performance was pretty much very strong. So the first question is for Feroz. Feroz, a strong set of numbers coming in. What led to this?
Yes, with God's grace, the numbers are consistent. We have always indicated that our professional effort will be towards trying to make sure that in bad times of the market, unlike the perception that a financial services business will do badly, how do you do market agnostic performance and consistent performance? So this was a 19th quarter result after our listing in December 21. And all the results have had a PAT growth with God's grace of upwards of 20%, and the worst being 23. And this time also, in spite of all the market volatility, we have been above 20%, and 24% is the PAT growth without looking at mark-to-market gains. Because those numbers will look astronomically high, which is not the right way of looking at it. Business profit growth, which I think is a reasonable barometer of how we did, that's 24% growth. But yeah, do HNIs actually allocate more money during bad times? It's very difficult. Human nature always compels people to buy things which are done well. So in January, people were buying gold and silver. Now people were looking at Korean markets because they did well. It's very difficult to convince this group of humans, which we all are, to leave the emotion aspect and keep the heart aspect and operate as per the mind only. Mathematics has a certain role to play, but wealth management and money management is both heart and mind. So I think it's a difficult task. That's why you see the June collections of net flows in equity mutual funds were not the best. It was maybe the second worst for the last 12 months. In spite of that, our market share in mutual funds, this is the most important thing. The market share of ours in 2019-20 FY was 0.18% for the active managed funds of Anand Rathi Wealth. Now it has been 2.48%. That's our market share in terms of gross mobilization, including the SIP numbers. So I think we have focused on equity mutual funds. That's why you see 1,900 crores of equity mutual funds bought in this quarter, a 4% growth vis-a-vis last quarter. QOQ, we have gone up in equity, which is a tough task, but I'm glad clients have trusted us with more money during market lows.
And Feroz, looking at the overall FY27 guidance for the top line and AUM, it seems like the year has started well. First quarter, almost 24 to 26% of achievement has come in. So you reaffirm this guidance, or is there any change here?
See, we've given a PAT guidance of 460 crores from a business profit standpoint. We've given a revenue guidance of 1485, if I'm not wrong. And we've given a AUM guidance of 1,20,000 crores. We were at 93,000 crores last quarter end. Now we are at 1,06,000 crores. Of course, the big milestone crossed. 1 trillion rupees is a reasonable number, especially in the Anand Rathi way of measuring assets under management. We don't generously measure, like most wealth management outfits, do small agreements with clients and start counting those as assets. These are true to label assets under management without being too liberal in terms of, because there's no accounting standard for AUM measurement. Every company follows. We are following the most global standard. That's why you see our yields being high. We don't increase the denominator to look like an inexpensive wealth manager. So those were our guidances. We have finished 25% on all of them. Of course, AUM is a little, we've gone a little ahead in terms of AUM guidance achievement, but I think it'll get normalized. And 1,20,000 crores at the year-end number of assets under management seems like a doable thing if God is kind and Trump is kinder.
So there is just one parameter which actually I saw a very interesting number on that. Huge jump in hiring, relationship managers on a year-on-year basis. What does this actually suggest? What are the ground level channel checks?
No, if you look at our notice, our results, we don't hire them from outside. We home grow them. So we in 2016-17 realized that this business looks optically very easy from outside. but one of the toughest wealth management is not an easy business to be in. So you have to home grow them. So we've started hiring a lot of college graduates for the last 7-8 years. So my RM increase is not from hiring and buying people from giving astronomical salaries, buying them from competition is not our strategy. That's why you see 75 to 80% of the RM's last 100 relationship managers have been homegrown. So I have 480 apprentices approximately, which are called account managers, who will be promoted to be relationship managers. So it takes 4 years, 3 years to bring them to the same social cultural fabric as we believe, so that they can carry the Anand Rathi Wealth Limited brand in the marketplace the way we would want it to be, in a most transparent and unbiased. Genuine client centricity does not come easy. So I can't hire them from another bank or a wealth management outfit and expect them to have the Anand Rathi culture and hit the ground running. So yes, have the RMs increased? The answer is a big yes. Have we hired them from outside? Rarely, unless there's a friend of theirs working with us and we know them. We don't generally go out, get HR consultants to hire us relationship managers. This is something which is very unique. And we realized this about 7-8 years back, is why we are bearing the fruits today, because it takes painstaking 4-5 years of training somebody isn't easy. Youngsters don't come so easy to be trained.
And Feroz, in the wealth management space also, the demand is for new assets also, especially international investing. There's a big buzz happening right now. Is there any kind of announcement we can expect for Anand Rathi Wealth also coming into international investing or offering that to their clients?
So we don't recommend, we don't actually currently have the ability, let me be rightly not modest, but yeah, that's what our current status is. Of course, today I can tie up with any private bank outside, which is what most wealth management outfits do. Rathichi, who's our chairman, and my boss, Mr. Rakesh Rawal, has always told me, you only get into the territory where you have done second decimal math. To understand Indian markets, we have 182 product people. For me to understand the world, I might need 500 research and product people. That kind of capital commitment I can't do. Of course, I can. I have a UK subsidiary which we just opened, and with God's grace, that has started. A few clients have started trickling in. That is also to bring money to India. We don't give too much advice on the LRS, or in fact, don't give any advice, which might make us miss some opportunity. But I think we are okay to miss some opportunity, then get into a territory with half-cooked knowledge, and to have a great knowledge or a deeper understanding, finance understanding, I will have to at least have 100 people researching the world. That's not my current philosophy. And actually, focus in businesses is underrated, and opportunities are overrated. Like there is opportunity in India everywhere. There is opportunity in the world everywhere. But focus. You can't be everything to everyone for every part of his money. So understand your segment and focus on your segment and be masters there. That's been what's been taught to us from an IITian boss whom I have, Mr. Rakesh Rawal.
Right, so focus is the word. Thanks a lot, Feroz, for giving your views on the industry as well as the company's culture. It's always a pleasure to talk with you. So of course, we are talking a lot about earnings, but I'm sure a lot of our viewers are waiting with their queries, and it's lining up. So I'll take it over to you guys.
Yeah.
Thanks so much for that.
Thank you. So, of course, thank you so much for taking that conversation. Let's try to pull up the chart and see, because it's trading well. It's up by about 3.5% at the day's high point. So, good set of earnings, as Shahad mentioned earlier as well. But let's not wait further. Just a quick check on the markets before we start taking your queries. The Nifty 50 is now trading above the 24,200 levels at the day's high point. You have the Bank Nifty, which is above the 57,900 levels. So, I think the 58,000 levels is something that we'll be watching out for sure on the Bank Nifty, but in line with the benchmarks at today's high point almost. Let's also quickly pull up the broader end of spectrum, the mid cap 150 and the small cap 250 as well. Both trading 1% higher. The mid cap 150 up by about 1.2% and the small cap 250 also up by about 1.3%. So all the indices almost trading at their day's high point, and that's something that most certainly is good to watch on the screen. Quickly, the sectoral heat map, as we see a green across the screen. Metals topping that chart, up 2%, followed by IT on the back of the TCS earnings and positive commentary coming in. You have defense also taking a lead, up by about 1.7%. I think the least gains coming in from the defensives. You have pharma up by about 0.2% and FMCG up by about 0.5%. So that's with regards to where the markets go. But let's start digging into your queries, and to answer them, we're joined by Somil Mehta, Head Alternate Research at Mid-Asset, Shaykh Khan, and Tapan Doshi, Research Analyst at CA joining us now. And Tapan, we've been told that it's your birthday today, so a very happy birthday from the entire team of NDTV Profit, and we wish you all the very best and good wishes for the entire year.
Thanks,
I think I'll start by asking the first question to you as well, as a birthday present from our end. Okay, the first question that we have is coming in, and this is from Mahesh, who is writing us from Maharashtra. He is asking about MTAR Tech, and he says that he wants to take a swing trade in this from a 1 month perspective. He's already holding 100 shares at the levels of 7550. But he's saying that so basically what he's saying is that he took a swing trade, but now he's looking at this from a long-term perspective. Would you recommend this hold from a slightly long-term perspective of a year?
Yeah, good morning, and thank everyone for the birthday wishes. Now, talking about MTRC, the stock has already gone up a lot, but no, from the future also is good. If you see the next 2 years, the revenue growth may be around 25%, and clean energy orders are ramping up. If you see defense orders are also going up. The only thing is that there is a customer concentration risk, and the working capital intensity is there. So we have to look at the working capital, but because of defense overall orders is going to go up, and it is a beneficiary of indigenization. So I think one can hold the stock, but volatility is there. But if he is going to stay for 2-3 years, I think there is no issue. He can hold the stock.
Got that view, Tapan. But the next question coming in now, it's from Ansh, who's writing to us from Australia. He's holding on to Vishal Megamart, bought 1,000 odd shares at 118 rupees per share, and he wants to hold on to this particular counter for the next 3 to 6 months. Somil, very good morning to you. On Vishal Megamart, would you recommend that Ansh should continue holding? What's your opinion?
Good morning to everyone. Happy birthday, Tapan. Friday birthday time, you should have taken a leave.
Well, you're going to close our shop one day, Somil, I feel, with this, but I'm glad that Tapan, you're sharing your birthday with us, and again, a very happy birthday from my side as well. But Somil, go ahead. What's your opinion?
See, Vishal Megamart, definitely hold on to it. I'm bullish on it in the very short term, in the near term. You can keep a strict stop loss around 110, 108 levels, but I'll be positive. It's a triangle pattern forming on the charts, on the daily charts, and I'll be expecting a target of around 130 to 135 in the next probably 1 or 2 quarters.
Got that view. The next one's on Acme Solar. Raja from Chennai has been holding these shares at 289 and holding 102 shares. Now, Tapan, it's been a very interesting story, right? Because largely a laggard, and then that QIP happened, and stocks just flown through that 280, 290 mark to the current levels. Do you feel it's a good time to hold? Because the 19,000 crore debt for the company, which is earning about 2,000 crore in revenue, is that a concern?
Yeah, it is a concern, and again the stock has gone up a lot. Of course, if you see the profitability and the quarter-to-quarter results are good, and the management is also very much bullish for the future. Guidance is also strong, but at this valuation, I feel no, one should not enter. Wait for the dip, because otherwise, I can tell you around 320 or 330, that will be a good entry level. I think the stock has gone up a lot, and in future, I feel there will be a margin pressure because the competition is too much, and the debt issue is also there. So yes, wait for the dip, then only buy.
All right. Okay. The next one that we have is coming in, and this is from Kiran Tejwani, who's writing us from Karnataka. She wants to invest around 2 lakh rupees from a short-term perspective of 3 to 6 months, and she's asking for what stock can she go ahead and buy right now. Somil, anything that you would suggest her? Maybe a stock, maybe 2 or 3 that you're looking at that she can divide her 2 lakhs into?
At this point of time, there are 3 sectors I'm looking at. One is pharma. Definitely pharma looks great to me. The second one is a little high beta, that is real estate. And you can look at defense as well. So these are the 3 sectors which I'm looking at. Pharma, Mankind Pharma, Zydus Life, Cipla, all of these stocks really look good to me. Try to focus more on large caps because a little uncertain at this point of time. Once we close about 24,600, I think then you can speed up your investments. But at this point of time, try to focus on large caps. On real estate, I like DLF, I like Oberoi, Phoenix, I like, but it has already run up a lot. On the defense side, I like BEL and HAL, but buy on declines on defense. So these are the three sectors I'll focus on.
Got it. Well, let's take another caller now, and dialing in from Ambala, Ajay has a stock query for us. Ajay, very good morning. Welcome to the show. What's your query?
Yeah, good morning, sir. Good morning, sir. Thank you, sir. मेरा क्वेश्चन लेने के लिए और सबको गुड मॉर्निंग सर. मेरा क्वेश्चन NSDL पे है. सर मेरे पास 200 शेयर्स हैं 897 पे. सर आज ये थोड़ा सा ऊपर आया है, क्या यहाँ पे 100 शेयर्स ले सकता हूँ? सर दूसरा ये है कि या तो CDSL इसका जो दूसरी कंपनी जो सेम बिजनेस में या इसमें एंटर कर सकते हैं. सर लेने का पीछे रीजन ये है कि सर वो CDSL सर वो 65 के आसपास CE पे और ये 44-45 पे है, गैप बहुत ज़्यादा है. तो क्या ये कभी गैप कम होगा कि इसको शिफ्ट कर दूँ CDSL में?
अजय जी, फर्स्टली आपके क्वेश्चन के लिए धन्यवाद. आपकी रिसर्च तो सही क्या इंडिकेशन दे रही है आपको. बट तपन, क्या आप सहमत है अजय से? उनको क्या अभी और NSDL के शेयर लेने चाहिए? लोअर PE पे है कंपेयर टू CDSL. क्या है आपकी राय?
तो दोनों में डिफ्रेंसिएशन ये है कि NSDL काफ़ी इंस्टीट्यूशन को कैटर करता है और CDSL रिटेल. अगर आप देखें तो डीमेट अकाउंट कंपेरेटिव CDSL के 3 गुना है. अगर मैं बाकी की ग्रोथ भी यहाँ से देखो, मुझे कहीं ना कहीं ऐसा लग रहा है कि CDSL का ग्रोथ अच्छा रहेगा. प्लस वो थोड़ा प्रीमियम में है लेकिन देट विल डू वेल. और यहाँ से कैपिटल मार्केट पेनिट्रेशन आगे बढ़ने वाले, तो दोनों कंपनी को फायदा होगा. हमें बस उनका मार्जिन और जो चार्जेस जो सेबी से भी लगते हैं वो सब देखते रहना पड़ेगा. EBITDA मार्जिन अगर NSDL का देखें 35% अबव है, CDSL का भी अच्छा है. लेकिन अगर मैं दोनों कंपेयर करूं तो मुझे कंपेरेटिवली अगर 2-3 साल के लेना है तो मैं CDSL की तरफ जाऊंगा कंपेयर टू NSDL.
Okay, all right. So that's the view coming in on both NSDL as well as CDSL. But it's time for a rapid fire round. Saumil and Tapan, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Paytm. Mohit from Ludhiana says he's got 50 shares at the levels of 1165. He has a 2-year time horizon. Tapan, what's your recommendation on Paytm?
Yeah, hold.
Next one's on Enviro Infra. I bought at 171. Our viewers holding the share for a while and he wants to accumulate more. Tapan, would you recommend for the next 18 months?
Yeah, you can, but buy around 215, 220. Let it come down a little bit.
Alright, okay. The next one is on KFin Tech. Ashok Pai from Bengaluru wants to know as to what should be the view on this one. Saumil, on the charts, what would you recommend him?
KFin Tech in the short term positive, but in the medium term still wait and watch. Breakout about 970.
The next one's coming on Paytm. Khurshid from Delhi is holding shares at 1167, asking Tapan if he should still continue to hold this counter.
Yeah, please hold.
Okay, the next one is on Mopen Labs. Pratap from Pune is holding around 2,000 odd shares at the levels of 62. A long-term perspective on this one, Tapan?
Yeah, hold.
Sanjay from Bengaluru is already holding on to HDFC and Canara Bank. Tapan, he's asking if he can add Bank of Maharashtra to the list.
No. If you want to add, you can add ICICI Bank more.
Okay, the next one is on Hindustan Zinc. Madanlal Shroff is holding 50 shares at the levels of 685. Hold, book losses. Saumil?
Hold.
Saumil on CAMS as well. Priyanka Ashar is holding 175 shares, bought at 727. So currently sitting on gains, asking if it's a good time to book profits or what's the target that you're watching out for?
If you are a short-term trader, book profits. But if you are a medium-term trader, hold on to it. Stop loss would be 744.
The next one that we have is on Ola Electric. Arijit is asking this question. He's got around 54,000 shares that he's bought at the levels of 41 rupees. From a 6 months perspective, Saumil, should he hold?
I would exit the stock because it has already rallied, so I'll exit.
The next one coming in is between Inox Green Energy, Idea Forge and DCX Systems. Tapan, a viewer wants to enter one of these counters. What do you like amongst these?
I think Inox Green will be better option, but on dips.
Okay, Scott's Kubota is the other one. 35 shares bought at the levels of 2872. Continue to hold, exit. Dilip from Kolkata is asking this. Somil?
Escort, hold.
The next one that's coming in now, and this one's on Marico. Our viewer Akash wants to enter for the next 2 years. Tapan, a good strong Q1 update. Should he continue to hold, and can he buy now?
Yeah, one of the best stock in FMCG. Yeah, hold.
Okay, the next one is on IRCTC. E. Venkatramanan is holding 100 shares at the levels of 723. A 1-year horizon. Continue to hold, Tapan?
Yeah, hold.
The next one's, on Keynes Technologies. Our viewer Saurabh has bought shares at 3172. Somil asking what's a medium-term target on this counter?
See, in the medium term, the targets would be around 3,500, 3,600 levels, but that's the only target I have, nothing above that.
Okay, the next one is on either Anantraj or Bellrise. Nikat from Bengaluru wants to know from a 2-year perspective which one is better to invest in 50,000 of amount. 2 years is his time horizon. Tapan, your view?
Looking at the valuation, I think Anantraj is better.
Now the next one is on Dixon. Vijay from Chennai wants to know a short-term view on the counter. Somil, of course, buzzing today on that Vivo JV approval, but what's your view?
The short term, I'm definitely positive, but no fresh buying. Keep a stop loss around 12,800.
Okay, Acme Solar, 102 shares bought at the levels of 289. Continue to hold. What should be the next target? Raja from Chennai wants to know. Somil?
400 is my target. Keep a strict stop loss around 355.
Alright, okay, that brings us to the end of this rapid fire round. I'm told, Somil, that you'll be leaving us now. So thank you so much for taking out the time and helping us answer all those stock related questions. But viewers, it's time to slip into a very, very short break. But we'll be right back answering more queries on the other side. So do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and it's been a good screen for the markets today. We're continuing to just be around that 24,200 mark for the Nifty 50, and that up move of 1% continuing to hold at this point of time, and we are still away from the 24,400 mark, which we lost out to on because of on the Wednesday move essentially. So there's still yet some headroom at this point of time. But when you also look at the Bank Nifty, as we highlighted at the start of the show, also important levels to watch out for is 57,800 and 200. With this up move of 1.2%, we're now closing in on that 58,000 mark. So 58,200, all those levels continue to be important, and also the advanced decline ratio, because that has been the other key factor. It's been a story of benchmarks actually over the last week or so. Today, the advances are now gaining in terms of 4:1 versus the declines, and that's visible in the BSE 500 as well, because you're seeing a lot of those individual movers that are buzzing in trade today. Of course, the broader benchmark move has been led by IT, but that's also visible in Zensar Tech, which is up 10% now. Shoppers Stop is also up 11.7%, and Kalyan Jewellers continues its dream run of almost 30% in this week. Also seen a lot of positive moves coming in across a bunch of Adani Group names also. So Adani total up 6%. Adani Green also doing well in trade right now. IFB, MRPL and Bandhan Bank are some of the other gainers on the BSE 500. But let's continue taking your stock related queries now. And we are now being also joined by, of course, Tapan Doshi on our fundamental side. Devin Mehta of IDBI is also now joining us. Devin, very good morning. Thanks so much for joining in. Let me start with the first quick question. This one's on Dr. Reddy's. Muralidharan from Chennai is holding on to these shares bought at 1270. Now, on the fundamental side of things, Devin, the stock has been caught on the semaglutide side, but Muralidharan wants to know if he should still continue to hold the stock for the short term. What's your view?
No, I think yesterday after news, I think the stock has corrected and has given a breakdown below the important support of 1260 levels. Today it's trying to bounce back, but I don't think it will reverse from the lower levels as it has given a breakdown. So for short to medium term, I think one should avoid buying. In fact, those who are holding should try to exit on bounce. There is a major resistance now in a range of 1260, 1270. So I think one should try to exit on bounce.
Okay, all right. So that's the view coming in on Dr. Reddy's. The next one that we have, I think Shri from Chennai is asking about Infosys. The buying price is 1081. The quantity is 50. Tapan, we've seen overall TCS earnings coming out. On the back of that, all of these IT names are buzzing in trade today. Any quick view on Infosys as well as a take on TCS?
See, TCS result was overall okay. We have to wait for the Infosys result, of course, no. But if you see, the main thing is now how will be the guidance 2027. Again, no, whether they are able to control the margin or not, because that is a bigger problem. Plus, how they are going to go in on AI side also. So, lot many questions are there. I think one should wait for the result. But at this level, I'll not recommend any buy. No, still this sector is quite weak. No, unnecessary buying is not been told here. But yes, one can wait for the result, then only take a position. But all, I think 3 months, 1 or 2 quarters, there will be a struggle.
Got that view, Tapan. But the next question coming in on Insolation Energy. Now it's been a stock that's been in a good move, since it got transferred to the main board side of things. Our viewer Rohan from Thane, from Mumbai, of course, is holding these shares at 116. Tapani wants to know a long-term view of the counter. What would you recommend? Because there's been a significant up move over the last 2 to 3 years. Is it still a good hold, or should he switch out to some of the larger players now in the renewable energy space?
If you see, the main thing is in the solar demand is accelerating, but whether they are able to control the margins or not, that is a thing. Their cell and module capacity is increasing, but the only thing is the raw material pricing volatility is there, and working capital will be an issue for this company. They are going to be beneficial of PLI and ALMM, but order book is visible, but I'll not enter at this level. I'll wait for some time and just see 1 or 2 quarter more, then only enter. Currently, no, at this level, don't enter.
View. Tapan, the next one coming in on SW Solar, and M. Ahmad from Delhi is holding on to 80 shares bought at 200 odd. Now, Deven, he wants to know about a 6 month to a 1 year view on this counter. Has been, in that range of 220 to 240. What's your view?
I think one should hold this counter. The way counter has given a breakout about 220, and again after making a high of around 260, the counter has retested its breakout levels. One should definitely hold with a stop loss of 222. If it breaches this particular level, this coincides with 200 exponential moving average. So I think if it breaches 222, one should try to exit. There should be a trailing stop loss as he has purchased at a good levels. 222 can be the trailing stop loss. One can hold, the counter can again bounce towards 250, 260 levels.
Got that view, but let's go across, take the next caller from Chennai now. And Abhirami is joining in for a stock query. I hope I'm pronouncing your name correctly. Good morning and welcome to the show. What's your query?
Good morning, sir. Sir, I buy Zenso Technologies for 25 shares. I buy my price 448 yesterday.
Okay.
Now I will get want 3 months will be. I want how get the target I want, sir.
Okay, you want a 3-month target. Got it. Deven, on Zensa Tech today, a very sharp up move, on the counter, and our viewer, of course, getting benefited from that. What's the 3-month view?
Definitely, the stock has moved 10% today itself, and the way it has recovered from lower levels with increasing volumes, I think one should hold. The risk reward ratio is very much favorable at current level. So 434 is the important level for this counter. If it breaches, then we can see some more correction in this counter. So 434 will be the trailing stop loss, and one should try to hold this counter. There is a small resistance around 520. If it surpasses and holds above that, we can see some further up move towards 590 levels as well. So one can book profits near 590. Overall structure, it is trying to reverse, but yes, definitely as the buying levels are favorable, one should hold with a stop loss of 434.
Nice. Okay, all right. So that's the view coming on Zensa Tech. I think we've got the next question from Suresh, who's writing us from Chikmagalur, and he wants to know a better pick between Syngene and Laurus Labs. Tapan, I'll come to you. Which one in the pharma space that you're liking? We've seen a significant run up in a lot of these counters already, but which one is your preferred bet from a long-term perspective?
See, if you see CDMO segment will do well from here also, but Laurus Lab valuation is quite high. Syngene is not so much, but Syngene been underperformed over a time, and last few quarters were not so great. So if you talk on the valuation perspective, Syngene will give you a better risk reward ratio. I think next few quarters will be better. I'm not saying Laurus Lab is not good, but I think from the valuation point of Syngene is much better place to enter currently.
Got that view, but the next question coming in now from Ishwar. He's actually asking an interesting question on Belrise Industries, because stock's trading at a 52-week high, and I'm still yet to see the valuation, but he's mentioning it at 41 times on price to earnings basis. But the company is also diversifying in defense and aerospace. So Tapan's question being, what's the view on the stock now for the next 3 to 5 years? Because very sharp up move from the 91 rupees that was at listing, but is it slightly more overvalued? Is there other place to look at?
See, Puneet, if you see, the growth is supporting the valuation. It's been good performance in last few quarters. And of course, the stock has gone up a lot, but I think OEM orders are going to come from in future. Aerospace exports is expanding. Again, manufacturing revenue is growing. And if you see the auto sector is, I think, doing well. So I'm positive on this stock. Of course, valuation is on a higher side, but still it is performing well. So my take is stay with this stock. I think management is quite positive, yes, at this level, and you can buy at dips also.
Okay, all right. The next one that we have, and this is coming in from Keshav, who's writing us from Chennai. He's asking about Mishra Dhatu, and he says that he's a long-term investor. He's bought this at the levels of 412, and he's looking at a time horizon of around 2 years. Tapan, I'll stick with you for this one as well. What is your recommendation on Mishra Dhatu?
See, Mishra Dhatu, if you see, no defense demand remains robust for this company. Aerospace order is also coming. The government order dependence is there. That is what we have to see, and plus working capital we have to see. And here also, no few customers are few only, so that is a problem. One of the problem. But if you see, the balance is debt free. So yes, one stay with this stock. I think this stock may do well in next 2-3 years as defense orders are coming good here.
Got that view, but let's go across and take our next caller from Vizag. Murthy has a stock query for us. Murthy, very good morning. Welcome to the show. What's your query?
Good morning, sir. First of all, happy birthday to Tapan sir. My question is to Tapan sir only. Which is the better investment for long term, 3 to 5 years, either JSW Energy or Tata Power?
Got your question, Murthy. Tapan, of course, you heard the wish as well as the question between JSW Energy and Tata Power, along with the other people who are messaging us about your birthday wish as well. What's your view?
Yeah, thanks everyone for the wishes. Well, I'll go with JSW Energy, because if you see Tata Power is much more diversified, but I think JSW Energy, much more capacity is coming. Even the execution is much better. Even if I see the quarterly result, JSW Energies are better, and their management also, the guidance what they are given, is very much supportive to the valuation also. So yes, I'll go with JSW Energy at this level, even buy on dips category.
Okay, all right. The next one that we have is coming in, and this is on Swiggy. Narayana from Andhra Pradesh is saying that he's got around 700 odd shares of Swiggy at the levels of 266, and he wants to know whether to continue to hold this, and his time horizon is just 6 odd months. So Devin, I'll come to you on this one. What are the charts indicating for Swiggy?
I think the overall structure is weak, but yesterday it has crossed a major resistance of 270, and it is currently holding this particular level. So I think one should hold this counter. One should keep a stop loss of 260 on closing basis. If it closes below 260, one should try to exit, because yesterday we have seen a good volumes in this particular counter, and today we have seen that there is slight profit booking, but again stock is trying to hold above the major breakout level. So one can hold this counter with a stop loss of 260. The stock can further move towards 315 levels. One should try to exit near 315 levels.
Okay, all right. So that's the view coming on Swiggy. We've got, I think, Shankar calling us from Chennai. Shankar, a very good morning to you. Go ahead, ask your question.
Very good morning. I want to buy 1,000 shares of Kalyan Jewellers current levels for off portion for 3 months and 500 shares for long term. I want to know technical outlook for 3 months and here time frame.
Okay, got your question. I'll take the technical one first. Devin, we've seen a significant run up from the low points. It's run up over that 35 odd percent, and in just 3 odd days, it's seen significant amount of gains. We just did a deep dive also today. But overall, I think from a technical standpoint, what would you recommend, Shankar? Then I'll also take a fundamental view from Tapan.
So as far as Kalyan Jewellers is concerned, I think the stock has already moved from last 3 days. But again, we have seen a breakout in this particular counter above 454 levels. So those who are holding, one should try to hold this counter. A trailing stop loss will be around 430, and if it comes down towards 455 levels, then that can be a good buy for this particular counter. The way it has moved and the volumes have increased, I think this particular counter should go sideways for a few days and can again start its up move towards 520. So 520 is the target. One should try to accumulate on dips, and the stop loss will be 430 on closing basis.
Okay, and Tapan, what is your view? Because the street was disappointed with the business update coming in for Q1. The expectation was of a 50% growth, but it did a 38% growth. Plus, the Middle East conflict is still an overhang, right? It could impact the international earnings. Overall, from a long-term perspective, because he's also putting around buying around 500 shares from a long-term perspective, what is your recommendation? Of course, it's buzzing on the back of what Somit said yesterday with big money coming in. But from a long-term perspective, how do you see Kalyan?
Yeah, but 38% is also good growth. The problem is now we were expecting too much. So yeah, I am quite positive on this stock. Now, if you see the same growth is also LFL growth is almost 28%. If you see international division is around 35%. That is what the update was. So overall things are moving good for Kalyan. And I think the festival season is coming next 6 months. And gold prices as it has gone down, jewelry demand will go up. So I'm quite positive on the stock because all these valuation, or most of the jewelry stock has beaten a lot of the Modi ji, requested about don't buy gold. But at this level, I'm quite positive. But yes, as the stock has run up a lot, wait for dip. But yes, for long term, you can go for Kalyan.
Got that view, but let's go across and take another question now from Bengaluru. And Subramaniam is joining in for a stock query. Subramaniam, very good morning. Welcome to the show. What's your query?
Very good morning to you all. I hold 20 shares of SBI cards from IPO allotment at 755. Given the current scenario where it is, what do you advise for a long term? Hold, switch, average?
Got your view, Subramaniam, and most certainly you've been holding on for the last 5 years almost. But Tapan, we actually, the easier answer is to get out of the stock, right? But just in terms of the May data for the credit cards was actually very surprisingly positive, and I think SBI cards also expected to perform well in that. How are you seeing SBI cards? Would you still recommend Subramaniam to get out of this counter or hold on for the near-term results?
No, I'll tell him to get out from the counter only because it's been underperformed. And again, credit cost pressure is there. And again, credit card business is competition is too much, and you have to come up with lot many discounts and all that. If you see the funding cost sensitivity is there for this company. Of course, premium card portfolio is doing well, but I feel this company is not doing so great. And no, there are many other sector which are doing good. So better to move out. If he wants to wait for the result, you can wait. But overall, long term, I am not so much bullish on SBI card.
Okay, all right. The next query that we have is from Aarti, who's writing us from Bengaluru. She wants a 3 to 6 months outlook on Affle, and she wants to know whether this is the right entry point. Devin, this is one of those counters with a highest return potential, top 5, among the top 5 with the highest return potential as per Bloomberg consensus, because a lot of brokerages had a buy call on this one at the start of the year, right? But it's not, kind of tried to reach to those levels. So what would you recommend from a 3 to 6 months perspective on the chart?
No, I think overall the counter is trading sideways from last many weeks. I've been checking weekly chart, but it is unable to cross 1550 levels on the higher side. On the lower side, it has a support around 1390 odd levels. So I think it is trading in a range for many weeks. So one should accumulate this particular counter only if it breakouts above 1540 odd levels. So 1540 is a major resistance. If it breaches that, then we can see some good breakout in this particular counter. So that can be a good buying opportunity at that level. But currently, no, one should avoid this particular counter as it has been sideways and consolidating since a long time.
Next one, an interesting question coming in from Murli, who's from Hyderabad and a regular viewer of the show. He's bought into Aadhar Housing at 490 odd rupees, holding on to 40 shares. Now, Tapani wants to hold this for the next few years. I think the financial performance since listing has been quite decent. Should he continue to do so, and would you actually advise him to add more at this price as well?
Yeah, this stock is good. Even I am positive. If you see the AUM growth guided from here is 20+%. Affordable housing demand will be strong in future, and the branch expansion is continuing. The only thing is competition from the banks will be there, and rural credit will be a risk. So we have to see that NPA, how they are able to do it, not able to control it. Otherwise, asset quality profile is good comparatively, and ROE is above 4%, which is also good. So I am positive. So yes, you can hold this stock, and maybe on dips you can buy also. For long term, I'm okay with this.
Okay, the next one that we have is on Apar Industries. This is a query from Vikas, who's writing us from Pune. He says that is this the best buy right now? By the way, he's holding at the levels of 14,070, just near the current market price, and he wants to know as to what should be the next course of action for him. He's not mentioned the time frame, but Devin, any view on the charts for this one?
Yeah, I think overall we have seen some kind of a profit booking in this counter, but yesterday it has formed an inside bar and again trying to move higher. So I think as it has bought current near current levels only, one should hold this counter with a trailing stop loss of 13,450 levels. 13,450 will be the stop loss for this counter. It can again move towards 14,800 and then 15,200 if it sustains above that, then definitely stock can again move towards 16,500 odd levels. So I think one should hold with a trailing stop loss, and again once it crosses major resistance of 14,800 and 15,200, one should try to book partial profits and can trail stop loss for the rest of the quantity.
What a stupendous move though on this particular counter, up almost 70% just in this year itself. And had been consolidating at that 8,000, 9,000 mark, and then once that got broken through, even in the last year itself has been very, very strong in terms of up move, of course. But the next question, and actually it's an interesting one, because Ishwar's query on Bellrise Industries, Tapan, you already answered, but he's saying that since it's your birthday today, he wants one special stock from you to invest in till your next birthday. So it's essentially your birthday, but he's asking for a gift. What would that one special stock be?
I think one special stock, well, I have to think about it because you're asking only one. Yeah, but I can tell about the sector. I think EMS sector now it's coming up. Lot of now you can say the government initiatives plus updates are coming good. So you can think about Dixon. I think this level is good. Even Sirma or Keynes also. I think that will bounce back. No, their semiconductor unit is starting. Maybe one or two things will be better. These are the three. I think for long term you can go. EMS sector will do well for next 3-4 years.
Okay, all right. So EMS is the space that Tapan is finding attractive. The next one that we have is from Soma Shekhar, who's writing us from Bengaluru, asking about GMR Airports. He wants to know, by the way, he's bought it at the levels of 99 rupees and he's got around 500 shares. And he wants to know from a long-term perspective, this is a good hold or not. Tapan, what would you recommend him?
Yeah, you can hold the stock. If you see their business operations are doing good, even the passenger traffic growth is expected, maybe in double digit. Delhi, Hyderabad expansion is going on, and international traffic will also, so hopefully, once this geopolitical issue is over, I think that will come back. So yes, hold this stock, and deleveraging story is already there. So at this level, one can hold, and if it is coming at around 100, you can buy more also.
Got that view, Tapan. But Tapan, viewers as well as Deven, it's now time for the rapid fire round in this edition of show. Keep your answers as short as possible so that we can take as many queries now. The first one coming on, if it's a good time to buy between Coforge as well as Persistent at the present rates. Deven, of course, today's move led by TCS, but what's your view?
I think Coforge is good comparatively, so one should buy Coforge. It is very close to the breakout levels. One should buy Coforge with a stop loss of 14.14.
Okay, the next one is on ICICI Prudential Life. Gayatri from Bengaluru has got around 20 shares that she wants to continue to hold for the next 6 months. She's not mentioned the buying price, but Devin, what are the charts indicating?
I think we have seen a bounce back in this particular counter. We can hold with a stop loss of 480. This can move towards 520 odd levels.
The next one, and this is from Surya from Hyderabad. He's holding on to Vishnu Prakash Pugalia. He bought it at 195. Stock's trading at 25 though. So Tapan, would you just recommend him to exit this counter at this point of time?
Yeah.
Okay, yes. The next one. All right. Okay, the next one that we have is on HAL. This is from Noreen, who's writing us from Dubai, asking about HAL as to whether this is a good time to enter into this one or not. Devin, are the levels attractive enough?
Yeah, I think one can buy this particular counter at this level with a stop loss of 4,350. This can move higher. So 4,350 will be the stop loss.
Also, Devin, Sunny, who's from Karnataka, is asking about Borosil Renewables. He's bought these shares at 632, holding since last November, and asking if what is a target on this counter.
I think one can try to book at least partial profits. The stock has recently moved, but I think on daily chart it is overbought. Book partial profits and can hold for 692 level.
Okay, the next one is on BEL. Girish from Bengaluru has bought around 1400 shares. He wants to know if from a couple of months perspective, can he continue to hold? Devin, on the charts?
Yeah, I think one should hold with a trailing stop loss of 403. If it closes below that, one should try to exit.
Aniket Desai from Pune wants to enter into UTI AMC. Of course, one of the cheaper stocks in the space, Tapan. But would you recommend that or any other in that space? You also have, of course, the big IPO of SBI coming across. What's your view?
Yeah, other stocks are quite expensive. This is the cheapest, so he can enter just but track the quarterly result. If it is not coming, then exit.
Okay, the next one is on RBL Bank. Tapan, our viewers bought it at the levels of 339 and 861 shares is what Vivek from Delhi has been holding. From a long-term perspective, continue to hold?
Yeah, hold.
The next one is, on IRFC, our viewer has bought, Vijay Kirti has bought at 72. They've been asking if he should still continue to hold. What's your view?
No, I think the exit on bounce. The chart is weak.
The next one is on RVNL, 150 shares, bought at the levels of 250. Long-term perspective, Suman from Kolkata wants to know. Tapan?
Currently hold.
Devin, between Kims and RateGain, both those counters is something that Siddharth from Noida is interested in. Anything that you like?
I think Kims is betterly placed, so one can try to accumulate Kims near this level with a stop loss of 790.
Okay, the next one is on HPL Engineering. This is specifically for you, Devin. Prashant wants to know the target for the next 2 months on this one.
I think one can hold. Yeah, HBL Engineering, I think one can hold this particular counter, but a strict stop loss should be placed around 740 levels. If it breaches and closes below that, one should try to exit. The overall structure is weak.
And the last query for today, Tapan, coming your way on PI Industries. Kiran from Hyderabad asking if it's a good time to enter. It has been underperforming as well. What would you recommend?
No, not now.
Got it. Well, that was the last question for today. As mentioned, we saw 56 queries. So Tapan as well as Devin, thanks so much for joining in. And Tapan, hopefully, happy birthday once again, and hope you have a good day. Thank you for sharing it with us. But viewers, out of time on this edition of the show. Thanks so much for joining in. Stay tuned, and a lot more stock-related queries at 2 p.m. So we'll see you there.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we build a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Attenborough, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, you're engineering.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, finding you the best stories, and also, is there any alpha to be made from here onwards or not? Today is a very interesting company I have got. I'm going to explain you. But before that, try to guess it. It's an Ahmedabad-based pharma company. Very interesting name. Of course, it was recently listed, so I'm sure you'll try to guess it. A very interesting name also they have. This is one of the fastest growing companies amongst the top 30 Indian pharma peers as per the data. And Street is quite bullish on it. Recently, it was listed in the month of December 2025, 15th to be precise, but from then onwards the IPO has been strong, the listing was strong, the stock is up almost 90% from the IPO price. IPO के भाव से लगभग 2 गुना बढ़ चुका है ये स्टॉक. लेकिन ये स्टॉक का नाम क्या है? What is this pharma company? Ahmedabad based? Interesting. No, it's not Torrent Pharma. The company's name is Corona Remedies. This is what we are talking about. But why are we calling this company? What is it that they are doing different than the markets? Why are they doing better than the industry? A lot of questions. I'll try to find you all of these answers. The commercial production of women's hormone facility. ये धंधा कैसा है? इसमें margin क्या ज़्यादा है? We'll try to understand that, and also the capacity utilization and expansion. एक हिमाचल प्रदेश and of course the second one is in Gujarat. Another important question to be asked for the company is on the portfolio mix, chronic versus acute. Where is the company's focus actually going ahead? Another question, the fourth one, which we'll try to understand, is the inorganic growth. There is Bayer Zydus relaunch portfolio also which is coming in. How does that strategy work out for this business? And this timelines for this Vocadine acquisition. That's what the street has been looking forward to for this acquisition. It's a very interesting story though. And the biosimilar biologics, what's the entry looking like, product launch. So they are going all out as a pharma company, and the growth in the international business. It's very small right now. It's domestic focused. देखा जाए तो Mankind Pharma जैसा जो है इनका एक्सपोजर है. टू पुट दैट इन पर्सपेक्टिव, वील हैव भविन भगत, द CFO of Corona Remedies, trying to explain us what's the real story behind it. And yes, the company is coming first time in KYC. तो कंपनी के बारे में आप समझते हैं. About the company, what is it all about? It's a pharma company. It was established in the year 2004, Ahmedabad based. Interesting origins. Let's talk about the other key reasons why we are interested in this counter. They develop and market therapies in women's health, कार्डियो डायबिटीज़, पेन एंड यूरोलॉजीज. लाइफस्टाइल के जो आप कह सकते हैं बुरी आदत का जो इम्पैक्ट आता है, that is what they are catering to. So this is a very interesting theme, to be honest. They operate of course on the certified manufacturing facilities, and Invesco has bet in this stock. 4.4% stake they are holding. So this is an interesting story. Formulations, roughly 1.65 billion units. That is the capacity which I'm talking about. Sachets comes around 20 billion, and bottles comes at around 10 million units. This is what they can keep manufacturing. It's the fastest growth amongst the top 30 Indian pharma companies. This is the MAT industry data which we have taken and analyzed the key details about the company. Also 76 brands are there. They're having 32 engines brand as well. So the way they have this brand acquisition at play and the way they commercialize it, that seems to be quite important in this re-rating. Now they are commercialized recently this approval of women's hormone manufacturing facility, और इस पे जो है हमारी सबसे पहली सवाल रहने वाली है मैनेजमेंट के साथ. Everybody is talking about it. This is a very important trend and a high margin business. Also, let's look at the other key announcement. Of course, for hormone and oral solid dosage facility approvals have also started coming in. याद रखिए इनका जो हिस्ट्री है सिर्फ 6 से 7 में नहीं पुराना है. सो दैट इज हाउ वी हैव पुट आवर एनालिसिस एज वेल. बट लेट्स मूव ऑन फ्रॉम द रीसेंट अनाउंसमेंट्स. व्हाट यू शुड नो बिफोर यू स्टार्ट दिस. रिमेंबर द एक्यूट का जो बिजनेस है, दिस इज फॉर सडन सिवियर एंड शॉर्ट टर्म कंडीशन सिम्टम व्हेनेवर वी टॉक अबाउट एक्यूट. नंबर 2, chronic. This refers to a long developing persistence long lasting condition. ये 3 महीना या लाइफ टाइम हो सकता है. यानी कि क्रॉनिक के धंधे में ज़्यादा कस्टमर स्टिकीनेस है. That is the reason why everybody is moving towards chronic. This progress happens over a lifetime. Why this is that? Because there is a higher customer stickiness and chances of margin expansion. अगर आपको lifetime के लिए कुछ फीवर या आपको कुछ टाइप से कह सकते हेल्थ इशू है, then you'll keep buying these products. Portfolio breakup, that is how things have changed. Look at that, the story moves on to the chronic segment. 72% of that comes from just this. The acute has come down. So this is the trend which we are looking at, and this is how things have changed for the company over the last 10 years. And remember, 96% of the revenue comes in from the domestic space and 45% comes from the western region in India. So definitely there is a skew coming in towards this, but company is expanding in the other sectors as well. This is how the domestic business looks. But इस कंपनी के पॉजिटिव ट्रिगर्स क्या हैं? तो मैंने 5 ट्रिगर निकाले हैं. The growth for the chronic segment, that is at 19%. Compare that with the industry growth, it comes in at 10%. That is a very important point to track. Also, the geographical expansion is still at play. And India is such a huge country for pharma that पहले domestic business पे focus कर लिया जाए, and that is why a lot of players are focusing on it. There's more DI and FI participation likely. इसका lock-in का जो overhang है stock का IPO का, that is also almost over, but still a good absorption is coming. That's a really good sign. The expertise in the strategic collaborations and product scaling, बड़े brands के साथ the way they scale up and make their products, that is one of the moats which I have discovered in the history while I was studying this company. And also important approvals are being announced, and that is why the market is rewarding, at least in terms of premium valuations. But what may not work, not everything is right. At KYC we make sure that we give you both the sides of the story. The valuations have become expensive if you are looking for fresh positions. Regulatory risks, आपको US FDA या आपके कह सकते हैं कि बाहर वाले जो रेगुलेटरी अथॉरिटीज़ होते हैं उसका इस धंधे में हमेशा रहता है. And they do a lot of integrations and acquisitions, so if there is any delay it might be impacted in the numbers, and that is what the story is all about. But the KYC story, that's also very much important, and that's what I write. 8 rating parameters I get for you. This of course includes the income statement, balance sheet, cash flow, and the usual return ratios, especially the ROC numbers. It's very important to track as an investor, especially if you are from the long-term thought process. Street cred and shareholding, take it with a pinch of salt. सिर्फ 6 महीना का ही डेटा है, उतना ज़्यादा है नहीं. Valuations, I'll give you an interesting peer list, and more than 3 of them are there. It'll be very interesting to analyze. Is there any fair valuation left, or the stock has run up already from the IPO? And the outlook, where is the overall guidance looking like? And companies coming for the first time in KYC, so this is something which everybody will be excited about. But let's talk about income statement and see what's happening here. This is the first one to talk about. Largely the 3-year CAGR numbers look pretty decent. That's around 17 odd %. 32 to 33% growth coming in the EBITDA as well. That is where we see a good momentum coming in. So it's kind of ticking all the right boxes, and this is where the business model थोड़ा change हो रहा है, और अब 20-21% पे जो है margins आ चुके हैं, and it's a significant jump, and they're sustaining it. This is what I like about companies, the way they change and the change is the biggest constant in life, as everybody talks about. So let's talk about balance sheet, what's happening here. In balance sheet, I feel a little bit of debt levels are on the higher side, and the way the expansions happen or integrations happen, then of course stress comes in financials, especially in balance sheet, and that's what is looking like. But nevertheless, it's decently managed as of now. हाल ही में IPO भी हुआ था, तो capitalization was decent, so it's a neutral rating right now for my analysis. But apart from this balance sheet, let's talk about the cash flow segment, what's happening here. In cash flow, we see a good amount of movement has happened. It's at 229 crore rupees. Compare that, it's around 157 crore rupees. So you see a good momentum is coming in. Let's talk about the overall absorptions, the way things are panning out, and this is around 115%. it's pretty decent. ज़्यादा net cash flows अभी check ना करें, company is in its growth phase right now, ये ज़्यादा important होता है, इस पे आप ध्यान दें. So right now it's a strong positive sign in the operating cash flow segment. But let's talk about return ratio. What's the story looking like? And wow, the ROC numbers, something was there in FY23, FY24, especially for margins and the return ratios, and there seems to be a change happening in both these years, and it is sustaining. So now it's a high ROC business as well, and I had mentioned they are looking after a lot of these important, you could say the chronic segment. That's where the focus is, and we can see that in the numbers. So it's a strong thumbs up when it comes to the ROC numbers. Let's talk about shareholding and just take it with a pinch of salt. सिर्फ 2 क्वार्टर का ही डेटा है, उतना ज़्यादा नहीं है. So largely things are not moving so much, but yes, minor increases happening from the DIs and the FIs. If you could just show us the shareholding, how things are moving, and largely let's pull out the shareholding numbers to give you that entire picture of what's happening here. And yes, this is over here, and just wanted to get that thing on the screen as well. Just once, छोटा error बीच में हो जाता है, but the error in analysis is not there. Public, that's where around 22% is there, and FIs and DIs we see that's also holding up. That's around 2 to 7%. So that is what we'll be watching out for. Let's talk about street cred now and see what's happening here. And yes, this time it's right. Street cred, let's see from the IPO price, listing price, stock has done really well. It has almost doubled up, and the listing price also, stock is up 38%. And if you look at 2026, stock is up 46%. पिछले एक महीने में भी stock में तेजी आई है. That's up 14% as well. So net a good momentum coming in. So I'm going to give this a thumbs up as well. Let's talk about valuations to see so much run up has happened. Are the valuations comfortable or not? And no, it is not comfortable. Corona Remedies, it's at a trailing 12-month PE of 62 times. Compare that with the other players. Of course, this is on the higher side for Torrent Pharma, 76 times of valuations coming in. Other players are still cheaper. Alchem Labs सिर्फ 32 गुना trailing PE पे चल रहा है. Let's get in the other two companies also, where we'll show you. Abbott and Mankind Pharma, they are still on the cheaper side. Of course, Mankind Pharma is a very close competitor, but nevertheless their expensive valuations are there, but not as so much as Corona Remedies. And right now it's not a good time to enter because the valuations are not that attractive for an investor. So I'm going to give this a thumbs down. Let's talk about outlook to show you how the picture is looking like. There are 5 pillars of growth which the company is focusing on. They want to increase their market share in the domestic space. Of course, largely in the Western India, they have a better concentration. They have expanded into other 2 therapeutic areas as well. I will try to understand from the management which are these areas. Are they very high growth, high margin? The strategic acquisitions and in-license agreements, this is there in their business model itself. It was there before the IPO also, and now they are sticking to their culture, expanding the sales in select 5 overseas markets. Right now only 4 or 5% of revenue is coming in, so I would say that the outlook is pretty strong. So I've given this a thumbs up as well. Let's also talk about the overall ratings, how things are looking like, and let's just get in the numbers. Largely the numbers, income statement, balance sheet has been pretty strong. Cash flow also looks decent. Return ratios, it has changed. The model of the business has changed, and that's what we are seeing in the numbers. take things with a pinch of salt. Just 6 months of data, street cred and shareholding for you. Street cred, it has been really wonderful, 90% gains coming from the IPO price, but the run-up has made sure that the valuations are not attractive in this stock, but the outlook is pretty strong and the street is quite bullish. So the total rating in the KYC segment for Corona Remedies comes around 6 out of 8. It's largely positive on the normal averages which we give here. Let's talk about the management. After this, how things are going to be coming up. We'll have Bhavin Bhagat, the CFO at Corona Remedies, talking about the company's growth plans. But stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years.
Welcome to Know Your Company, and now we are joined in by Bhavin Bhagat. He is the CFO at Corona Remedies. Good afternoon, Bhavinji. It's always a pleasure to have you with us at NDTV Profit, and a lot of announcements are coming in, and of course your company makes a debut at KYC as well. The commercial production of women's hormone facility, that's what the street is talking about. Just wanted to understand, what is this facility and why are you focusing in this segment?
First of all, thank you so much, Shagatji, and thank you so much for inviting me in the KYC. So it is delighted to share you about our company first. And as you asked about the hormone facility, women's healthcare is a need of an hour in these days, and it is an evolving era in the modern medicine. Henceforth, we have started our EU GMP approved women's hormone manufacturing facility on 30th June 2026. As far as the women's healthcare is concerned, we are into top 5 in India as far as the covered market is concerned. And out of our several brands, 7 brands are into top 3 category in terms of rankings are concerned. So we are niche in gynecology and women's healthcare. We are present from menarche to menopause into it. So from 14 years young girl to 75 years old lady, we are catering the entire basket as far as the women's healthcare is concerned. Out of 30,000 gynecologists and IVF specialists in India, we are present in 85% of the market. And out of the total revenue, 31% revenue comes from the women's healthcare and gynecology segment in us. So that is the reason it was a need of an hour for the company as well to go for a dedicated hormone facility. and we have secured our supplies not only from the manufacturing side, from the API as well, as we have invested 31% equity stake in an US FDA and EU GMP approved La Chandra facility. It is just outside, it's in Gujarat, and we have invested 31% equity to secure our supplies. So we are going all out as far as the hormones and the women's healthcare is concerned.
Right, hormones in women, that's a very interesting take which you have given and also given us an industry perspective. But Bhavin ji, अगर बताया जाए तो आपकी कंपनी की मोट क्या है? What's your moat? It's been 6 months, the markets have rewarded you, the shareholders have been rewarded, but we want to understand and maybe do a revision. आपका मोट क्या है आपके धंधे में?
So first of all, we see our business is very simple. To be very honest, you are into such business where you deal different types of people and businesses. But as far as pharma is concerned, we are into simplest form of business where every day a new company is entering into this competition. So out of 1,200, 1,300 odd pharma companies, every day a new company is entering into the business. And as you asked the question, that was what is our moat? We are very simple company. We are very focused company. Our moat is very clear, is a razor sharp focus and ruthless execution in whatever we do.
Wow, that's interesting. Bhavin bhai, let's try to understand chronic and acute, the way your business has changed. Chronic is getting more, preference going ahead, and we all know why. But just wanted to understand what's the growth outlook for acute as well as chronic now going ahead for the next 2 to 3 years.
So I'll tell you the last 3 years scenario at Corona is concerned. If the chronic is growing by 10%, which is 25% faster than the overall IPM, we are growing by 19% in chronic since last 3 years. And as far as the acute is concerned, acute is growing by 6 odd percent, whereas we are growing double than the IPM, that is 12.5%. So acute and chronic mix, and out of which 72% is chronic in nature, chronic and subchronic, which contributes 76% of the total revenue out of it, and which is growing by 19% since last 3 years.
But the inorganic growth strategy is also something which, I've just noticed, the history also, the way you do your strategies for the portfolio launching, talking with the bigger guys, it's a very good setup which you have. But what's your inorganic growth strategy right now?
So, as far as the last 3 years growth of Corona is concerned, out of the 100 rupees growth, 85% rupees growth have come from the organic side. Only 15% came from the inorganic. That means we are not highly focused on the inorganic side. We are focused purely, majorly on the organic activities. Yes, having said that, if anything adds into the kitty, we'll definitely go for it. So our strategy as far as the inorganic acquisition is concerned is very clear and simple. We have 3 philosophies whenever we acquire any brand. First, that brand should have a strong brand recall. Means the doctor should be on the pen and mind of the brand should be on the pen and mind of the doctor, which is the first and foremost. The second philosophy of R is there should be an underlying science with that brand. And the third and most important is that perfect fitment in our basket. If all these 3 philosophies are done, we go all out for that brands. Hence, we never say that whatever brands are available on the street, we go for that. But if these 3 philosophies are tick in the box in the right manner, then we go all out.
Right, you do go all out. But Bhavin bhai, the Vocadin acquisition, that was a very important, step for your company. Any kind of timelines, how things are looking like, when the integration will start coming in?
Yes. So as far as the last 2 acquisitions, what we did, that is from Bayer Pharma and in the form of a Dr. Reddy's, that is Vocadin. So just to tell you that by the end of FY26, means on the last quarter, we started the integration, and the integrations is coming into picture, and the play is going on in this financial year. So this financial year is based on the execution of what acquisitions we did in last year, and it is very important for us to grow. And just to tell you, Bayer acquisition was a missing link in our entire women's healthcare portfolio. We acquired that link from Bayer Pharma, and now we are going all out and meeting the direct competition with the people who are having this infertility portfolio, which we acquired from Bayer. This is our integration. We have deployed a dedicated task force of 46 people and design a particular division to hit the IVF specialist in India. So that is our strategy as far as the inorganic from the Bayer side, and as far as the Vocardin side, we have launched into the multi-specialty portfolio, which caters the 40 to 45% revenue of the organization.
Fair enough. And the products which you are there is a good pricing power also which you have. I was just studying that as a student. But biosimilar and biologics, that's also a lot of noises coming in. We already know big players are talking very bullish sentiment about it. But your case, entry time, products launch, how are things looking like?
So as a philosophy, we introduce 6 to 8 new products on a yearly basis or an SKUs. So this is our philosophy as far as new product introduction is concerned. As far as the launch and execution is concerned, we always see that talking to the biologics and the biosimilars first, we have entered into footprints of the biosimilars by launching 3 products. That is Fostin R, which is into again a gynecology and women's healthcare segment. Second is a Tritium D mab, which is a denosumab, which is again a biosimilar, and the third is a GLP-1. So all the 3 products we have entered the biosimilar market.
Right. It's a full revision of the pharma sector, which we did in just 30 seconds. Very nicely done. Bhavin bhai, the capacity utilization and expansion, these are basic numbers, but the street wants to know what's the current capacity. This blended diyega consolidated karke, and the expansion strategy or any capex plans agle 1-2 saal mein.
I'll take you from the date of listing. So it is just 6 months ago. So it is very easy to tell me from that side, and a brief revision for me as well. So when we got listed, both the facilities were having 95% capacities. So in January 2026, we unlocked 40% manufacturing capacity in an EU GMP approved facility based out of Ahmedabad, which increased our further levers of growth, as we already commented in the past. Several earnings call that will be growing our revenue by 15%. So this 40% enhancement in my capacity will help me to grow for further 2 to 3 years with our own in-house manufacturing facilities. And as far as the coming years down the line, for coming 2-3 years, we need a 4th manufacturing facility by the start of FY29, for which we are seeing and seeking the land and the other machineries involved by the end of this year. So we need 2 to 3 years time, for which we need a capex of almost 175 to 200 crores, which we will be managing from our own internal accruals. And after the total mix is concerned, 65% is owned and 35% is being outsourced.
Fair enough. A very interesting take, and maybe who knows, you can have a new plant in Madhya Pradesh or South or even Bengal now. Of course, geographical diversification is something which we all want. It's always a pleasure to have you with us, and best of luck for the future going ahead. It's always a pleasure to have you at NDTV Profit.
Thank you so much. Thank you so much, Sharatji. Thank you so much for inviting.
Thank you. So that's the management of Corona Remedies, recently listed, but the street has given a green signal. Stock has almost doubled from its IPO price, and the management are sticking to their core philosophy, and the bullishness is coming on the women hormone space as well. So for interesting companies like this, keep watching KYC and stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start.
Benchmarks sustained recovery after a sharp sell-off earlier this week. Broader markets outperform benchmarks. Defense, metals and IT lead gains. FMCG bucks the trend. Kalyan Jewellers extended its winning streak for a third straight session as a bullish brokerage view and growing confidence in its long-term growth story kept investor sentiment strong. TCS in focus after an in-line set of Q1 numbers. Margins were impacted by wage hike issue. Profit declined QoQ, but attrition came in slightly above anticipated numbers and dividend was below estimates, but deal wins too were lower than earlier quarter. Dixon Technology receives government approval for its Vivo joint venture. Finally, we've been talking about this, clearing a key hurdle. The nod is expected to boost smartphone volumes, strengthen growth prospects, and has prompted brokerages to upgrade their earning estimates as well as target prices. Apollo Microsystems is buzzing in trade today as it's set to acquire a 41.3% stake in Premier Explosives in a 1,550 crore deal. Speaking to NDTV Profit, Premier said that the management will remain unchanged. FY28 will mark the partnership's rollout. Capacity expansion is on track and a stronger domestic growth is expected. Good afternoon. You're watching Markets at 12 with me, Mahima Vachharjani, and this is a show where we get you updates on the top buzzing stocks and news updates at the noon. But first, let's take a quick look as to how the markets are doing. Let's pull up the Nifty 50 and see as to where it's trading at right now. We've seen good gains coming in, slightly off from the day's high point for the Nifty 50, but still trading almost 1% higher. Let's also try to pull up the heat map because a lot of IT names in focus. A good commentary coming in from TCS is what is leading to a lot of growth in names like Infosys, plus Infosys, Tech Mahindra, etc. Of course, you have Jio Finance now topping that chart, followed by HDFC Life. You have both Adani twins doing very well in trade today, Adani Enterprises as well as Adani Ports, Indigo, JSW Steel, BEL, Infosys, RIL. So heavyweights are buzzing in trade, and that's the reason as to why we're seeing gains on the Nifty 50. But DRL for second straight day is down by about 1.8%. Eternal today finally seeing some profit booking. Nestle also continues to be under pressure, down by about 0.7%, and you have Bharti Airtel, which is down by about 0.8%. Let's also quickly pull up the mid cap 150 and the small cap 250 and see as to where the broader end of spectrum is trading at second straight days what we are seeing for broader markets to be performing good as compared to the benchmarks. Both the mid cap 150 and the small cap 250 are gaining in that range of 1% each. Let's also quickly pull up the advanced decline ratio because that will give you a perspective of how things are panning out. There you go, there's 2000 odd advances versus that of around 600 odd declines, so much in the favor of the bull, and the gap between the both of them has remained intact throughout the day, at least till 12 o'clock as we see. Let's also quickly pull up the BSE 500 to see as to what are the stocks that are buzzing in trade today in the broader end of spectrum. You have Zensar Tech topping that chart up 13 odd %. Shoppers Stop, another small cap name which is doing fairly well. Kalyan Jewellers for third day straight, gaining in that range of 6 to 7 odd %. HEG, MRPL are some of the other names that are doing fairly well. But on the flip side, your VST Industries, which is under pressure, down by about 5 odd %. Sun Pharma Advanced Research is also down by about 5 odd %. Lodha Restaurant Brands, Gujarat Ambuja Exports and Page Industries are some of the other names that continue to be under pressure. So that's with regards to where the markets go. Let's also take a quick look as to what the crude is doing right now. It is under pressure. The Brent is down by about 0.4. So it's not under pressure per se. It's down by about 0.4 odd % around that $76 per barrel, and WTI is down by about 0.3 odd %. So slight downtick is what we're seeing in terms of crude. So that's with regards to where the crude goes. But let's also get in Harshal Dasani, who's the business head at Invest PMS, joining us now. Harshal, a very good afternoon to you, and thank you so much for taking out the time. Because we've seen good moves coming in the markets in the last 2-3 odd days. Plus, we've seen for a change SMIDs also doing fairly well. I'll take your perspective first on the markets as to where are you seeing action right now, because there are a couple of counters which are doing fairly well. You have pharma, which has done significantly well. You have realty, which has picked up very well. Where is it that you are finding value now?
Firstly, good afternoon and thank you so much for having me. As we're talking about the markets, as you were talking about crude, we are seeing a cool off coming in crude, and that is why we are seeing the markets really picking up. We are finally seeing not only Nifty, not only the small cap index, but the entire broader market picking up, as we were seeing in the advanced decline ratio, where we have around 2,000 stocks that are in green and close to 500 stocks in the negative. So the bulls are completely taking charge. We're seeing a broad market-based rally. And recently, the US data that came in, where we're seeing the inflation cooling down. So the chances of the Fed rate hike have gone significantly down. And once the rate hike chances have gone down, the interest rate sensitives, that is your real estate and auto, which have been underperforming for a very long time, on the fact that there's a possibility of a rate hike, have finally started cooling off and are rallying back. So I think the markets are doing fantastic. And even if you compare Indian markets to global markets right now, they have underperformed for the last 2 years. For the last September 2024, that is when we made our last all-time high. From there, we have done close to zero returns in terms of Nifty, Bank Nifty, mid cap, small cap, all the major indexes. So I finally think that right now it's the time that we are all set to break out from their all-time high. We just need that one positive trigger. See, there's still some uncertainty around the Iran-US war. I think that is settling down. Just like the Russia-Ukraine war happened, it settled down. I think Iran and US is settling down. We're going to see some down spikes when there's a tweet from Trump. But I think overall, till crude is below $80, still we are sustaining below the $80 mark. I think it is going to be fantastic for Indian economy, and the markets are going to pick up really well.
Harshal, the other aspect is IT, because we've seen good moves coming in all of these names today. Of course, it's on the back of TCS earnings. I mean, it's not like the earnings were very impressive. It was an inline set of numbers, but I think the commentary coming in seems to be positive. Plus, we've seen a lot of brokerages also that have talked about how IT could be a dark horse going forward, that foreign players could turn to IT companies for their AI applications and solutions, etc. Just want to get a sense as to what is your view on IT right now. Is it a positive one, or do you still think that there is some more time to kind of understand as to where this move will go forward?
Absolutely. If you talk about IT right now, I think I would still wait and watch. Well, I have a negative bias towards IT, but I think I would still wait and watch all these bounces that we are seeing right now. I would consider in the technical terms as dead cat bounce, because if you study the TCS result, right, they might have some positive triggers because of which the stock has given a good bounce back. But overall, if you consider IT, until they're not moving towards AI, they're not taking off the pivot. I think every day Claude is coming up with something new. OpenAI is coming up with something new, and all their services are getting replaced. So I think it's a sunset business till they do not move towards AI. And again, of course, you're seeing a lot of brokerage houses putting up reports, and we've seen that DIIs have been aggressively piling up on IT stocks. But if you look at FIIs, which we're talking that they might turn around as buyers, they're not going to turn around as buyers, because as a foreign institutional investor today, I have an option to buy Nvidia and I have an option to buy TCS. What am I going to go and buy? I'm surely going to go and buy Nvidia. I'm not going to move down to TCS until TCS is showing some phenomenal turnaround or a growth. Now, if you look at the result yesterday, the growth expectation is still in single digits. It's still somewhere close to less than 5%. And this is for every IT company. We saw the Accenture result coming in back then, and we saw the sell-off coming in Accenture. And Accenture has been historically setting up the trend for Indian IT. But I personally feel that until we are not taking that pivot, I think it's going to be a tough time for Indian IT. TCS today, at its peak, I think it was trading around a market cap of 15 lakh crores. Today, TCS is close to somewhere around 7 lakh crores, and at the lowest PE in its history, it's trading at a PE of 15. Historically, it has traded close to a PE of 22, 23. Today, it is trading at 15. People consider this as a dark horse. People consider this as a value bet. But a very simple question. A company which is going at single digits at 5%, commanding a PE of 15 to 16, isn't that too expensive in a layman fundamental language? Well, until the growth expectation doesn't come in, until the management commentary doesn't say that, okay, we are expecting a turnaround in the growth, till then, I think IT is a no-no for me.
Got it. Harshal, we've seen a slew of business updates coming in ahead of earnings, right? You had majorly banking updates coming in, FMCG updates coming in. Anything in specific that stood out for you and something that you'll definitely be watching out for the fine print once the earnings come out? Anything in specific from the banking space, retail space, consumption space that you've liked?
Well, very honestly, banking, auto, and reality is something that I really want to stay away from right now, because the IT thing that I was talking about is going to create a massive wave of layoffs, and that is going to down the line affect the consumption. If you're losing white collar jobs, the first thing that you're not going to go and buy is auto and real estate. So I think I'm going to stay a little away from auto, real estate, and your banking. But I think the sectors that can really do well, I think pharma should do fantastic, because at 95 USD INR, they are making amazing money in terms of export, because their major earnings are in dollars, and when you convert them into INR, they're making hell lot of money. Also, I think power companies, they're going to do fantastic. The global AI and the semiconductor theme that we have right now, India doesn't have any sector that is directly betting upon the global AI and the semiconductor theme. So the only sector that I find which are proxies to the global AI and semiconductor theme would be one, I think your power, and second would be metals, which is a proxy to power. So I think metals also should do well. Metals have taken a lot of beating down, I think, right now because of the fear of the rate hike again. But I think US at a $40 trillion debt cannot really afford a rate hike at this point of time. So I think the correction in the metals that we are seeing is temporary. So I think metals, power should do fantastic. And there's one another sector, it's a very small sector, I think, but the companies are doing fantastic. The water management sector, companies like VA Tech, Wabag, they're doing fantastic, because at this point of time, your data center and your AI is going to require a lot of fresh water to cool it down. And this sector, which has been a dark horse for a very long time, except VA Tech, Wabag, if you see many other companies, they've been on a downtrend. So I think that this sector should pick up really well. So these are the few sectors that I think could do well, and I think a few sectors that I would really want to stay away from.
Sure. Harshal, thank you so much for giving us that perspective. Definitely, that's a value add with regards to what you're tracking, and it makes sense. Power, water treatment, etc. are going to be the emerging themes going forward. So thank you so much, first of all, for taking out the time and helping us with those insights. Pleasure speaking to you.
Thank you so much. It was great talking. Yeah.
Same here, Harshal. Thank you so much. But IT remains in focus, and let's try to pull up some of those names: TCS, Infosys, Tech Mahindra, etc. And on the back of course, TCS earnings, the sector itself is gaining over that 1% mark. And to understand as to what's next for all of these players, we're now joined by Sandeep Agrawal, who tracks this space very closely. He's a fund manager and co-founder at Sovilo Investment Manager LLP. Joining us now, Sandeep. A very good afternoon to you, Mahima this side. Thank you so much, first of all, for taking out the time. I'll start by asking about TCS first, because it's not like it's a great set of numbers, right? It's an inline set of numbers, but the hiring number that came in as a surprise at a 15-quarter high. There is some bit of surprise that is coming in the AI revenue as well. Just want to get a sense from an entire perspective of the first earnings in the IT space as to how you're viewing it, and will this follow through in the other names as well, because you're seeing enthusiasm in the other names as well.
Yeah, hi, good afternoon, and thanks for having me on the show. So I will say that, while I don't give any comment on any specific company, but let me tell you that the number which has come, they are in line and they are decent. There is no negative shock in the numbers. Obviously, because so many people are talking for so long on channels globally, not only in India, for in favor of AI and semicons and chips and everything. So no one is right now focusing on IT services, and because in the US, a lot of money has been made in AI related companies. So even there, the services companies have suffered very badly on valuation, and we are just following that. So Accenture, you can see how badly it has been hammered, and Cognizant how badly it has been hammered, and same thing is basically flowing into India. So I would say that whenever an inflection point comes in the industry, it always comes in this way only, that you will have stabilization in a particular quarter, and then things will move up. Now I would only reiterate that we have more than 80% market share in IT services. So it is very difficult in this outsourcing part. So it is very difficult for us to outperform or to the industry to grow in a big way. So this is a sector which will grow at a slower pace for a longer term. I think at large companies at 6-7% dollar growth will be a good growth to assume, and but the profit growth will be much better. And with those numbers, if when you do the working, you find that the numbers are not at all bad, and for that I think the valuation has corrected meaningfully. So there seems to be good upside at the sector level, and obviously there are many stocks which are deep value, which are small cap and mid cap as well. So barring ER&D, which I am still cautious for another 15-20% downside, I don't see downside in the IT services space. And the chain is same every time. What happens is people mix disruption and cycle together. So please don't mix disruption and cycle. Cycle is same every time.
Correct. That makes a lot of sense, Sandeep, because what you mentioned is correct. But from what you said, just trying to follow up on that, you said that there is valuation comfort in a lot of names, and you're saying that small caps and mid caps is where you're seeing more risk to reward ratio, if I'm not wrong. Is that reading correct? And in the large cap space, because a lot of these names also have weightage in the Nifty 50 per se. I mean, if somebody is viewing at the theme as a whole, because there are brokerages who are also saying that IT could be the next dark horse, because it is a possibility that foreign companies could come to India for their AI applications or solutions, etc., and this will go through via Indian companies only. So how are you viewing that comment? Plus, in the SMIDs, where are you seeing more value? And if you were to play the large cap theme, how would that play out to be?
No, so I am very clear in my mind what is going to happen in the space, so I have no doubt. So let me again reiterate that the hardware players have benefited in a big way. Now the foundational layer player like the Groks and Gemini are all doing well, and we will also do well when the enterprise version of this starts getting implemented. So I am not at all in confused mind, or I have zero doubt that we will not do well. So there lot of demand and growth will come, but understand that this is the first disruption in last 25 years. Where efforts is going down by 30%. In past, all disruption, what has happened, technology has transitioned from one to another. So there was a lull period of 4 quarters, 6 quarters, and then huge pent-up demand used to come and compensate for all the losses. This time, that will not happen. we will not get back what we have lost. Almost 30% of effort reduction has happened. That is permanent and that is going to stay. We have to move on from here. So I'm just saying that even if you do that maths, the EPS growth for the companies for next 3 years cumulatively is between 45 to 70%. And even if you assume zero re-rating of the sector, which is unlikely, then also you will make at least this much return of 45 to 70%, which translates to 12-13% to 15-16% or 18% CAGR, which is not bad at all. How many companies does in Nifty grow at that pace? Secondly, to your point, large and mid cap and small cap. See what has happened. Small cap after COVID, the time to execute has become very important. So earlier, what used to happen? Client used to give ample time, 5 year, 10 year to execute project, and hence they had very strict criteria of choosing and how much contract in the past you have executed. So by default, Accenture, HP, and large Indian IT companies were only allowed to participate in global transactional deals. Now, post-COVID, what has happened? There is a lot of democratization. The time has become essence because of digital. So everyone wants to do very fast turnaround of the project. So everyone has been invited in every tender. And that is the reason the mid and small cap growth for in last 4-5 years has been much higher than the large cap, which was opposite earlier. So I think this trend cannot reverse. Mid and small cap will definitely continue to do much better growth than large cap. And hence, till someone who wants to buy a very illiquid name and large name, the large caps cannot move meaningfully. So when will that happen? That will happen when the US investors starts seeing value in IT services there. That means they start buying Accenture or likes of that, and then they will stop selling what they're selling in the large cap in India, and then you will see meaningful upside in the large caps. Otherwise, large caps will take 6 to 9 months at least to recover in a meaningful way. But in mid and small cap, what is happening? The local mutual funds, the local HNIs, the local PMS, the local AIF, all are buying because they are going by the growth numbers. In the large cap, that is not true because large cap growth obviously is lower. And second, FI selling pressure continues there. And also FIs are not buying. So everything is going against large cap. So 6 to 9 months it can persist. But finally, it will do well. That is what my call is.
Got it. Fair analysis, Sandeep. Just one last quick one from my end, because I think what stood out in TCS was also the part of hiring, right? There's a significant hiring growth coming at a 15-quarter high is what we've seen. Do you think that will follow through and this trend should continue from here on?
So I think, one thing is very clear that, people who are writing obituary of the sector that it is gone, I don't agree to it at all. I've seen this 5 times in my life. I can tell you there is a lot of demand and the ecosystem, you just see Naukri number next 2 months and you will realize that what kind of hiring has again started. So AI related talent is in short supply. Everyone has started looking for it. What TCS has done, I cannot say that everyone will show a very high headcount addition number. But I think we are very close to, again, hiring picking up. So I am not in the camp which believes that, there will be layoff in the sector and people will lose job and all that. I am in the camp which strongly believes that 80% of the pain is behind. I don't know this is the worst quarter or next one will be the worst. But we are 80-90% of the pain is behind us.
Got it. Sandeep, thank you so much for putting that perspective, perfectly, because that optimism is now being reflected in the way stocks are moving as well. So thank you so much for taking out the time and helping us understand the entire IT space. Pleasure speaking to you. Let's also quickly pull up the IT names once again. You have TCS, Infosys, Tech Mahindra all doing very well in trade today, gaining in that range of 1 to 2% each. But like Sandeep said, the worst is behind us for IT as of now is what he believes. But shifting focus, retailers' body first has approached the Competition Commission of India, alleging that Flipkart is engaged in predatory pricing and unfair marketplace practices. Rishabh is here with more details on this one. Rishabh?
Absolutely. We have a copy of this complaint that has been filed by FIRST. FIRST is an abbreviation for the Forum of Internet Retailers, Sellers and Traders. So what they have done is they've filed a complaint, the Competition Commission of India complaint alleging various predatory practices that Flipkart is engaged in. What essentially they are saying, and the premise of their complaint is that Flipkart has been avoiding and reducing its GST liabilities. Thereby, it has created a pool of roughly 3,000 crore rupees, which it is using to fund the deep discounts on its platforms, and therefore causing a lot of harm to a lot of small retailers that are operating on that platform and also on the broader marketplace. What we are seeing also is that Flipkart allegedly has treated 33 sellers preferentially, and it sells to these sellers. It sells its goods to these sellers at a much lower rate than the market costs, and then these sellers in turn resell it on the platform, and thereby they're able to beat a lot of other sellers on the platform. So this is some sort of a nexus that First is alleging that Flipkart has. What First is also saying is that Flipkart is operating an inventory-led model, but they only have the permission, and India only gives permission to the likes of Flipkart and Amazon to operate a marketplace-led model. That is yet another issue that they've brought up. What they've also ordered is a probe into various other Flipkart group entities like Myntra, eCart, and ClearTrip, and all of these concerns have also been brought up with the Competition Commission of India. So that's what is to be seen is whether CC this and whether they will sort of bring this up and order a probe into it. So that's what we're keeping our eyes peeled on.
Okay, all right, Rishabh, thank you so much for getting us those details. Of course, we'll be tracking this story very closely and give you updates as and when they come. But shifting on to another one, an important one, the FCNRB deposits lose momentum after initial surge. Let's get you the latest trends and what's driving flows from here. Piyush joins us with the latest details. Piyush?
Yes, that's right. After registering the initial surge in the deposit mobilization of FCNRB deposits, now there is a, the flows have gone back to gradual status in the sense that till now around $6 billion odd of inflows have come in, which is slightly lower than expected, but bankers are expecting it to pick up from second half of July onwards because the rates are still very good. The rates and the overall leverage that these clients can take up to 9x is very appealing. Industry estimates that around $60 to $70 billion of FCNRB deposits can be raised through the course of this scheme, which ends in September. So the key reason as of now for the shutdown, the initial rush, like we mentioned, came from existing clients, so that base is now shrinking. Second, fresh customer additions are on the lower side. Depositors are expecting a more favorable, rupee and dollar mark because RBI takes care of banks as hedging costs, not the customers. So the levels are very important for the clients to invest in this. Borrowing costs for banks over the last couple of days have gone up because the US dollar rates, loan rates have gone up. Some clients are, on the taxation aspect also, there is a little bit of concern on that front. Now, how will the flows improve? First is, of course, the borrowing cost. If it comes down, it's helpful for banks. Second is the hedging, the leverage. If they provide higher leverage to the client, that will also help. The engagement with the clients and counterparties, that is also essential. More deep, engagement with them. And on their part, banks, after the RBI came out with FAQ on this FCNR deposits, banks, domestic banks are now tying up with foreign banks for this SLBC facility. Under the SLBC, RBI said that banks can issue SLBC against, which is essentially bank guarantee against the FCNR deposit. But, since Indian banks don't really have a lot of presence in foreign banks, they issue this SLBC and the foreign bank then give the loan. So they are partnering with foreign banks and, figuring out how the scheme will pick up.
All right, Piyush, thank you so much for getting us those details. But viewers, with that, we're completely out of time on this edition of Markets at 12. But do stay tuned in to NDTV Profit for more news and updates on the other side.
Superstar Stocks of the Day, presented by Tata Azura. Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power. What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT. So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short.
Hello and welcome back to NDTV Profit. You're watching Trending Stocks right here from the NDTV Profit Suzlon Studios. Now, it's been an interesting session of the day for the markets because we're now above that 1% mark, continuing for the Nifty 50 at this point of time, and that augurs well after the correction that we'd seen on Wednesday. So that pressure continued. We're still yet to go back to that 24,400 mark, but important to monitor all of those key levels at this point of time. With me, Puneet Zaveri. Of course, I also have Sharad Dubey with me joining in from the market pit. But Sharad, what are some of the other key takeaways that you are looking at this point of time for the markets?
Thanks a lot. Good afternoon, Puneet. And yes, the markets are in a good recovery mode for the last two trading sessions. We are near the day's high level for Nifty, and let's pull out Nifty Bank also. Both of the benchmark indices are showing a really good strength in the markets. Now, will this sustain or not till the closing? That's what something to watch out for. But let's look at the key triggers for the markets, how things are panning out, and a good recovery is happening. And globally, the risk of sentiment which was there 48 hours ago, that is reducing. Let's pull out the factors to watch, what should be the important numbers. Of course, the first thing is the rebound. That is something which is showing a good strength. Of course, the FIs are volatile right now, but nevertheless, the sentiment is changing. The second important part is definitely going to be the new ranges of momentum to come in the resistance for both Nifty and Nifty Bank, and this is a very important trigger, and this is actually impacting the global asset classes as well. Largely crude, gold, most of them are actually quite stable right now, but the action is in the small cap, mid cap space. For the second straight day, it's outperforming the benchmarks. That is where the strength is lying, both mid cap as well as the small cap 250 index. We will be focusing on this more. The IT stocks are rallying post TCS results. Valuations were cheap, and now a good buying momentum coming in, be it mid cap, large cap, and even product based IT companies as well. Let's look at the other key factor as well of how things are panning out. All sectors are in the green, only FMCG is slightly in red. So you can see there is a total buying happening across the sectors. Apart from this, also the earnings season start. The TCS yesterday it started, and today we have 3 earnings: Just Dial, L&T Finance, Bank of Maharashtra, all of them in the green. So we will be tracking these announcements and the earnings as well. Also, apart from this, 2 things to track today. June AMFI data is going to come out by 1 o'clock to 2 o'clock. That will show us the SIP data is expected to be near that record high levels, and of course the Forex data. And if you are tracking the AI trade, South Korea's SK Hynix ADR debuts in Nasdaq, and the numbers which I saw were phenomenal when it comes to subscription. So overall, we can say the risk-on sentiment is slowly coming back, but you never know what happens in the weekend and Donald Trump.
Well, most certainly, Sharad, that continues to be one of the biggest triggers as well. But let's look at now what's on the trending stocks watch list. Now, of course, TCS as well as the Nifty IT continue to be on our radar today on the back of earnings coming in from TCS, as well as the commentary that Q2 could start seeing some revival essentially at this point of time, and hence both those counters doing well today. Godrej Properties is also up about 4% as well. The embellishments houses amalgamation has now been approved by the company, and hence stocks reacting to that. What's also interesting is Premier Explosive. Now, Apollo Microsystems, another listed peer, has actually acquired the company at a 41.3% stake. So Premier is down 4% on the back of that announcement, and we'll just get to Apollo Microsystems in just a bit of how that stock is reacting. Vikram Solar also continues to be another stock which is in focus for today. Evervolt Solar Tech agreement has now been signed with the company, and hence stocks buzzing yesterday also. You do have to realize that this week we've seen the Chinese players and in China essentially the regulations change and getting more strict in. So that has also been another key trigger for all of these renewable energy players as well. But when you look at the other stocks, Dixon Tech continues to be a big one. Stocks not reacting too much, but finally, after a 19-month wait, the joint venture pact with Vivo has now been signed and approved by the government under the PN3 approval, which is required if you share a land border with India. So that's why they needed that approval to come through. Has taken a while, but is finally here. Anand Rathi Wealth also came out with good strong set of numbers for Q1. Sharad spoke to the management today as well, and that guidance for FY27 continues at this point of time. Just Engineering is the other one. A big order book of about 912 crore, stocks reacting and continuing to be in the green at this point of time. A 15-year agreement with GAIL is also boosting Container Corp today. In the stock is up almost 2%. What's also doing well is Lux Industries. Its stock is reacting up 5% right now, as they have the Reebok trademark agreement essentially in India now, and hence that will be another growth lever for the company going forward. When you also look at some of the other ones within the tech space, of course, a letter of intent of 67 crores for Chinese Tech. That stock is up almost 2.6% as well. And Solar Industries, now this one's been a slightly more topsy-turvy. Kotak Securities initiated coverage yesterday at a 10,000 rupee target price. Today, Goldman Sachs has actually remained bullish with a target price of over 19,000. So you see that variation amongst brokerages too. But for Goldman Sachs, of course, that could be possibly one of the key triggers for the stock at this point of time. Hindustan Copper also in focus today. Elevated copper prices leading to that momentum on the particular counter. HFCL, an export order of almost $52 million is leading the stock in the green, while Paytm is up 4% on the back of a tie-up with Indonesia's Flip and as well as subsidiaries. So you will be looking at all of those counters right now. But Sharad, what are some of the ones that you are focusing on in terms of the rapid fire round with our technical guest?
Well, thanks a lot for that, Puneet. Joining us, we have Sachin Sarvade with us. Good afternoon, Sachin. It's always a pleasure to have you with us. And we'll start a rapid fire round. And interestingly, real estate stocks have been doing really well in trade. I'd like to pick out Godrej Properties near the day's high level, this stock as well. Important corporate developments. You see more buying coming in this Godrej Properties counter. And what will be the levels to watch out for?
So the stock is continuously making higher and higher low. So the trend is good for the stock, but basically the upside what we can see is 2166 and 2200 is the immediate resistance for the stock. If in case we hit that resistance line and if we are getting a supply over there, then one can book profits at that range. Support wise, 2000 and 1980 is a good support levels. If in case we are getting at that price, one can buy at dips at that levels on a support levels basically.
Right. Another stock is Anand Rathi, a very strong set of numbers. I had a conversation with the management. They were quite bullish also, especially in the 27 guidance which they had given. But stable stock, do you think more up move is possible in this counter? Sachin?
So right now the one indicator which I see for a momentum is RSI, and it's currently at 77 levels, which is overbought levels. So we have to be cautious at current levels, and today also what we can see from a higher level, we have seen some kind of profit bookings, and on RSI as well we have seen negative divergence as well. So we have to stay cautious, but yeah, this is a good stock because it is maintaining a higher low and a very good trend. So buy on dips will be a good strategy in this, and the support levels is around 2000 and 1970.
Right, buy on dip strategy for Anand Rathi Wealth. Next stock, Jash Engineering in focus. So they have come out with their order book announcement. And of course, if you look at the long-term charts, the stock has been under a big selling pressure. But do you see the signs of bottoming out in this counter? And if yes, any important breakout levels to track for Jash Engineering?
So the stock has actually changed from down to up. The trend has been changed. The immediate resistance for the stock is 570 and 575 levels. If we are closing above 575 levels, then we can see 600, 650 levels on the upside. On the downside, 509 is a good support. So 509 and 500, this is a good demand zone. If one wants to accumulate, that area is a good accumulation point.
Right, your view on Paytm, positive development coming in, and slowly the company is actually doing well on the technical charts. We are seeing good up moves as well. Your view on Paytm, at least on the medium term basis, how does it look, at least on the weekly or the monthly charts? Sachin?
So on a weekly charts, what we can see, overall trend is good, but immediate resistance for the stock is 1350, 1380 levels. If we are closing above 1380 levels, of course the stock will perform, and then we can see higher levels of 1500 levels as well. So but we have to wait for the closing. On a daily basis, it is in a process from changing trend from down to up. So this process may take time. So buy on dips will be a good strategy. Do not chase the price on a long side.
Right, and your views on solar industries. Yesterday there was a little bit of selling pressure as well on the brokerage reports coming in, but of course this entire industry, defense and explosives, a lot of news flows are coming in for solar industries. Is there any trade to be made here?
So one can buy solar, there is no problem as the stock trend is good. Overall what we can see, it may cross 18,900 levels, and if you are closing above 19,000 levels, we can see 20,000 and 21,000 on the upside.
All right, so this is the important levels you should track for solar industries. So that's the end of the rapid fire round. Over to you, Puneet. What are the Google trending stocks suggesting?
Well, there are a bunch of them today. Of course, we spoke about Premier Explosive as well as their acquisition led by Apollo Microsystem. That's one of the counters that is buzzing today, up 2.6% at this point of time. You also have to note that the QIP that the company did recently was at 416. So it's still trading a tad below that mark. Vedanta Limited is up almost 0.8% at this point of time. Swiggy continues to be a focus stock. Yesterday was up almost 6 to 7%, and most technical analysts spoke about that trend being broken for the upside. Today though, you're not seeing that move yet again, so you have to continue to monitor the stock. Bharat Electronics is one which is doing well in trade, and so is Adani Power, as well as a few of the Adani stocks that are doing well in trade today. So these are the 5 which are buzzing on the back of Google trends as well. But Sachin, just a quick question on Swiggy, because yesterday we saw that 6 to 7% move that was led by the change in its structure for foreign ownership, now below 50%. But is there any kind of momentum yet being seen on Swiggy, or was this yesterday's move just a one-off?
So the trend for the stock is down. Basically, yesterday it actually coincided with the 100-day EMA, and today we can see open high is same basically, which is exactly giving like it has taken a resistance around that level. So profit booking will be a good strategy in this stock, and we can see a lower low as well in this stock because the trend is down.
Got that view. We'll let you go on that note. Sachin, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But let's go back to you, Sharad. IT continues to be on our radar today.
Exactly, you're right, Puneet, and this is the sector which we have been talking about. A very good surprise coming in, and of course the valuations seem quite attractive. That's what the analysts are talking about. But why is IT stocks up? And of course there is a big contribution of TCS, and to decode that we are joined in by Jasmeet here. Jasmeet, your sector is the talk of the town. What's the main reason for this up move?
Well, sure, thank you for that. We see Nifty IT buzzing and a lot of other IT small cap also buzzing. That's on the back of that strong commentary which we saw from TCS. While we did know that TCS reported a muted to flat set of quarter, but still no bad news is a good news for the company. If we look at the overall commentary, we do know that the management remains bullish on the Q2 and the H2 going ahead, and they also state that the manufacturing and life sciences division might see a turnaround in the Q2, which is a key positive for the company and among the biggest sectors as well. Apart from that, the key positive which I have picked up from the TCS is the overall headcount hiring. Company has been hiring from last 2 consecutive quarters, and in this quarter they have done a bumper hiring of over 9,000, the net addition of 9,000 employees. So which in term relates that there could be a strong demand going ahead in the coming quarters. So that's the reason why a lot of other IT packs are also buzzing. Almost the entire IT pack is buzzing, and also we see a good value buy coming. And also, as we have seen, the valuations are at multi-year low, and for top 5 IT firms the valuations are currently at 10-year low. So a good crosshair, a good commentary about TCS management is something that's taking the overall sector at heights.
Thanks a lot, Jasmeet, for that detailed analysis. But our conversation continues for the IT. Earlier today, Neeraj had a conversation with the management. Do listen in.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing, and the discussions we are having with our customers on AI. So that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them. As I said, all in all, satisfying quarter. Geopolitics did play, particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I'd like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter, and what does that signal for the quarters ahead?
I think, as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of, it's a completely net new win, and cuts across, multiple services that will deliver for SKF. Complete, AI first IT operations in terms of how the business would work, enterprise transformations, and also AI-led business transformations. I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, and again, all these renewals require a very clear AI-powered proposition, and we are doing well there. And with a US-based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double-digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Well, that was the management, of course, of TCS as well. But let's quickly pull up Indian Bank right now, because that stock has just seen a very, very sharp spike on the back of its quarterly results. The net interest income for the company is up 17%. Operating profit is up almost 16.5%. And that sharp 6% jump already visible on the screen as well. Gross NPA has come down to 1.86% versus 1.98%. Net NPA largely stable. The provisions on a YY basis have gone up to 1196 crores, but in line largely with the numbers, because they have still reported a growth of 10% in terms of profitability. So for now, streets liking these numbers, and that's visible, of course, on the stock price as well. But let me also get in our fundamental guest for today, Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi Shares and Stock Brokers. Narendra, very good afternoon to you. Thanks so much for joining in. Let me actually just take a quick question first on TCS, because while the estimates were beaten down slightly higher or in line for most analysts, brokerages, as well as everybody who was tracking the counter, how did you look at TCS right now? That's also having a big boost on the other IT companies. What will you be watching out for the others?
Yeah, good afternoon. Definitely, the start of the results season has been very positive with the TCS results, and a big relief for the market, especially for the IT sector, as the markets were very edgy about the kind of improvement in the demand we are going to see, whether we are going to see improvement in Q2 or the second half, and how things would shape up, especially regarding the AI. Now, coming to the TCS results, I think largely they are in line. However, there are 2-3 pointers which were definitely taken positively by the markets. One is, if you see the annualized AI revenue, however, it is still at a very initial stages, and it's not an annuity kind of a revenue. Also, it's a kind of a lumpy, but it surged around 13.6% to 2.6 billion. So that's a very good jump. Plus, there has been a positive surprise on TCV of 9.5 billion, which is almost 1.1% YOY. So this shows that the overall TCV is 1.25 book-to-bill ratio. So it's a very healthy ratio, despite the kind of challenges the sector is facing. And now coming to the valuations, so the valuations were very attractive. So the market has reacted in a positive manner. Also, if you see the guidance, what the markets were expecting, that the H2 should be the second half where we would saw some recovery. However, the company has guided for a recovery in Q2 itself. So that is a big relief for the positive relief for the markets, that we will be seeing at least 3 quarters of recovery in this current financial year. So that has been again a positive surprise for them.
That's interesting, but of course, 2 stocks in focus. We have Apollo Microsystem and Premier Explosives. We had earlier stated, Soumit had pointed out in his cover segment, and now it's confirmed also. And because both of these stocks are reacting, a little bit of selling pressure, because these stocks had run up, to be honest, for Premier Explosives. But now, what does this mean for the defense and the explosive segment,
Absolutely, Sharad. So it is a
really big announcement news that has come in, and it has been that Apollo Microsystems will be acquiring 41.33% of Premier Explosives. It will be an all-cash deal, and it is valued at 1,515 crores. On top of that, Apollo will also give an open offer of around 26% stake in Premier Explosives, and that will be priced in at 698 rupees per share. The acquisition has been announced, but it still requires CCI and other regulatory approvals, and those are expected to be cleared by the end of the third quarter this year, or by the month of December. Now let's understand what Premier Explosives does. Well, the company is involved in a lot of business segments. They make propellants for missiles, they supply countermeasure systems for both defense and aerospace segments, they serve the mining sector, they operate propellant plants at ISRO Sriharikota facility, they also operate a solid fuel complex at Jagdalpur. So a lot of business ventures that the company has. And on the other side, Apollo Microsystems, they make defense electronics and electromechanical systems. So all in all, this combined entity will bring indigenous integrated defense manufacturing within the country, and that has been the aim of Apollo Microsystems over the longer run as well. So let's see what this acquisition can bring in value for shareholders of both the companies going on.
Thanks a lot for that detailed analysis. And whenever there is a defense, there needs to be explosions, and that's the most simple way to put that perspective. But Narendra, what's the entire system, the ecosystem which is now looking like? We have solar industries, we have your Apollo Microsystems, and now this acquisition comes in. Even Kalyani is also there, Kalyani Group is also there. So how do you see this defense and explosives theme coming up together?
And we are very positive on the long-term prospects of the defense sectors, be it private defense player or the PSU defense players like Bharat Electronics, Hindustan Aeronautics. Now, having said that, if you see the way the solar industries have diversified into manufacturing rockets and electronic components for missiles, Pinaka rockets, etc. So the similar thing synergistically would be happen with this merger of Apollo Microsystem and Premier Energies, wherein Apollo Microsystem is the electronics manufacturing player, while the Premier Explosives provides rocket fuel propellants and manufactures energetic materials and munitions. So I think synergistically it would be positive for Apollo Microsystem in medium to long term.
Got that view, Narendra. But Kalyan Jewellers definitely has been on a glittery run, to say the least. Stock has surged over 30% from its lows in just this week itself and continues to be on investors' radar. Now, there are some key aspects to watch out for in terms of valuation being attractive versus peers, but there's a lot more in our deep dive segment on the stock. Mahima, over to you.
Right, so Puneet, as you rightly mentioned, it's up over that 35-40% mark from its lows, and in the last 3 odd days, it's gained over 30 odd percent. We'll try to look at as to what the positives and negatives are for Kalyan Jewellers. I'll just start with the financials first, because it's been on a very strong trajectory. The overall top line growth CAGR has been at a 36% in the last 3 odd years. For profits also, the growth CAGR has been around 44 odd percent for the last 4 odd years. And if we take a look at the ROCE numbers that have been on an improving trend, from a 14% in FY24 to 15% in FY25 to a 21% in FY26. Now, if you take a look at the valuation versus peers, it's sitting at a very comfortable valuation as compared to the giant jewelry name Titan, because Titan one year forward PE is indicating 64 times of PE versus that of 27 times of Titan. But Senco is the one which is of course much smaller player as compared to Kalyan, but still sitting at that 15 times mark 1 year forward. Thangamayil of course is expensive as compared to Kalyan, just because of the way it has run up significantly. Now, in terms of what's not working, because overall when the Q1 business update came in, the top line growth expectation came in, the top line growth came in lower than expected, and this was on account of the international business being slightly impacted, and this is on account of the Middle East exposure that they have. Overall, the international revenues stand at around 14 odd percent. And in terms of Q4, 10% of that business came in just from Middle East. Plus, they also have around 38 showrooms in UAE combined as a whole. And if Middle East crisis continue, this could possibly weigh on the stock performance and the top line coming in from the international markets as well. Plus, FIs have been selling this counter. If you take a look at the last 3 odd years, this is of course, March 26 data that we have. March, 24, it was at 21% mark, which went down to around 14.5% mark in FY26. Debt is also a concern because it's been on a rising trend in FY26 itself. Total borrowings saw growth of around 23%. This is combined both, the working capital and the long-term borrowing. But other liabilities have also significantly gone up by around 55% in FY26. The last metric I think that analysts track is cash flow from operation to EBITDA, which has been strong but on a declining trajectory. That is an area of concern, from 116% in FY24 to around 70% in FY26. Lastly, what are Bloomberg consensus estimates suggesting? There are around 8 buy calls and no hold and sell calls with a return potential of 50%. So this is the overall view of what's panning out for Kalyan Jewellers. So I think valuation comfort is there as compared to Titan, but Middle East is something that we'll be watching out for going forward in terms of the top line growth from international markets.
Well, thanks so much for that, Mahima. But Narendra, just like a 10-second answer because of paucity of time, is it one of your preferred gold name picks, or is there do you like the leader?
No, we do not have any recommendation on this particular stock right now.
Well, thanks so much for that, Narendra, and joining us with your views. But viewers, with that, it's a wrap on this edition of Trending Stocks with Sharad, myself, everybody who put the show together. Thanks so much for watching. Stay tuned. A lot more action on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same.
Benchmark sustained recovery after sharp sell-off earlier this week. Broader markets outperformed benchmarks. Realty, PSU banks and metals lead gains. FMCG bucks the trend. Kalyan Jewellers extends its winning streak for a third straight session as a bullish brokerage view and growing confidence in its long-term growth story kept investor sentiment strong as well. TCS in focus after an inline set of numbers in the first quarter. Margins were impacted by wage hike issue. Profit declined on a quarter-on-quarter basis as well. Attrition came in slightly above anticipated and dividend was also below estimates. Deal win too lower than earlier quarter. Dixon Tech receives government approval for its Vivo joint venture, clearing a key hurdle. The nod is expected to boost smartphone volume, strengthen growth prospects, and has prompted brokerages to upgrade their earnings estimates. Apollo Microsystems abuzz as it's set to acquire a 41.3% stake in Premier Explosives in a 1,500 crore rupee deal. Speaking to NDTV Profit, Premier said that management is going to remain unchanged. FY28 will mark the partnership's rollout and capacity expansion is on track. Stronger domestic growth, meanwhile, is expected. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now. Whether you talk about Nifty or Sensex, it's actually a decent, albeit range-bound day of trade really coming through. When you talk about the indices and when you talk about the entire sectoral picture as well, that's holding up quite well. Barring FMCG and pharma, of course, on the back foot, you do have Nifty, PSU Bank, Realty as well as IT, Metal, Defense, Bank, Financial Services, Oil and Gas as well as Energy and Rural. Some of those sectors that are in great shape right now. That said and done, let's quickly talk about the list of gainers and losers as well. Take a look at what makes it to the top of the list in terms of NSE as well. Let's pull that up as well for you in terms of what really is buzzing away now. When you talk about Nifty 50 as well, you actually have something like a Dr. Reddy's, Eternal, Bharti Airtel, Apollo Hospital as well as Nestle and Coal India as well as Sun Pharma. Those stocks on the down foot right now. And when you talk about the list of gainers as well, something like a Geo Financial Services is holding up good with that 4% gain coming in. HDFC Life, Adani Enterprises as well, and SBI, Infosys as well as JSW Steel, Interglobe Aviations as well, and Adani Ports, Tech Mahindra as well. Some of those counters as well doing quite well for themselves at this hour as well. So largely that's the kind of picture that you have when it comes to some of those stocks as well. That really is the kind of picture that you have in terms of some of those stocks, as you can very clearly see on your screens as well. So that really is the market check in terms of everything that is happening with the markets. But let's also get to the commodity check as well. Take a look at what oil prices are up to right now, and it seems to be holding on to some of those losses as well, just a tad bit turned negative at noon as well. That's oil for you right now when you talk about Brent or WTI. So Brent just slipped below that $76 a barrel level as well, and WTI as well below that $72 a barrel level as well. So that's the kind of update that you have coming in. That said and done, let's also get you the update coming in terms of some of the insights as well. Anuj Gupta, commodity expert, joining us on the show right now. Mr. Gupta, thank you so much for taking time out and joining us this afternoon. Just wanted to try and understand what is your outlook going forward when it comes to oil prices.
Good afternoon. See, we are seeing that US and Iran on a same page to ease off the war. That's why we are seeing a sharp correction in Brent and Brent and WTI prices. Brent is trading around 75 and WTI is trading around 71. So, but initially Iran is still not on a page to ease of the war. So that will be impact or that will be positive for the crude prices. However, recently we saw that US stock price increase in last inventory data. So after that we saw a sharp correction in crude prices. However, OPEC plus members and UAE are also doing towards the increasing the production of the crude oil. That is also impacting negative on crude prices.
No, absolutely. And just also wanted to try and understand what is the way forward for here in terms of the kind of price levels that you also have in mind. You've given us a snapshot in terms of what you're thinking and the lines across which that you're thinking right now when it comes to oil prices. That said and done, what are the kind of levels that you're then expecting? And of course, there's only one person who can decisively answer all of this, and that is US President Donald Trump as well, because he is responsible for a lot of the moves that we've seen come in terms of the volatility when it comes to oil prices. But what are the levels for the next week then?
See, on the basis of the fundamental side, as Iran is not to the ease of this war, so that will impact positive for the crude prices. However, we are expecting that on the technical side, crude oil prices are trading on a very oversold zone. So we are expecting a short covering in the crude prices. However, 70 odd level are very strong support for the crude prices and expecting a recovery in the crude prices. However, $80 would work as a strong resistance for the crude prices. So we are expecting in a shorter term, crude may trade between 70 to $80 per barrel.
No, absolutely. That said and done, just quickly wanted to try and understand what are the kind of factors that you're looking at as well. Do you think that the IEA report is going to be important to watch out for? Other than that, of course, Gulf supply flows is something that makes it to the top of our list. But other than that as well, any other factors that you think investors should be a little wary of then?
The condition of Strait of Hormuz will depend, will impact on the crude prices because as Iran saying that the Strait of Hormuz again in its control, so that will impact on the crude prices. If they again close the Strait of Hormuz, then that will provide support to the crude prices and the price will escalate from here. So the Strait of Hormuz situation of the Strait of Hormuz and the situation of the shipments will be in the focus for the traders.
No, absolutely. And I also wanted to try and understand what you think about gold prices as well. It's been a little bit of a roller coaster week when you talk about gold prices, and not the kind of roller coaster that we saw earlier this week. But of course, still some bit of volatility really coming back to the table when you talk about gold, just about holding on steady right now and near those key levels as well. First, what are the kind of levels that you're watching out for? And two, what do you make sense of in terms of everything that has been happening with gold prices? And where's the way from here then?
Last 1 week, gold prices corrected by almost $100 and the silver price corrected by almost $3 to $4. In last Fed minutes, there is no clarity about the interest rate. That's why we saw a very roller coaster move in gold and silver prices. However, there is a concern that Fed may be not able to increase or may not increase the interest rate in the next Fed meeting, so that will impact positive for the gold prices. However, the higher side, the uncertainty between US and Iran will impact on the crude prices, and if crude price increase, definitely they will increase the interest rate. So overall, all the sentiments are depend on the crude prices and the interest rate segment. So I'm expecting that gold and silver prices may trade between a range. However, on a downside, 4,050 per ounce would work as a very strong support and 4150 would work as a strong resistance. So we are not expecting so much any big move towards downside or a higher side in the gold prices. We are expecting that gold price may trade between a range.
No, absolutely. So range-bound moves is something that you're penciling in. And until when are you then penciling this sort of status quo to be maintained as well when it comes to range-bound prices? And two, also, just wanted to try and understand what you think about fresh buys in a market like this one, right? If it's going to be range-bound or if it's going to be at these lower levels as compared to what it was previously or in the last year as well, what do you expect for fresh buys? Do you think that investors who have a little bit of an iron stomach should venture out when it comes to gold?
I think the next Fed meeting will, in focus, and after this meeting, there will be clarity that how they will react on the interest and how much increase interest rate in the next couple of months. So that would be a very major key point for the gold prices. And however, on the technical side, $4,000 per ounce would work as a very strong support. I think if there is a dip and if it may test $4,000 per ounce, that would be a buying level for the gold prices. I think till the year of end, I am expecting gold may test again 4,200 to $43 per ounce.
No, absolutely. And just also wanted to get a quick word in terms of the safe haven status of gold as well, Mr. Gupta, because that has gone out for a walk, it seems, ever since the war really began. Just wanted to try and get a better sense of when you think that status quo is going to be returning when it comes to some of the factors that we used to typically also assume that gold is going to be moving in tandem with.
See, I'm not expecting so much safe haven demand in the gold prices, as even we also noticed that there is an outflow in gold ETF also. So individual investor, retail investor are also exiting from the gold ETF also. So that is not here, and not expecting currently any safe haven demand. Definitely there would be some investment demand also on the lower level. So I think investor and traders are waiting for the lower levels to start investing.
And thank you so much for helping us out with that update also as well. Just very quick word when it comes to silver as well. Do you expect it to be mirroring gold prices as well? And that seems to be broadly the trend, but sometimes silver does surprise us.
Definitely, it is mirroring the gold prices, but yes, as silver is a part of the industrial metal, so expecting a little bit more positiveness as compared to the gold in the silver, and expecting silver prices may move from here towards upside towards $63 to $65. But still, it is also in the same range. Not expecting so much big moves in the silver price as well.
Absolutely. So range bound is the headline that we're picking up right now when it comes to the outlook as well. Thank you so much for joining us with all of those insights as well. So there you go. That's the entire update coming in terms of what you should be making of the week gone by. And it was a quite volatile one at that. But speaking of volatile as well, let's talk about the resultant impact of the volatility as well. You do have sources telling NDTV Profit that fresh US-Iran tensions have put plans to resume Iranian crude imports on hold, while India's crude supplies in fact remain secure, with refiners stocked through August as well. Sessa is standing by with some more details when it comes to this one.
India's hopes of reviving Iranian crude imports have hit a fresh roadblock after the US revoked sanctions relief in retaliation for the latest tanker attacks in the Strait of Hormuz. Now, sources say that refiners have put talks on resuming purchases on hold for now. To be sure, India does not buy Iranian oil at present, but refiners have been evaluating a return to Iranian crude only if the US extended sanction waivers beyond August. So far, BPCL and Shell India are learned to have placed orders for Iranian crude. Both these companies have, released payments or issued letter of credits, but are now looking to reroute the Iran-bound shipments or use third-party logistic providers. Now, meanwhile, sources say that there is no immediate risk to India's crude supplies, with refiners adequately stocked through August, and also, diversified sourcing has kept supplies stable for now. Russian oil continues to dominate India's import basket. However, analysts warn that any prolonged instability could tighten LNG and LPG supplies from the Gulf, pushing up cooking gas prices again, as we have seen over the last few months.
No, absolutely, and thank you so much, Sessa, for joining us with all of those details. Let's also talk about one counter that is in focus right now, and that's Indian Bank. Let's also pull the stock up to see what it's up to right now. So 7.8% uptick, and look at that sharp spike really coming in after the earnings were reported. Let's talk about the earnings as well, because you do have deposits that have risen, net profit that's risen about 10% thereabout, and even the double-digit loan growth is also something that you're seeing right now. Let's also get in, Shivam, with some more details when it comes to the fine print of the earnings as well.
Yes, Indian Bank has posted a strong quarter one FY27 numbers, and starting with the first metric, which is the gross advances, we have seen a strong increase in that of around 14%, and this strong increase in the gross advances was mainly led by the growth in the RAM segment, which is retail, agriculture and MSME segments. However, in the retail segment, there has been a degrowth, slight degrowth in personal loan book. In terms of deposits also, we have seen a strong growth of around 13.47%, which was mainly led by the by a improved mix of Kasha share, which was standing around 39.73% in this quarter. In terms of net profit also, this company has recorded a strong growth of around 10%, which was mainly due to the lower operating expenses. And in terms of asset quality also, the GNPA has reduced, and also the net NPA has also been remained flat of around 0.15% in this quarter. Apart from that, if you take a look at the net interest margin, that has improved to 3.1% for the bank, and also the other financial metrics such as borrowing cost to income has seen a better ratio in this quarter. So overall, the results for the Indian Bank has been strong in quarter first of FY27.
No, absolutely, and thank you so much, Shivam, for joining us with that entire update coming in. So, a couple of things that they've mentioned when it comes to the exact opposite of a silver lining, a little bit of a downtick that you could perhaps be penciling in. So, that's the provisions when it comes to ECL as well, and that's something on the expected lines, of course. Other than that, Middle East war impact is also something that they've commented about. That said and done, the net profits risen about 10%, double-digit loan when you're looking at the loan growth as well. And when you talk about the deposits as well, like I mentioned, that's also risen. So that stock is doing quite good for itself right now. Let's also move on and get you an interesting update. Now, China has taken a big step when it comes to the global space race, and the country has successfully launched and recovered the first stage of its Long March 10B rocket during its maiden orbital mission. But unlike Elon Musk's SpaceX, which lands boosters vertically, you do have China that used a giant sea-based net system to catch the returning rocket. The breakthrough makes China only the second nation to achieve controlled recovery of an orbital class booster, marking another milestone in its push to build reusable space technology. And that's a very interesting update as well coming in. On your screens, you do see a snippet of how the process really works about as well. But moving on then, let's also get you some important commentary, and Nissan has officially unveiled the all-new Tecton SUV as well. NDTV Automate had a chance to talk to the management, the India president as well. Let's listen in to what he then had to say about the export target and what is the future when it comes to hybrid vehicles.
I'm joined by Thierry Sebak, President of Nissan Motor India. Thierry, thank you so much.
Thank you, Sid. Thank you for being here with us to celebrate this amazing milestone and for this opportunity to speak to you.
Yes, thank you so much for inviting us. We are here at the world premiere of the Nissan Tecton, and first of all, congratulations on the launch of the new Tecton. And you chose a different route where markets and companies, they're unveiling cars and then waiting for the pricing. You went straight up with the pricing out there. What was the strategy behind that?
Look, it was very important for us is that what we have learned that today, really as a brand, it's important that we bring clarity, transparency, and also speed to the market. And that was the intention. Today, as you said, world premiere for a car from India to the world. It's quite a big symbol. It's a big status because what we are trying to say is that our strategy of what we have set for India is that for India and India to the world as a brand is something that we want to make sure we execute it in reality. So with that said, this is why it's important today is that we make sure that we launch the car. It's already available for booking, and you can get delivery as early as next week.
So I must say that the speed was of the essence for sure. But if we talk about speed in general, you also talked today about the export commitments that you're, doing for India. Tell our viewers, what are the kind of targets you've set for this year in terms of exports from India to the world?
Look, there is a set targets. We export few vehicles from India to the world. Definitely, we want to reach 100,000 and above. We've done that in the past. So now I think we are having the right foundation. Definitely, all depends also, we are exporting to 60 market. Middle East market is quite a large market. We've had to adjust a bit our production because of the current situation, but we are quite confident that with the demand that we will get on the Tecton, we can reach that quite easily.
Now, they've launched the Tecton at a starting price of 10.49 lakh here in India. It's a very competitive, compact SUV segment. How are you looking at the market? Because this year's flooded with your rivals also getting some new launches out there. How are you positioning the Tecton there?
Yes, it's quite a competitive segment, but we are very confident about the product we are bringing. This car has been in the making for a couple of years. It has been fully designed by Nissan, fully tested by Nissan. We've really put a lot of, I would say, work behind in terms of the inspiration of the flagship of our brand. We've brought in all the technology, all the best of what we know. With 75 years of SUV experience, we've put it in this car. So this is number one. Two is that we are working very closely with our dealer network. We are expanding, we are upgrading, we are making sure that our touch points at every level is world class. So we are really having quite a very good, I would say, walk on the car in terms of engine, in terms of colors, in terms of specifications. We have just launched also a very special offer for our loyal customers. So we are using our finance arm to ensure that we provide, I would say, compelling offers in the market. If you put it all together, we believe that we are going to be quite successful, and we're going to make sure we make our mark in this segment.
Now, my next question to you is, you talked about the dealer network. Of course, you're expanding all of that. But if I specifically talk about the car as a product, what is that one feature you think will attract your consumers the most?
Look, it would not be fair to say one. I would say the package. Yeah, look at the design. It's a very attractive design. Yeah, you see petrol, I would say inspiration. You go into the interior, the finish is really I would say exclusive. Then you put at the technology using my Nissan app today. You can.
All right, and there you go. So that's Nissan Tecton for you as well, and that's the word coming in from the management as well. Let's also move on and put the spotlight away from the markets then. Through the journey of the JRC and NDTV campaign, Child Marriage Free India, we brought you stories from India's villages and from the farthest, most remote corners of the country as well. Today we turn our lens on India's cities. In fact, for every 2 girls married off in villages, 1 girl is married off in an urban space as well. An alarming reality that you're looking at that is echoed by the latest National Family Health Survey, or NFHS 6 as well. This is a crime which often exists within touching distance of our own lives. We look at a story from Pune where a girl was saved from child marriage.
Every single day, lakhs of people arrive in our cities to chase their dreams and build their lives. Yet, within the folds of these concrete jungles thrives the insidious reality of child marriage. More often than not, it impacts girls and women known to us, who occupy the same spaces as you and I, removed just a degree or 2 from our own lives. 16-year-old Vaibhavi is one such girl, living a stone's throw from the bustling IT hub of Pune city. She was on the verge of being married off to a 25-year-old man when she was rescued in the nick of time.
एक्चुअली एक मेरी फ्रेंड है जो अहिल्या नगर में रहती है, तो उसने मुझे ऐसे ही कॉल किया था शाम के टाइम पे और हमारी बात चल रही थी, तो उसने मुझको शेयर किया कि अरे मुझे ना हल्दी में जाना है करके। तो उसको मैंने पूछा किसकी हल्दी है, तो बोले नहीं मेरी बाजू में ही रहती है एक लड़की और उसकी शादी है और उसका जो एज है वो कम है। तो उसको पता ही था कि मैं काम करती हूँ और उसको ये भी पता था कि बच्ची की जो शादी है वो पूना में होने वाली है। मैंने मेरे NGO को बताया इसके बारे में और उसके बाद मैंने चाइल्ड लाइन को इन्फॉर्म किया, CWC को इन्फॉर्म किया और इनको इन्फॉर्म करने के बाद हमने वहाँ पे जो स्पॉट था वहाँ पे हम चले गए। वहाँ पे जाने के बाद हमारे साथ में चाइल्ड लाइन का टीम था और जैसे ही हमने इन्फॉर्म किया था कि वहाँ के स्थानिक जो पुलिस थे वो वहाँ पे थे, ग्राम सेवक था, BDO था और देन और भी आंगनवाड़ी सेविका जो थी वो भी हमारे साथ में थी। हम लोग सब वहाँ पे पहुँचे और बच्ची का जो एज था तो सबसे पहले हमने वो वेरीफाई किया। देन जो फैमिली थी उनको बताया कि बच्ची का जो एज है वो कम है, तो ये चाइल्ड मैरिज होता है, और अगर आप चाइल्ड मैरिज करते हो तो आपके ऊपर एफआईआर दर्ज हो जाएगी। तो उनका काउंसलिंग किया दोनों भी फैमिलीज़ का, और फैमिली को समझाया, देन वो समझ गए कि नहीं बाबा कि हमें चाइल्ड मैरिज नहीं करना है।
The collective action of Child Helpline, the Gram Sevak, the Block Development Officer, Indapur Police, an Anganwadi worker and the local NGO, Committed Communities Development Trust or CCDT, a partner NGO of the Just Rights for Children network, stopped the wedding before it could happen. As a result, no arrests were made. Today, CCDT continues to follow up regularly with Vaibhavi and her family to ensure her safety, education and overall well-being. Vaibhavi is still living safely at home with her family and is now preparing for her Class 10 exams. Child marriage is a crisis thriving right inside our urban centers, fueled by migration, economic pressure, and a lack of awareness and action on our part. Ultimately, child marriage is a crime and a grave violation of human rights, regardless of its geography.
ग्रामीण में तो केसेस वैसे आते हैं हमको, लेकिन ऐसा नहीं कि शहरी भाग में नहीं आते। शहरी भाग से भी केसेस हमको आते हैं। शहरी भाग में भी जो भी वहाँ के जो ये है कम्युनिटीज़ वगैरह है, जो कि रूरल मतलब जो चाल वगैरह जो बोलते हैं, उस एरिया के भी लोग कैसा रहते हैं, उनको ज़्यादा इन्फॉर्मेशन नहीं रहता है, या फाइनेंशियली उनके इशू रहते हैं, उनको फाइनेंशियली वो बच्ची को सपोर्ट नहीं कर पाते, तो उनको दिमाग में क्या रहता है कि बच्ची की शादी करवा दो, और जो है बच्ची की शादी करवा दी है तो उनके ऊपर से जिम्मेदारी निकल जाएगी।
Vaibhavi's story tells us that vulnerable girls can be protected and given a second chance at childhood when vigilant local communities and civil society networks work together. Each one of us can make a difference. Stay alert to the warning signs in your own ecosystem. Your one act of vigilance can rescue a life and save a childhood.
Co-powered by Suzlon, good energies that work. Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed, you know. Shifted in the shawl outside.
NDTV Profit. You're watching Small Cap Buzzers with me, Varsha. Now, let's see what's on the show today. What are we going to discuss today when it comes to the small cap pack? You have Kelton Tech, wherein we'll be joined by the management. Now, they won mandate from a leading UAE enterprise group. They also formed JV with Kuwait-based Action Energy company. They also launched Phoenix AI for legacy application modernization. So, we'll speak to the management with all those respect. Now, the next stock which we are going to discuss with our fundamental manager as well, you have Muthoot Microfinance, wherein they've announced their Q1 FY27 update, wherein we have seen a strong growth in AUM and disbursement. They've hit highest level since October 2024. The stock has seen highest volume since April 2026. The other stock which we are going to discuss is Lux Industries. Now, what's the buzz over here? If I want to talk about, they've signed exclusive brand licensing deal with Reebok trademark in India. The stock has snapped 3 days losing streak. It's the biggest single day gain since April 2026. The next stock that we are going to discuss is Kothari Industrial Corporation. Now, there is groundbreaking ceremony for Adidas footwear in Tamil Nadu, which is today, and the stock has seen highest level since April 2026. We're going to speak on this also. Lastly, we're going to also talk about Stellian India Fluorochemicals. Now, we all know the story about this small cap stock. It's seen highest level since Jan 2026, has gained 102% since April 2026. So these are all the stocks which we are going to discuss. But before that, let's see what markets are doing. Well, Nifty is up almost 0.9% up, a good day I would say, but we have seen almost 57, I would say 0.2% gain from low. Let's see which are the stocks which are buzzing when it comes to the benchmark. You have Jio Financial Services, HDFC Life, Adani Enterprises, Infi, who are contributing for the benchmark index. While the losers, on the losers side though, you have Dr. Reddy's. We all know the impurity which was found in the semaglutide API, and hence we are seeing the stock is under pressure. Yesterday also Dr. Reddy's was down almost 5%. You have Eternal, Bharti Airtel and Nestle which are sulking. But let's also talk about the sectorial analysis, because I think IT is the sector of the day, I would say. I think IT, FMCG, realty, metal, all are buzzing. But if I were to talk about Nifty Bank, is up almost 1.31%. Nifty Realty is up almost 2.76%. So barring FMCG and pharma, every sector or every segment I would say is in positive. But yes, IT we have seen a good ramp up. This is of course because the good commentary coming from the TCS, and we have seen the number of course was in line, but good commentary coming from TCS, and hence we are seeing IT sector of the day. On to the broader markets, of course, I want to talk about some of the small cap stocks, which are in focus. You have eMudra, you have Nile, Gandhar Oil, Apollo Pipes, Stellian, Kothari Industrial. All these stocks are buzzing when it comes to the small cap sector. Gandhar Apollo Pipes is up almost 4% in trade. You have Kothari Industrial also buzzing, of course, on the back of volumes. Volumes are trading at 13 times of its 30-day average. On the losers side though, you have D-Link, you have Imami Realty, Radhika Jewel, which are under pressure. Not much on the losers side, but yes, D-Link is down almost 7% in trade. You have Imami Realty also sulking in trade. You have Radhika Jewel, it's down almost 2% in trade. But one stock which is in focus is of course Kelton Tech Solutions. As I was saying, the stock is in focus because they won mandate from a leading UAE enterprise group. They formed JV with Kuwait-based Action Energy company, and they've also launched Phoenix.ai for legacy application modernization. But what does this mean for the company? What's the opportunity size? What's the outlook looking like for the next 2 to 3 years ahead? To tell us more about that, we are here joined by Mr. Niranjan Chintam, who is Chairman and Whole-Time Director at Kelton Tech. Sir, welcome at NDTV Profit. Always pleasure to have you. I'll be starting with the UAE order win that you had. What's the revenue potential and execution timeline for this project?
Good afternoon, Varsha. Thank you for having me. So I think the leadership at Action Energy has already identified that the target is about $1 billion, and we're aiming to get about 5% of that. So that is over a period of 3 years is where we are trying to target that. So we're just making entries there, and we felt that Action Energy, with its local presence there, the customers' relationship they have, the execution capabilities, that was the right company for us to partner with them and go after the IT solutions that Kelton is capable of in the AI, digital transformation, cloud, and also the Optima, which is specifically what the digital oil field is what we are targeting for the current customers of Action Energy. So that is that 5% of $1 billion is what we're targeting.
Understood. Sir, are you seeing increasing demand when it comes to AI-led digital transformation from the Middle East?
Absolutely. Middle East is at an inflection point currently. So where they are looking for operational efficiency at the same time and modernization of their digital oil field. Just to give an example, right? If a well goes down, it takes for a technician to go to the well, it takes about half a day. And then they realize that what the problem is. But we're using a solution like ours, we can do preventive maintenance of that and get notified before something catastrophic happens so that you can take actions and take a well offline as a scheduled maintenance versus after it's going down. As you are aware, right, every day that a well is down, it's millions of dollars in revenue that the customers lose. But with a solution like ours, it's easy for them to identify it beforehand and then fix it and take it offline when they are doing it versus it goes down.
Right, got that view. Sir, Kelton has also announced multiple AI initiatives. Are you now transitioning from a service company to an AI-led platform company?
So we do have service offerings that we're going to continue to do. But as we have seen as the business is growing and seeing the demand in the market, example that you talked about, the Phoenix AI, right? That was a customer demand. Initially, the customer came to us and said, hey, we want to modernize our current code base, which was in a third generation to fourth generation, fifth generation AI-led kind of a product that they wanted to have. And they said they already identified a vendor that can do that. Once we started investigating, researching that particular product, we realized that they were at best doing 20% of the migrations. So we got back to the drawing board, research, and built a platform that can do 80% of the code migration. And this took a lot of trial and error and agentic AI-based solutions where it's self-learning, and that really helped us and the customer to provide that solution. So then we felt that this could be a demand for the broader industry as such, where they have legacy code that they want to modernize and or upgrade, and we could use our solution. Just to give an example, right? The customer that we were doing this modernization, there's a 4 million line of code. And typically, right, all these big companies charge about $2 per line from for converting from legacy to the modern code base. So that gives you a perspective of how long it takes to do it, as well as the cost involved. Whereas we can do it probably way cheaper than what the big boys can do.
Right. And sir, how much of future growth do you expect to come from AI-led offerings?
So AI is the latest buzzword that everybody's talking about. There are point solutions that we are providing and everybody is providing. So AI is going to be the future. So every company that is out there is making investments in AI. And because of that, the demand for companies of like us is going. And we are always in the cutting edge of it. And we have many customers that we have provided AI based solutions for them. And for us, AI is not just a buzzword, right? We take AI to the core. So it's built from ground up. We make sure that it's not just a what do we call a wrap around. You put on AI and say, now we have AI solutions, but we take AI to the core. So there is going to be a lot of demand in future and a lot of investments that companies are making. Whoever is not making now, they will have to do it in 6 months down the road anyway. So we have a leg up there where we have provided live solution to our customers. And we believe that there's going to be a strong demand for AI based services and AI based product offerings that we have packaged and we are now trying to sell.
Right. And sir, over the last 2-3 years, I'm seeing the sales growth for you. It's been in single digit, like hovering around 8 to 9%. How much growth are you pegging in when it comes to FY27 and FY28, considering the new JVs that you have done and the AI offerings also for FY27 and 28? What's the internal target when it comes to the revenue growth?
See, we will be in line with whatever we have projected, Varsha. We don't give out projected revenues at this point. We haven't done that to date, and we don't want to do that. But I would say that we would be at par and or beat to what we have done earlier. We are about 10% is what we've been doing the last few years, and it's going to be more than that is what I would project. But beyond that, I don't want to give a certain number to you.
All right, got that view. Well, thank you so much, sir, for joining in and having a conversation with us. Thank you so much.
Thank you, Varsha.
But moving on, June mutual fund data is out and it shows investors doubling down on equities with strong inflows into mid, small and flexi cap funds. But Alex is here to tell us more about that. Alex, how are the numbers, good or bad?
You can't call it necessarily one of two things, but it's certainly an improvement from the month of May, where there was a pretty substantial fall in the active equity inflows. But let me start from the broader view. If you look at the overall inflows/outflows into mutual funds in the month of June, there is an outflow of 52,948 crore rupees. But that needs to be seen in the context of what usually takes place at the end of the quarter. We're looking at June data, and so therefore what normally happens is an outflow from the debt funds. And so fixed income mutual funds as a whole have seen an outflow of 1.1 lakh crore rupees. That's had a bearing on the overall inflow/outflow from the industry as a whole. But the more important data that we look at on an ongoing basis is the inflows into active equity. And they have come in significantly higher than the month of May. They stood at 28,973 crore rupees in the month of April. They're far from the peak that we've seen over the last several months, but it's still a substantial improvement. In the month of May, in case you've forgotten, it had dropped to as much as 22,907 crore rupees, which was the lowest level of an inflow into active equity in at least 1 year, if not more. So if I look into the internals of that, this is where you have multi-cap, flexi-cap, mid-cap, small-cap. Quite a few of these schemes have gotten robust inflows. FlexiCap, for example, has gotten inflows of over 5,200 crore rupees, and that is comparable with the previous month where they've gotten inflows of about 5,000 plus crore rupees. Small cap and mid cap have gotten 5,600 crore and about 6,100 crore rupees in the way of inflows respectively. So that's pretty respectable as well. Multi-cap has gotten inflows of over 3,000 crore rupees. So across the board, for most schemes, you've actually seen a pretty decent inflow. For hybrid as a category, and this is a growing category and an important one at that, you've again seen inflows of about 12,892 crore rupees, which is roughly about 2,500 crore rupees more than you saw in the month of May. Multi-asset as a category is an important one because a lot of people have been gravitating towards that, and that has gotten inflows of 4,800 crore rupees as well. That's pretty good. What else do you need to pay attention to? Well, index funds this time around have seen an outflow of 58 crore rupees for whatever reason. Actually, people might be taking money off the table. It's pretty normal. But interestingly, other ETFs have seen a very, very strong inflow in the month gone by. That number stood at 13,237 crore rupees. I'm going to look at this number again. This is, 13,237 crore rupees. And that compares with an outflow in the previous month. And I'm looking at this number at 620 crore rupees. So if you think about it, your Nifty 50 ETFs or your Nifty Next 50 ETFs or even the broader gauge ETFs have gotten inflows, and substantial ones at that, during the month gone by. Of course, this also includes other ETFs like the silver ETF and the like. So that's pretty robust. And the other last thing that I will mention, of course, is the amount of money that has come through NFOs, which is not very much at all. In the equity category, just 87 crore rupees has come through in the way of NFOs, that's new fund offers. And so therefore, most of the money has come through in existing schemes, which is another good sign. Because at 2 o'clock, you will see the call by the Association of Mutual Funds in India, and that's when you will get the SIP data that comes through. And it's important to track whether or not that has remained intact. And it did remain more or less intact in the month gone by. I'd be curious to find out what that number is. If I were to hazard a guess though, Varsha, I think that number will stand at above 30,000 crore rupees, which should be pretty robust.
All right, got that. Well, thank you so much, Alice, for joining in and giving all the details. But with that, small cap heat continues after this break. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Welcome back. You're watching Small Cap Buzzers. But moving on, Lux Industries, let's pull that chart up. The stock is buzzing on the back of Reebok partnership that they have done. In fact, it has snapped 3-day losing streak, rising over 5% in trade. But to speak more about that, we are here joined by Parth, who will give us more details.
Absolutely, Varsha. This Lux Industries has hit a new 1-month high today and has recorded the biggest single-day gain the stock has seen since the month of April 2026. Now, the biggest trigger behind this move is the Reebok partnership, which the company has recently announced. Well, Lux has signed an exclusive licensing agreement with Reebok for India, under which the company can now design, manufacture, and sell Reebok's innerwears and thermals as well. It covers both men's and women's products as well, and will be effective from FY27. Now, this is important because it will give Lux that access to that globally recognized sportswear brand, strengthening their premium performance wear positioning going forward. It will also expand them beyond their value and mid-segment innerwear products as well. Now, the one catalyst about Lux Industries is their multi-channel expansion. The company is growing their presence from wholesale currently to across stores, e-commerce and quick commerce as well. They operate on an asset-light, franchisee operated model, and for their exclusive stores, and they have a dealer network of around 1170 plus dealers with an attrition level of below 1%. The company currently receives around 4,000 orders daily, and the management is targeting a sales value of around 200 crores yearly in the next 3 years. But one concern about Lux is that their revenue revenue is growing, but the margins are not expanding along the same lines. The new launches are giving the company that premiumization benefit and is driving their average selling prices up, but the higher cost in product developments and advertisements as well is what is pulling their profits down. So this is the one concern that the company has right now. So the entire outlook about Lux Industries is that revenue is expected to grow over the medium to long term, but margins is something that they need to be working more on.
Right. Well, thank you so much, Parth, for all the details. With that, let's also invite fundamental guest for the day, Gaurang Shah, who's Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. You know, just wanted to understand about Lux Industries. What should investors do, and what's your view on the overall sector as well as on Lux?
Thank you so much, Varsha, for having me on your show. Good afternoon to all your viewers. A small disclosure, Varsha, which is mandatory, that all recommendations that I'll be sharing with you on your show this afternoon, they are part of our fundamental research team recommendation. Again, from a long-term point of view, our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might hold their investment interest. So I think the entire lingerie stroke innerwear segment or sector looks quite promising, especially with the kind of news flow that we just recently heard with Lux Industry and Reebok tie-up. I think it gives a premiumization edge as well as a global kind of a footprint. Of course, whenever you get into these kind of partnership or arrangements, you need to spend on promos and advertisement expense. So from a short to medium term, that might look elevated, but as you settle down and as sales pick up, I think that will add to the complement. We used to cover Page Industries as one point of time, Varsha. I don't have clarity whether we do have positive coverage right now. And more importantly, the sense of hygiene, Varsha, has reached the next level, especially not amongst the daily wear or the entry level kind of innerwear. It has gone to the mid to high end segment. And that is actually adding to the top line and profitability of all those companies which have a niche presence in this particular segment. For example, Lux Industries there, Page Industries there. So this sector is definitely, and more importantly, I think as we penetrate deeper into from metros, tier 1, tier 2 cities, Varsha, to maybe semi-urban and rural India, I think the entry level and mid-size segment level products will definitely find a lot of positive traction.
Right, got that view. Well, moving on, Kothari Industrial Corporation is next stock which is in focus, is buzzing because of their arm is setting up a state-of-art footwear manufacturing facility in Karur. But, to give us more details on that, we have Jasmeet with us.
Well, Varsha, thank you for that. As rightly said, the stock is in focus on the back of that new state-of-the-art facility that they're about to open in Karur. But if we get into the details, let's quickly understand what does the company do. Well, the company operates in multiple segments and it's been incorporated since a while. Now, the company's majority of the business comes in from the footwear and the fertilizer segment. And to expand the footwear, they have also started with this new state-of-the-art facility. If you look at the stock performance, the stock is about 20% in a month. And if you look at the levels, it's the highest level since April as it recently got listed. Now, in terms of the recent news, well, the company's arm is setting up an state-of-the-art facility for the Adidas footwear, where they'll manufacture the footwear in that particular facility. It's in Karur, and they have the groundbreaking ceremony today. That's 10th of July. Now, in terms of the key financials, we also make a note that over FY26, the losses of the companies have expanded from negative 16 crore in FY25 to negative 72 crore in FY26. Now, in terms of the top line, but that top line has doubled. So we do see growth coming in, but at a higher cost, and the losses have been expanding for this particular counter. In terms of top line, we do see that the overall top line has more than doubled. It's up nearly 116% from earlier 87 crore to rupees 178 crore in FY26 alone. So we see a jump coming in of over 112% in a single year. But if you look at 23 to 25, we are seeing a jump of roughly 500%. So we do see the top line growing exponentially, but the bottom line is something which is something to watch out for that grows going ahead. If we look at the other key aspect, overall short-term borrowing for the counter has increased from earlier 5 crore to current levels of roughly 53 odd crore, and the net flows have turned negative. So right now we are seeing a mixed picture, but the top line growth is something that will be in focus. And now when the company has also launched the state-of-the-art facility for Adidas, it's something to watch out. Will it be a turnaround from here, and how would the stock react?
All right, got that view. Well, thank you so much, Jasmeet, for all the details. Gaurang, your view on Kothari Industrial Corp?
Well, the new areas where the company is planning to venture will possibly add positivities over a longer period of time. But as Jasmeet was pointing out, negative cash flows, rising net losses, high top line numbers are giving you a positive traction. Manufacturing of a facility in Karur down south of Adidas will throw in positivity. But the stock has rallied, I think, almost 20% over the last couple of weeks, if I'm not mistaken, Varsha. So one needs to be a little bit cautious. Don't have any specific coverage on Kothari, so I won't give buy, sell and hold, but there are a couple of red flags.
Got that view. Well, thank you so much, Gaurang, for joining in and having a conversation with us. Pleasure having you on the show. Thank you so much.
Thank you.
Well, that is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to Ask Profit afternoon edition coming up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition, a show that will solve all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and take all those queries that you start sending in. So do start sending those queries on numbers that is flashing on the top of your screen. You can also call us on the landline number that's also flashing up there as well. But as we continue the momentum for the markets today, important to highlight the some of those moves that are doing very well today. Let's pull up the Nifty 50 first. 24,200 continues to be an important level for the markets right now. And when you look at the heat map also, tech does continue to feature on some of those moves that are doing well. There are a few, stocks which were beaten down, like Jio Finance, which have also recovered today. HDFC Life, Adani Enterprises, and BEL have actually overtaken some of those tech moves, while the larger picture continues to be in the green. Almost 40 stocks in the green for now. Dr. Reddy's continues to be another downtick for this counter. Eternal also selling from the highs, so is now down 1.3%. But the sectoral heat map too also gives you that perspective today. It's been largely a 3% up move at the start of the day for IT that has now slipped to 1.7%. PSU Bank though, after the Indian bank results, have been on a stellar move. Now the biggest gainer. Nifty Realty also up 2.9%. India Defence, Metal and the Nifty Bank are some of the other gainers as well. But the advance decline ratio has been something that we've highlighted throughout the day. It was a 4:1 in favor of the advances versus the declines. And when you pull up that counter now, that is the other important perspective as well, because you have seen consistent moves on this counter, and that has now just become a 3:1 kind of almost gain. So still favoring the advances by a mile. There have been just a tad bit of increase of almost 150 to 200 stocks that are declining right now. Mid cap, small cap also will show you this perspective also visible across. The gains are outperforming the benchmarks just by a tad bit for the mid cap 150. Small cap 252 has been on a good move, but the BSE 500, because as I mentioned, it's been a day of individual movers today. You saw at the morning, Shopper stock was up almost 11%. That still continues to do well, while just slipped a tad bit. Although there have been gains being built on Zensar Tech. And Indian Bank, as I mentioned, up 9.3%, and that's dragged the whole individual PSU banking basket along with it. So has Kalyan Jewellers, up, still continuing to be up today. And let's also quickly look at the Indian Bank right now. As we mentioned, the 9% up move that came after the results came post around 12:30. So you saw the midday spike for Indian Bank, and that has brought a good rally. The PSU banking index also, if we can pull up, because now the top gainer 3.2% up on the Nifty PSU bank index. You're seeing that up move there. And let's look at the constituents also before we start taking all your stock related queries. So consistent moves there visible, and Union Bank, Bank of India, Bank of Maharashtra, all of those counters are now up 4%. While Canara Bank actually is up 3.6%. Bank of Baroda, UCO Bank also doing well in trade today. But let me welcome in our guest now for the day, Ruchit Jain, Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services, and Lancelot Dicuna on the fundamental side, CIO, ValueX Wealth Connect LLP. Well, gentlemen, both of you, very good afternoon to you, and thank you for joining in today. Let me go across and take the first query. And Lancelot, actually, this one's coming in on Indian Bank. After the results, of course, a stellar move, but by any chance, if you had a look at the results, the provisions have increased, but there have been good reasoning given by the management. Are you also seeing it in a similar trajectory, and what's your top pick in the PSU banking space?
So, good afternoon, Puneet. I think yes, the results have been good and encouraging. So we should see, maybe the full year should end up a lot better, especially with the global scenario changing and shifting. So I think from the banking system, especially the PSU banks, I would look at SBI as the biggest beneficiary of all the good news that will be there. And so given that valuations of SBI are fairly reasonable as compared to maybe HDFC and ICICI and Axis, I would say that in the PSU bank, one can look at accumulating SBI.
SBI, got that view. And, that continues to be one of the important ones, of course, as we look at the SBI Funds IPO. Also, that will be another kicker for SBI as a whole in terms of cash being received as part of that IPO. But the next question now coming in, and that was Bhaskaran's query. Hopefully, that answers your question, Bhaskaran, on Indian Bank. But Siv Kumar from Bengaluru is actually holding HDB Financial and wants to hold it for the next couple of months. Asking if he should continue to do so. Ruchit, good afternoon to you. He's holding at 730, which is very close to the IPO price. But this counter has seen recovery from the lows. Does it continue, or are you seeing some kind of resistance again at that 730 to 750 mark?
Recently, we have seen price up move supported by increasing volume. The stock is right now trading above all its crucial moving averages. 700, I think, has become a good support base for the stock. So in the short term, till it is above that 700 mark, the near-term trend remains positive and hence can hold down.
Got that view, Ruchit. But the next question, and this one's from Navendu Sharma from Patna, on Sona BLW. It's a counter that started to see a lot of up move as we wrapped up the month of June as well as Q1. So let's look at the 1 month picture of Sona BLW. He's holding shares roughly and at the similar level, has been holding it for a while now, and there you see the 13% up move just in the last month or so. But Lancelot, this counter has seen a fresh leg up after a really long time. Would you recommend Navindu to continue holding his shares, and is it a good time to add more too?
So, if you really look at valuation, the stock is trading at about 63 times, its trailing earnings. And that is quite an expensive, valuation. However, profit growth has been good. We've seen sales growth also grow. This company has grown at almost 27 times, 27% every year, profit growth about 15%. So the track record has been good, and going forward, since you're seeing an increase in the in the commercial vehicles as well as the passenger vehicles, business will grow for them, and so I think one should remain invested at this point, but maybe not add anything unless the valuation corrects.
Fair point, Lancelot. And next one, and viewers, you can also call us on the numbers that are flashing on the top of your screen. The landline one is the one you have to use to pick up your phone, speak to us as well as our guest as well. But next one's from Shiva from Bengaluru. He's holding BEL at 419. Now, Ruchit has actually taken quite a big position of 2,300 shares in this one. And yet again, that counter seeing buying at that 400, 405 odd levels. Is this yet again seeing a momentum back to that 450 odd level, or how do you look at this move right now?
Near-term trend for the stock is still sideways. We have seen a good amount of consolidation over the last 3-4 months in PL. But good thing is that post the recent correction from the highs, the stock is quite close to its lower end as the support end, which is around 400. So till 400 is intact, the downside seems to be limited. On the move, we need to see whether the move comes with a volume anytime going ahead. 440, 450 is the resistance zone to watch out for. So hold on at current levels. You can keep a stop loss below 395 and just review the position when the stock comes around 440 to 450.
Got that view, Ruchit. But the one space that's been very interesting is the chemical space, and we've been discussing in all of our shows how that has seen value buying starting March as well as in Q4 essentially. April, May, all of those moves started to come through for the chemical names. So Naveen Fluorine, Sudarshan Chemical are two counters that Rajesh from Hyderabad currently has on his radar. He wants to basically enter this counter, either of those, with the long-term view, and asking if there is any other ones apart from these that look great as well. Lancelot, I think one of the bigger ones at this particular point of time has been that the last 3 to 4 years there's been negligible returns, but only selective stocks like Deepak Nitrite amongst others starting to see moves. How are you looking at this one?
So I think if you look at Naveen Fluorine or Sudarshan Chemicals, they're both trading at very high multiples. And given that we are just seeing the beginning of some improvement, we still have to wait and see how it plays out over the next 6 to 8 months. But the valuations have run up in advance of expectations that earnings will be good, and that's why it's a little expensive at this point in time. As far as Deepak Nitrite is concerned or other companies in the chemical space, I think one should probably look at, a company called Aether Industries. They're also looking attractive at current valuations. And Deepak Nitrite also should do better at the current valuation. So these two can be accumulated even at the current prices.
Got that view. I just want to quickly address the SIP numbers also. We will, of course, Alex addressed the main mutual fund numbers in the previous show. The SIP contribution has now come in at 31,781 crores. That's just coming in from, of course, the conference that started at 2 o'clock. But very importantly, that the momentum has currently continued, especially on the SIP book. So we've been seeing a number roughly between 30,000 odd crores per month on the SIP side. There have been some cancellations. We've talked about it in this particular quarter as well. But that SIP contribution has actually increased above the 31,000 mark now. So it's been a steady current run rate that we've been maintaining at this point of time. So just wanted to point that out. And we'll, of course, get you more details. But from the Amphi press call, this is one of the important numbers that we track as well. But get back to your stock-related queries. The next query is on Dixon. Now, this counter continues to be in focus on the back of an approval for the Vivo JV finally received after a 19-month hiatus. The company had announced an exchange filing on 15th of December in 2024 regarding the joint venture. Now has gotten the government PN3 approval. But Ruchit, Sunita from Hyderabad actually booked some profits on this counter at 14,000 and asking if she should enter the counter yet again, seeing the current news flow, or she should go for some other counter like E2E network for the short term. How are you looking at this one?
I think in Dixon Technologies itself, you can keep a buy and dip strategy. Prices have already seen a pullback in last few trading sessions on anticipation of these news flows of JV. So that's why we have witnessed some sort of profit booking from the highs. But the stock has formed a very support base around 12,500 to 12% range. So I would suggest to buy and dip approach and decline forward.
I think, Ruchit, we lost you in the last 10-12 seconds odd, but was your view that Dixon Tech looks good even at this price point in terms of going back into it? Is that the correct understanding?
On dips around 12,500. So I think 12,500 is the support now. So if you get the stop over there, then buy out.
Got it. Lancelot, I also just want to take a quick fundamental view as well, because this will incrementally add a lot of volumes as well as essentially revenue. So company back on that growth focus. Anything that you like in Dixon right now? Is it a good buy?
So I think the stock has already run up, significantly in the hope or anticipation of this news. And it's trading at about 57 times trailing earnings, which is relatively on the higher side. However, you have to see that this is one of the few companies where growth is also assured in terms of, they will grow their existing business, and as well as this new addition will add to their both volumes, revenues, as well as earnings. So I think one should wait in terms of valuation, wait for a little lower price to buy into the stock. But for sure, over the next 3 to 5 years, it's a growth story which one can look at accumulating.
Both fundamental and technical view converging on this particular counter. But let's go across to Bengaluru now. Pramod is dialing in for a stock-related query. Pramod, good afternoon to you. Welcome to the show. What's your query?
Yeah, good afternoon. I bought Sirma SGS shares in January 100 quantity at the price of 825.
Okay.
Now, actually, I wanted to buy like 200, 300 more shares of this. Is it the right choice? Because I have seen the PE, it's almost like 85.
Right.
So I have a time horizon of 5 years. So will it be okay if I add 200, 300 more shares of this?
And Pramod, when you entered this counter, of course, you looked at the fundamentals. Is that the correct understanding? Because you of course, gotten at a very good level, looking at where the shares are now. You also gain good profits. So did you look at the fundamentals at that time in January?
Yes, of course.
Okay, got it. And Pramod, I hope you heard Lancelot's comment on Dixon as well, because valuations in the EMS space continue to be important. But Lancelot on Sirma SGS has been one of the biggest winners, right, in the last 1 year or so. Stocks up over 100% at this point of time. But what would you recommend, Pramod? He's already holding 100 shares at 825. Should he continue to hold those? And is it a good time to buy? Is his question now?
Yeah, I think it's a good time to hold these shares, Puneet, because you are seeing visibility in terms of growth going forward. And both on the revenue as well as on the earnings per share, we will see growth going forward. So, but at the same time, currently the stock trades at 86 times its earnings. And what happens in this kind of a high valuation, in case even you have 1 quarter of bad news, and this valuation can be hit very badly, in the sense a stock could correct significantly. So it's better to wait for a correction and then buy, because the company is one of the leaders in electronic manufacturing and RFID transponders and smart label technologies, which is mainly used in industrial logistics and pharmaceuticals. So it's a good company, good business, decent margins, but valuations are high, and then you will have to wait for the next round of appreciation to come in.
Fair point. Do you agree, Ruchit, on this one as well? Because I think for Sirma as well, there are multiple levels that got broken through in terms of resistance, and that move continues. What's a good level to buy according to you on the charts? Is it 1200 odd that you're looking at?
So we have seen that whenever there have been corrective phases, the 50-day MA has been acting as a good support, which is now around 1250 to 1310. So if one has to keep a buy and dip strategy, then any declines towards 1300, 1250 should be good levels to enter again.
Got that view, Ruchit, and hopefully, Pramod, that answers your question as well. But we'll take a very short break. Back again in a jiffy with the rapid fire on the other side. Do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow business.
Welcome back. You're watching Ask Profit right here on NDTV Profit. It's now time to start the rapid fire round in this edition of the show. As you also see another banking name come through in terms of earnings, but we'll get to that in just a bit. Lancelot as well as Ruchit, you know the drill. First one's from Shankar from Bengaluru. On Ashok Leyland, he's bought shares at 156, Ruchit. Wants to know if it's a good time to add more. We've seen buying from that 144 odd level. Is this a good time to buy more, Ruchit?
Range bounds to hold existing positions. Won't advise to go ahead.
Next one's from Bharat from Hyderabad on Indian Bank, and I think we took Lancelot's view. Ruchit, our viewers bought shares at 802. Should he still continue to hold given just today that up move we are seeing on the counter? I think we seem to have lost Ruchit in that connection, and probably get him back and just check with that as well. But let's take another question and then probably get back to Ruchit at this point of time. It's on Shakti Pumps. Jayashree from Coimbatore wants to enter for the next 1 year. Lancelot, is it a good time to enter?
Yes, you can look at entering this from a 1 to 2 year perspective.
Got it. Ruchit on Indian Bank, if you can provide us with that view.
Hold with stop loss below 800 target.
Got it. The next one, and I think we seem to have a connection issue with Ruchit, so we'll probably connect back with him. Next one that we're getting in, this one's from Deepak from Dubai. He's been holding on to Wipro, but at 304. Lancelot, what would you recommend? Because you're seeing good earnings from TCS. Is it a good time to average down on Wipro, or should he just exit?
No, I don't think he should average down. It's probably better to exit, depending on whether he has a very large exposure to IT or Wipro. If it's a small exposure, you can just leave it as it is. It's not going to it wouldn't make an impact on the portfolio.
Got it. The next one coming in, and this is from Sriram Raghuraman on Kelton Tech Solutions. He's bought this at a very early level. Lancelot, a smaller name, we don't discuss this too often, but he's bought it, at 17 odd, stocks trading at 15. Should he continue to hold?
Yes, he should continue to hold it.
Also on Vesuvius, Lancelot, Dilip from Kolkata is holding shares at 490 odd. Wants to know if it's a good investment to continue holding his 150 shares of Vesuvius.
I would think that he can hold the shares. It shouldn't be an issue.
The next one coming in, and we did answer this question, so let me ask another one to Lancelot on Transrail. Lancelot, this question keeps propping up on a lot of investors' radar. Our viewer Hemant actually bought shares at 653. Stock's been languishing at the 500 mark for a while now. Should he wait for some kind of indication before buying it back?
So I think if he's looking to buy it back, he should definitely wait for a longer period till it corrects further.
Got it. Well, that was the last question of the rapid fire. But Lancelot, thanks so much for joining in, giving us your views across a whole bunch of stocks right now. But viewers, out of time on this edition of Ask Profit, the afternoon edition. Thanks so much for joining in. We've answered 87 queries today along with the morning edition. So thank you for all those viewers who sent in their queries. Have a happy weekend. We'll see you on Monday, but stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Attenborough, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, engineering karke tum lipstick bechoge.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway. I think not even a month probably, right? And I literally cried that night.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because to just get a point of view as to how different jury members were looking at various participants and the rigor that they brought it to the.
Hello and welcome. Thanks so much for joining in. You're watching live from the NDTV Profit Suzlon studio. This, of course, is India Market Close. My name is Alex Matthew, and with me in studio, you'll see her soon, is Mahima Vachajani. Let's talk about how the equity markets are this Friday. It's a good picture. Let's start with the benchmark Nifty 50, and we're at the high point of the day, or very close to it. In fact, I wouldn't be surprised if we are at the high point of the day, up about 1%. Above that 24,200 mark and climbing, right? So you saw a little bit of a dissipation at the end of trade yesterday. I wonder if we'll hold out for the next 1 hour. That's going to be absolutely critical. One of the big talking points has been IT. And when you look at the heat map for the Nifty 50, so there you go. It's still trading with gains of about 1.9%, not the heady levels that you saw at the start. But take a look at the heat map for the Nifty 50. And right on top of the screen, you will see quite a few of them, actually. They've given up ground, but you still have Infi, Tech Mahindra, as well as Wipro in that top line. TCS seems to have lost a little bit of ground. HCL Tech as well dropped from the high point of the day. But what's leading the gains? You have Geofinance, it's looking good. HDFC Life is okay. Adani Enterprises recouping some losses from earlier in the week. BL is looking good. Reliance Industries, possibly the reason why you're having such a rip-roaring move for the benchmark Nifty 50. And then you go down the list and you see a few private sector banks also doing okay. You have Axis Bank that's up and about. You have ICICI Bank that's gaining about 1.8% or thereabouts. So it's a pretty picture. Quite a few stocks in the green. TCS, of course, trading with gains of just about 1.2% after starting the day with gains of well over 3%. So some of that ground has been lost. Let's talk about the broader markets, and let's start with the mid-cap index, the intraday chart, of course. We're at the high point of the day for this index as well. It's up about 1.2%. Small cap index also trading at the high point of the day, 1.3%. And that should tell you that the breadth is looking robust. The breadth pretty much at the highest gap in the trading day so far. with the advances significantly ahead of the declines. Let's pull up the sectoral indices and you'll see a sea of green here. It's again a pretty picture. What's not doing well, because let's get that out of the way, not too much to talk about here. Pharma as a pack not doing incredibly well. You have healthcare as a pack that's losing a tad bit of ground, but it's not too much to speak of. What's working is Nifty Realty once again, and we've got a special presentation for you on the show about what you need to pay attention to with regard to the rip-roaring move that this index has had over the last 1 month or so. PSU banks back in front, and this is on the back of pretty robust results that have come through from the likes of Indian Bank, even Bank of Maharashtra having a pretty decent set of numbers. Nifty IT gaining about 1.9% or thereabouts, and the India Defence is up about 1.8%. Nifty Bank not too far behind, about 1.5%. Pull up the PSU banking pack components, because this is where quite a bit of action is. You have Indian Bank on the back of a pretty good set of numbers is gaining about 10% or so. Bank of India is up and about. UBI, Canara Bank, all of those gaining over 3%. BOB is doing well. Central Bank and UCO Bank as well. So it's a pretty robust set of numbers that was posted by Indian Bank. I wonder whether that sets the template for some more of these banks. And beyond that, the question though, Mahima, is from the broader markets, what are the stocks that are doing well?
Right, so overall, Alex, the broader markets have maintained the momentum throughout the day, right? And that's the important part, because the mid cap 150, the small cap 250, both are up and above in that range of 1% each, and have held that gains throughout the day at the day's high point almost now for the small cap 250. But some specific names that are doing well in the broader end of spectrum. Let's try to pull up the BSE 500 index and see as to what are the counters that are doing really well. You have Iron Exchange, topping that chart. Zensar Tech, of course, also doing very well, up 13%. You also have Muthoot Microfinance, which is up by 12%. Greaves Cotton, Nugent Software, which is also seeing gains about 10%. Probably on the back of that IT sentiment is what we are seeing for Nugent Software. Indian Bank is also doing fairly well. But just on the flip side, you also have names like VST Industries, Park, etc. And restaurant brands, of course, on the back of the open offer, tanking in trade by about 2 to 4% each. So that's with regards to where the broad end of spectrum goes.
Not too many big losers. And let's take a look at some of the key reasons that are contributing to where we are at with regard to the to the markets, right? The benchmark Nifty 50 gaining for a second consecutive session, led of course by Reliance Industries and the private banking names. The Nifty is in fact recouped nearly 60% of Wednesday's losses. 24,200, 24,300 remains a key resistance zone. We're trading above that 24,200 mark for now, but a decisive breakout above that mark should or could trigger fresh short covering and revive that bullish sentiment. 24,000 to 23,800 remains a strong support zone for the Nifty 50. A break below that 23,800 zone may open the door towards 23,600. Now, the Nifty Bank is on a very strong footing, recouped over 90% of Wednesday's losses. 58,250 to 58,300 is the resistance, and support is seen at 57,500. We've got Neera Vashar, Head of Equity Research at Latin Manhallar Securities, as well as Gaurav Sharma, Vice President and Head of Research at Globe Capital, joining us at this hour. Thank you so much, gentlemen, for taking the time, and good afternoon to the both of you. Gaurav, I'll come to you first. Very strong session today across the board. What do you make of the numbers that you're seeing for the Nifty 50? Is there potential for further upside?
Hi, Alex. Very good afternoon to you. Thanks for having me today. A phenomenal up move. The best part is Nifty Index is holding ground till the end of the day. Just 1 hour of trading left, and we are trading almost at the highest point of the day. Things are looking optimistic. We are expecting a further upside toward 24,300, 350 odd zone. Therefore, traders who have taken up long positions can consider holding it up. Do maintain a stop somewhere close to 24,150 odd levels.
Gaurav, and what about your picks for the day? Are they buys, or do you also have some sell calls? How are you viewing the markets right now? Especially because you'll be taking a position, into the weekend is what we're seeing. And we've seen in the last week that geopolitical situation did turn down markets. So overall, what are you seeing right now in terms of that, and what stocks are you picking?
Stock specific ample of action is there. Uh, Two stocks I have picked up today. One is from the banking space. Karur Vysya Bank is looking very attractive. It is all set for a fresh breakout. Trading in a narrow range from past couple of weeks. 306 is where it is currently trading at. Stop loss is very close by. Take a stop at somewhere close to 300 odd levels. Look for target closer to 320, 325 zone. That's first one. The second one is Lloyd Metal and Steel, Lloyd SME. Again, a clear-cut flag and pole pattern is visible in this stock. Good amount of sideways consolidation is seen at higher levels. Stock is an outperformer clearly. Current level of somewhere close to 1800 looks very attractive. Reasonable volume interest was also witnessed in today's trading session. Therefore, this is a volume backed buying that we are seeing. One can consider buying it at current level closer to 1800 odd levels. Keep a stop at 1730, 1730, and look for targets close to 1875 to 1950 levels in the next week.
Okay, all right. Neerav, today we are seeing water treatment as a theme doing very well. There's ion exchange, which is seeing significant amount of uptake. There's Vartech Vabag, which is also doing very well. It's been doing well, in fact, for the last so many days. Just want to get a sense because, all of these names are, sitting on high Ps. But from a fundamental point of view, any of these that you're liking, maybe for an entry right now?
Good afternoon and thank you for the invite. There's clearly a scarcity premium which is prevalent in the water treatment space because of the strong prospects which we are seeing in this particular space, and there are a lot of avenues for growth in various areas like desalination or wastewater treatment or wastewater recycling, etc. And that is actually the need of the hour. So I think this is one factor. Apart from this, the renewal of the Jal Jeevan mission from the government, I think that is also going to play a critical role. And most of these players, especially the likes of Vartech, Vabag, they have learned the hard way. They have executed a lot of contracts in the past, but now there's a very good balance which is being maintained between the order book in terms of the core EPC projects as well as the O&M projects, which are asset light model, which follow asset light model and which have very strong margins. So we have Vartech Vabag, which is sitting on an order book of more than 18,000 crores. And I think a very strong revenue visibility going forward, and consistently they've been winning orders. Plus 40% of the order book is O&M contracts, which tend to have very, very thick margins. So I think this is one. And I think the rest of the players have also been picking up pace. We have Ion Exchange, which is doing quite well. We could have a Eureka Forbes, which is not far behind, which is, of course, into water purifiers, etc. So I think the entire space is buzzing, irrespective of the steep valuations.
Neerav, I do want to ask you very quickly about Indian Bank, because really this is turning out to be a stock to keep on the radar because of the kind of gains that it's had. Pull up the intraday chart for Indian Bank quickly, please. It is the top gainer in the banking pack, and we should definitely talk about it. It's up as much as 9.4%. This is on the back of the results that have come through. Net profit gain of as much as 10%. The gross NPAs have actually improved on a sequential basis. The net NPA in any case is pretty low at 0.15%. The net interest income has grown as much as 17% or thereabouts. But I think the real trigger for this kind of up move is an uptick in the net interest margin by as much as 6 basis points on a sequential basis, which looks particularly strong, doesn't it? Neerav, what do you make of the numbers? 3.41% is the NIM that this particular bank has managed to give. Is this a one-off, or do you think you can extrapolate this to other banks in the space as well?
I think a very superlative quality of numbers as far as Indian Bank is concerned. Approximately 14% growth in the advances and approximately 14% increase in the deposit mobilization. As you rightly pointed out, the net interest margin has been quite strong at 3.41%, which is quite strong. We have a CASA, which is at around 40%. So that is also again a very big positive. And when you tick all the boxes in this fashion, naturally the markets are going to reward you. And that's what exactly we are seeing in the case of Indian Bank.
All right, I'll circle back to find out which particular public sector bank you like. But before we do, let's go to the stock of the day. And actually, it's not just the stock of the day, it's probably the stock of the week. Kalyan Jewellers is the one that we're talking about. It's on a red hot run. Or I wonder if there are any other metaphors that you can use that have to do with gold, because the stock is up 37% from its lows and 30% in the last 3 trading sessions. Mahima joining in to talk about what is going on, Mahima.
Yeah, can we call it a golden rush, Alex, is what I'm thinking.
Yeah,
so it is, right?
rush. Yeah,
it's a golden rush, right? And that's what has happened. In the last 3 days itself, the stock has gained over a 30% mark. It's, been up almost 40% from its lows. And, let's try to take a look at the fine print of what, the earnings of Kalyan Jewellers have looked like so far and what's working and what's not working. I'll start with the financial metrics first, because in terms of the top line growth, a 3-year CAGR of 36% is what Kalyan Jewellers has witnessed, from 14%, from 32% to 43% in FY26. Profitability CAGR has been at that 44% mark. This is a 3-year CAGR that I'm talking about, from a 20% in FY24 to a 92% in FY26. And ROC trend has been improving from a 14% in FY24 to a 21% in FY26. Now, if we take a look at the valuation, because there is valuation comfort as compared to the biggest peer, that is Titan, because 1 year forward for Titan stands as around 64 times PE versus that of a 27 times for Kalyan, and for Thangamile it is as high as 49 times because the stock has run up so much. But Senco still sits at a better position as compared to Kalyan at 15 times 1 year forward PE. Now, what's not working? This is also interesting because it has a very high exposure to Middle East. One thing, the international revenues overall are around 14% to the consolidated top line number, of which around 10% comes from Middle East. They also have 38 showrooms across UAE, and if the Middle East tension intensifies or escalates, it could impact their revenues coming in from the Middle East business. So that's 10% of their total revenue, and that's something that investors will definitely watch out for. The second aspect is the FII selling, because there has been constant selling of FIIs in the past 3 years, from a 21% in March 24 to around 14.5% in March 26 is what we've seen in terms of the FII number. In terms of the debt, because both in terms of the short-term and the long-term borrowing, that numbers have gone up. So total borrowing has gone up by around 23% in FY26. Even other liabilities in the balance sheet has gone up by 55% in FY26. Lastly, in terms of where the Bloomberg consensus estimate stands, because that if you take a look at the numbers, there are around 8 buy calls for this one, 0 hold and 0 sell calls, with a return potential of 50% is what the analysts are estimating. So this is the overall view on Kalyan Jewellers as to what is working and what's not working, and Middle East is something that everybody will be watching out for. Gaurav, I'll quickly come to you. Considering that we've seen a significant run up in the stock, what are the charts still indicating?
Mahima, charts are indicating that this run-up is likely to extend towards 500 levels. Although the stock is it has been a clear-cut underperformer, but this is a phenomenal up move that we have seen in the past, say, just 2-3 days. It has went up from 350 to currently 470, 475 zones. Further upside towards 500 is pretty much likely. Therefore, a trailing stop loss is what I'll be suggesting to the traders to have here. Maintain a stop at 450. Look for immediate targets close to 500 odd levels.
Nirav, the question to you then, and Mahima just very nicely put out the comparison even on the valuation front, right? And if you compare it with a Titan, it's still trading at a discount. The question though is, will it continue to have the kind of growth run rate that it has managed in the last 12 months? What do you think?
Well, it's quite possible because we've seen that the entire gold jewelry trade is essentially very scattered and fragmented. And I think if I'm getting my figures right, then even Titan has a market share of approximately 7%. So there is a room for everyone to grow, and this is of course the age of the hyperlocal jeweler. And most of these players have been following very smart strategies with respect to their hedging policies, with respect to the way they are growing, because they've been following FOCO models, which is franchisee owned, company operated, which is an asset light model essentially, and ensures better quality margins. And I think the positive for the Kalyan is that it was trading at a valuation comfort of around 29 times. And when you have a growth of close to 40%, which has been achieved in the Q1, then naturally the market is going to take it in a positive way. So hence we have seen this valuation catch up, which has happened very fast.
Yeah, indeed. And certainly that that might just be a little bit of an understatement, the valuation catch-up been fast. The gains that it has seen this week itself, 22+%. It's time now to go across to my colleague Somit Sarkar for his regular feature at 2:45, Heard on the Street. And I'm pretty sure, Somit, that the news and the buzz is significantly better than it was 2 days back, isn't it?
Well, even 2 days back, the news flow was obviously there. It was just the fact that people were not able to make any money out of that news flow. There was just news flow that was coming in. But right now, yes, there are a few stocks that dealers have highlighted. Firstly, it's Ellen Berry. Now there are buy flows on the PMS desk is what dealer rooms are indicating. A well-renowned PMS has been buying in to trade in this counter is what dealers have indicated. Second one is CE Info System, that is MapMy India. There are buy flows on the HNI desk, and there's a buzz of a potential acquisition announcement that could come in anytime soon here. For HEG, there are buy flows on the HNI desk. Dealers are quite bullish on the demerger of its unit, which is expected to happen soon, and hence this spike in share prices is something that you have seen in trade today. And then there are multiple stocks on results. Firstly, it's Bajaj Auto, Oracle Finance and Bajaj Consumer. There are buy flows on the institutional desk on all the three counters. Dealers are expecting strong Q1 numbers to come in from these names. And on the flip side, there is Angel One. There are sell flows on the large HNI desk for this counter. Dealers expect a weak Q1 earnings from Angel One. So keep an eye out for all these names in trade.
Okay, all right. Somit, thank you so much for getting us those details. A lot of those names, Alex, are looking, very interesting. There's HEG, there's CE Info Systems. I think I'll take up HEG with you, Gaurav, first as to what are the charts indicating right now for this one.
Mahima, a fresh uptick was seen, but stock failed to hold above its crucial moving averages, which is not a good sign. A close above 555 odd levels is pretty much warranted to confirm a breakout here. Until then, such kind of volatility will continue. So I'll be interested in placing my bets once the stock is able to surpass 555 levels. Then only a further up move towards 585, 590 zone is possible. Well, among the stocks that Somit noted here, Ellen Berry looks very attractive at the moment. It is, I even this caught my eyes only after your notified it, and it is looking exceptionally good. The results are phenomenal. The company is a consistent performer, yet the stock was not being rewarded the way it should have been. It is looking very attractive. I think a further up move is likely in this stock, although currently it has reached the 10% circuit mark, but it is still looking upbeat.
Barry, okay, keep that on your radar. What about CE Info Systems? And this is a stock that gained quite considerably in trade yesterday, Gaurav. Pull up the 1 week chart if we can do that, and you will see that spike that took place in trade yesterday. If I remember correctly, about 8% or thereabouts. It's up as much as 17%, 18%. And so if Somit Sarkar's Heard on the Street ends up coming true, this is going to be an acquisition candidate. What's the view on the charts?
This is also looking good, but if at all a comparison needs to be done, I'll be placing bets with Ellen Berry, clearly, no doubt about it.
All right. Let's talk about the IT pack as a whole. And the pack as a whole has given up a little bit of ground, but it remains one of the key talking points of the day so far. It's up about 2% or so compared with the 4% gain that you saw, or the 3+% gain that you saw at the start of trade. And something like a TCS has come off quite substantially from the high point of the day. Look at that intraday chart. It's now trading with gain just about 1%. One can argue that those early gains were so substantial that people got in and managed to take some money off the table. But the point is, can the numbers that TCS has posted and the outlook that it has, the headcount data that it came with, can it be extrapolated to the rest of the system? And what does it mean for IT? Jasmeet joining in to tell you just that. Jasmeet?
Well, Alex, thank you for that. As rightly said, we have seen a strong commentary coming in for TCS, and that's something that's really seeing a broad-based growth across the sector. Now, if you look at the key things that were in focus for TCS, the first one was the constant currency, which has been positive for 4 consecutive quarters, which key positive, showing the overall stabilization in terms of the actual growth. While the second one will be the AI revenue. It has been growing constantly, though the growth has slowed down from earlier 27 to 13%, but still growing in a double-digit form, and the management remains bullish on this. The third one is the net hiring. While it has been highest in last 15 quarters, and so far in last 2 quarters, company has hired nearly 12,000 odd employees, showing a strong momentum in the future deal wins, in the future growth as well. But the last one is the value buying, which we're seeing in IT sector, as it has already been beaten down, and the valuation is currently at a 10-year low decade. Now, in terms of the demand commentary, what we are cross-reading for other sectors is first one, the BFSI. We have seen that TCS has a flat BFSI movement. It's about 1% flattish, but still staying resilient. And given a lot of IT companies have majority of the business in BFSI, that's why we are seeing majority of the IT companies buzzing into race trade. The second one is the consumer vertical. TCS does make a note that the consumer vertical business will come back to normal once the geopolitical tension eases down and it will start seeing the growth. And the third one is manufacturing and life sciences, where the TCS says out that in the Q2 will be a turnaround quarter for these 2 sectors as well, and the stocks that have heavy focus in manufacturing and life sciences are buzzing into race trade. But the last couple of them are the regional market. The India focused market has grown well for TCS, is up about 7.2%, while the management sees no broad-based discretionary spend slowing down for the company as a whole. Now, we have jotted down few companies that have high focus in BFSI, manufacturing, life sciences in India. Starting off with the BFSI, we have majority of the IT companies focused in BFSI. To name the companies, we have all large caps, we also have Emphasis and OFSS all gaining into today's trade on the back of that heavy BFSI exposure. Now, in terms of manufacturing and life sciences, we have stocks like Persistent Systems, Coforge and Sagility having heavy dependence on the life sciences, and that's why these 3 stocks are buzzing in trade on the same basis. While the last one is the India exposure. Now, there are few of the India companies which have high India exposure, like Newgen, Tanla Platforms, Orient Pro, and MapMy India, which have higher Indian and regional market, and that's why these stocks are buzzing. Now, in terms of the return potential and buy call for the companies, if you look at TCS to Emphasis, we see majority of the buy calls for the company with least sell calls in terms of return potential. It lies between 8 odd to 25 odd %, with TCS being at 24 odd %, HCL Tech at 13 odd %, and Coforge and Persistent between 7 to 8 odd % from the current growth levels.
Okay, all right. Jasmeet, thank you so much for getting us those details. Quite a comprehensive link on the entire space as well as TCS. But in fact, my colleague Neeraj caught up with Krithivasan, who is the company's MD and CEO, and Aarti Subramaniam, who is the ED, President and CEO of the company, to discuss the quarter gone by and the outlook ahead, listening to that entire conversation.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, like obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having at the size, the other point is that the ticket size of our AI projects are growing, and the discussions we are having with our customers on AI So that's also very resonating very well. Our customers like the overall 5-pillar strategy we put in front of them. So as I said, all in all, satisfying quarter. Geopolitics did play, like particularly the Middle East war. We have impact because of that in some of the verticals, particularly retail, travel and airlines and all, and of course our Middle East business. But despite all that, we are happy that we've been able to put a good quarter.
Yeah, and I would like to get your opening thoughts before I ask about hiring, because that has stood out for me. I don't know if it's really that important in your eyes, but your opening thoughts, Aarti, on what do you think went behind the quarter and what does that signal for the quarters ahead?
I think as Kriti said, I think it was a satisfying and a good quarter. And if you really look at the deal wins this quarter, we had one mega deal with SKF, which we are extremely pleased about. And also the nature of, it's a completely net new win and cuts across, multiple services that will deliver for SKF. Complete, AI first IT operations in terms of how the run the business would work, enterprise transformations, and also AI-led business transformations. So I think the whole construct is something that we are very pleased about. Then other deal wins, renewals, and again, all these renewals require a very clear AI-powered proposition, and we are doing well there. And with a US-based utility major, we had a very good renewal, a large deal renewal. But what we are also pleased about is how the renewal came with a large double-digit AI transformation deal, expansion baked in, right? So I think we're very happy about that as well. Apart from that, I think this quarter, if you really look at the autonomous GBS, the whole agentic AI in business process operations, we saw some really good deal wins across, HR, finance, and, customer experience. So those deal wins, which are completely AI-led propositions, AI-centered propositions, I think the deal wins were quite good. And, you look at our AI revenues this quarter, 2.6 billion. So I think good growth from 2.3 billion last quarter. And these nature of AI projects are such, right? These are discretionary projects, 3-month, 4-month, 6-month cycle. So to grow from 2.3 to 2.6, which means that we need to win those many newer projects to keep the growth momentum going. So net, a good quarter.
Yes, a good quarter indeed. A good hiring trend is what we've seen. Inline numbers is what we've seen, and a positive commentary, and that's reflected in TCS as well as the other IT names as well. Nirav, I'll come to you. Today in the morning I was speaking to an IT analyst, and he said that in the next 3 odd years, at least in the SMIDs, he's expecting a good CAGR of anywhere between 15 to 18 odd %. Would you also agree? And do you also think that there's value buying in the mid and small caps in the IT space, or do you still prefer large cap?
I think the TCS results have largely managed to meet the street estimates. And I think, as you pointed out, that around a 15 to 18% growth, it looks quite likely. It's quite possible that companies would be able to scale that, but it will all depend on what is the quality of execution. And of course, one positive thing which comes out of this is that the AI transformative deals have been growing. And of course, this win with SKF is definitely going to be a test case also for TCS. And hopefully they should come out strong after this execution. But numbers clearly left a lot to be desired, because we've hardly seen any sequential growth. There was a degrowth in the profitability. They've managed to hold on to their margins, but I think overall the cost structure, the costs did bite, because we've seen employee cost as well as other expenses move up at a faster clip. So I think while the valuation wise we have TCS, which trades at barely 15 times price to earning multiple, yet we have not seen any excitement for the stock, despite the fact that the valuations are looking so appealing at this point of time. I think there could be better value which is there in the mid cap space.
Okay, that's well put, and that's a fair assessment as well. There's still a little bit of uncertainty on how this will pan out. On that note, gentlemen, Nirav, Gaurav, thanks so much for taking the time today. Pleasure speaking with you. Happy Friday. Okay, we have to slip into a very quick break, but on the other side, we'll talk about a key trading strategy that you should keep in mind and various other conversations. In fact, we've got a conversation lined up with perhaps one of the stocks of the day, that's Indian Bank. Stay tuned for that.
सुपरस्टार स्टॉक्स ऑफ द डे प्रेजेंटेड बाय टाटा अजूरा, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
बरसों से सरसों।
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Attenborough did not start with a clear idea.
What idea? We were desperately hunting for it, and then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we build a prototype and learned that we can deliver the same.
Welcome back. You're watching India Market Close, and we are in fact talking about Indian Bank. Pull up the chart because it is arguably the stock of the day today, gaining as much as 10% and at the high point of the day. The numbers are absolutely fantastic if you think about it, right? Because the gross advances coming through with gains of as much as 14%. The personal loan segment has seen a bit of a degrowth in the retail space, but then that's not too much to worry about. In fact, that growth in deposits has been anchored by robust CASA that stands at close to 40%. The PAT number has grown by as much as 10%. Asset quality has remained resilient. Gross NPAs have actually improved on a sequential basis. The net NPAs, barely any there. They've remained pretty flat. But most importantly, the net interest margin, a key measurable for the profitability of a bank, has actually improved 6 basis points on a sequential basis. Let's bring in the management. We've got Binod Kumar, who is the Managing Director and Chief Executive Officer of Indian Bank, joining in. Mr. Kumar, thanks so much for speaking to us on NDTV Profit. I must tell you that I also have my colleague Piyush, who's joining in, who tracks the space very closely, and he'll be asking you a few questions as well. But let me start by asking you about that margin performance. Would you say that this improvement in margins is a sign that the margins for your bank in particular have bottomed out and the path ahead, the trajectory ahead, should be upwards?
I think it has bottomed out, right to say. First of all, thank you for having me here. And coming to the margin, I think it has bottomed out because I don't see any further rate cut. Going forward, impact of some MCLR may be there, but also at the same time, deposit will also reprice. So margin has bottomed out, but at the same time, I also don't see any trigger for very significant increase in any further increase in margin. So margin, I think going forward will remain flattish, 1-2 basis point expansion or few basis point expansion I can expect, but not very significant, any significant expansion from here.
Mr. Kumar, your deposit book has grown by around 13-14 odd percent. I'm sure you are also mobilizing FCNR deposits. If you could give some guidance on how much of these FCNR deposits you have raised and what's the target?
Yeah, so far I have raised around 140 million and I'm expecting to raise around 2 billion by the end of the period window provided by RBI.
Your advances also have done quite well. In fact, corporate loans have grown by around 12-13 odd percent year on year. What is the quantum of corporate loans that are in pipeline?
Pipeline is around 63,000. We have a pipeline of corporate book of around 63,000.
If you could share where this demand is coming from, which segments of loans, what corporates are putting up, and whether these are working capital loan or these are for fresh investments?
No, majorly are fresh investment because WCDL, LOC, etc. working capital low yielding still we have shaded around 6,000 in Q1. So, particularly I am saying good traction in data center, good traction in green finance. A lot of battery projects are coming. Data center we have underwritten also. 2-3 projects we have underwritten. And also the transmission line. So few sectors relating to green and data center we are seeing good traction.
Sir, I just want to understand the government's ECLGS 5.0 scheme. How many loans have been disbursed under this particular scheme? How many loans do you expect to disburse under ECLGS 5.0?
So I was expecting around total eligible customer amounting to around 11,000 crore. So out of that, around 5,000 crore has been disbursed so far. And I expect entire 11,000 crore may not be utilized because that eligibility also provide for the customer who are very rate sensitive. So maybe because of that, but I expect majority of that will be disbursed.
Quickly, sir, you have made 350 crore of provision towards the risks that are emanating from West Asia conflict, and you have also made 1,000 crore of provision for ECL related, implementation. How much of more provisions do you expect for both of these? And in particular, from West Asia, which are the segments that are more, exposed to the risk that is coming from this conflict?
So first of all, let me give disclaimer that we have made that provision 310 crore in the Q4 itself. This quarter we have made around only 13 crore only, not much. So let me give disclaimer that we are not seeing any sign of stress anywhere. We have made this provision totally prudently. Because if you see my SMA book has come down for YOY basis from 7.99 to 4.69. So I don't see much of the impact. Going forward, ECGLS, I think around 5,000 we have disbursed already.
ECLGS. No, on expected credit loss, you have made 1,000 crore of provision. How much more do you need to make?
Okay, coming to that. So ECL, my total expectation is impact will be around 3,000 crore. And at the end of the year, I have given guidance that I will be making additional provision of around 1,500 to 2,000 in this year itself. So out of that, 1,000 I have already made. So during the course of the year, I will be able to create further buffer of around 1,000 crores. So not seeing much of the impact at the time of transition. So transition will be smooth.
Understood. Mr. Kumar, I want to come back to the deposit and the credit growth that you've displayed in the first quarter. And I'm trying to understand what the implications that of the numbers that you've given us with regard to the FCNR deposits will be on the overall growth figure in deposits for the full year FY27.
See, I will see deposit FCNR coming, but if there is something which is high yielding, so high costing, maybe I will set some of that. So depending on the cost benefit analysis, I will balance the growth. So I say FCNR I am getting at good rate, then I will like to set some of the high costing deposit. So guidance, I keep same guidance. I'm not revising guidance as of now. I will see after Q2.
And what is that guidance, Mr. Kumar?
I have given guidance between 9 to 11%.
That's
Although
pretty.
I have beaten that 13.40.
I was just going to say that's a pretty conservative guidance given the kind of track record that you've displayed. But what about advances then, Mr. Kumar? Because if you have a corporate book pipeline that is over 60,000 crore rupees and the growth that you've displayed of what, close to 14%, it's slightly lower than certain other peers have displayed. Yeah. Would you say that you will play catch up perhaps in the second quarter? Do you anticipate that the trajectory will rise in the second half?
See, my take is even 13-14% is growth is a good growth. I remain mindful of the margin also, but I try to balance between growth and margin. And CD ratio also, we are at 81%. So if there is a huge gap in the growth, where like since you have told, I'm saying, few of the bank gap between credit growth and deposit growth is huge gap. So I will not be comfortable with that type of gap between credit and deposit growth. I will like to maintain between 1.5%. So of course we could have grown better, and this quarter it will automatically come. If you see segment wise, corporate you have already told around 12%. MSME we have grown by 17%. Retail we have grown by 19%. Only subdued performance was in agriculture, which is 9.96%. That is primarily because of the jewel loan change of the guidelines by RBI, which kicked in from 1st of April. So first 2 months it took time in stabilizing. Thereafter we have catch up. So I expect it will be good growth. Maybe 14-15% growth we can achieve.
Going back to the FCNR deposit front, we also reported today that after the initial thrust, now the deposit mobilization is becoming slower. If you could help us understand what are the rates? Should the rates be higher on such deposits? Should the leverage increase? Borrowing cost has gone up on one hand, and also there are certain reports that the RBI will meet all the banks' CEOs on July 14 to discuss deposit mobilization under the FCNRB scheme. Is that happening on later this next week?
So there are two things. First of all, FCNR, there is no dearth of FCNR. We are seeing good traction. Question remains funding of that. So funding we are arranging, and of course, we should understand the motive behind this FCNR. FCNR motive is not to earn money this time. It is to support the FII has withdrawn huge amounts. So that is to support. So even if we have to fund at some higher cost, we are okay with that. We will be supporting the need of I'm okay with that.
Meetings of public sector bank CEOs on FCNRB deposits.
Agenda has not come. And normally once in a while, RBI keeps on holding this type of meeting. So, I don't think it will be only agenda. When meeting happens, many things are discussed about the health of the bank, future plan of the bank. So, not any specific agenda that only this will be discussed.
Got it. All right. Thank you so much, Mr. Kumar, for taking the time, and a fantastic set of numbers that you've reported, and look forward to speaking to you again really soon.
Thank you. Thank you for having me.
All right. Piyush, thanks so much for joining us on this conversation. You should go onto the website ndtvprofit.com and take a look at some of the stories that Piyush Shukla has done, and keep a tab on his regular coverage of the banking space. Let me introduce you to Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset. Sher Khan joining us right now to talk about some of the stocks that are buzzing in trade. Among them, of course, is Indian Bank. Kunal, let me start by asking you about that. It's up about 10% right now. Would you ride that rally? Would you get in at these levels? Or would you take money off the table?
I think definitely I'll ride the rally. I think there is still more upside left into the stock. Already the base that has been formed around 770, 780, that is very strong. I'm expecting going forward, the stock might continue to make a new high. So you can expect targets of 950,000 in the coming months as well.
Okay, all right. Kunal, your quick view on the indexes as well, both the Nifty 50 and the Bank Nifty.
And for the Trump, we have seen again a one-day fall of almost 400, 500 points, and again we have reversed. So overall, again, crude is the factor which one should keep an eye on. If that continues to remain stable, we'll continue the rally on the upside. Now, broader markets has been very strong. Mid caps, small caps, again they have hit a new high, and I'm expecting that to continue in the next week as well. So I think broader market participation will be very strong. For Nifty, the downside support of 23,800 is now protected. And once we again break about 24,300 on the upside and sustain above it, we'll be heading toward 24,700 on the upside. And even for the Bank Nifty index, here there could be a sideways consolidation because next week on a Saturday we have four banks coming out with results. So probably Bank Nifty might continue to consolidate at these levels. Overall, Bank Nifty also remains as a buy on dip mode. Dips to be utilized, not at the current levels because the risk to reward ratio is not favorable. And once we break above 58,500, we could head towards 59,000 on the upside.
All right. One pack of stocks continues to remain on under the radar, and this is the defense pack. Of course, I'm talking about solar industries at this moment because it's in focus. It's gaining as much as 5%, and it's not cheap to begin with. It wasn't cheap yesterday. It isn't cheap today. It's something that trades with a price to earnings ratio of close to 100 or thereabouts, if I'm not mistaken. It's in focus because the DRDO successfully tested the Pinaka long-range guided rocket, validating its compatibility with existing Indian Army launchers. Goldman Sachs has come out with an interesting note on the developments, and Parth is joining in to tell you about what they're saying in that note. Parth, a lot of questions about the valuations as things stand right now, but you can't argue with the kind of growth rate that the company has had and the opportunity that has presented itself.
You're absolutely right, and Goldman kind of agrees with that. Actually, they have come out with a buy rating on solar industries with a target price of 19,590 rupees per share, which implies an upside of almost 8% from the current market price. They are expecting that the EPS in the first quarter of FY27 could grow at a rate of 70%. So that's what they're estimating as well, and this is the highest expected growth in the coverage universe of Goldman among the defense companies. So that is what is the expectations right now. Now let's understand the reason. Let's build up more on of the DRDO successful testing which you mentioned as well. So that is the Pinaka long-range guided rocket which DRDO has successfully tested. It was conducted at Chandipur's integrated test range, and the rocket achieved a precise strike. Now this is a large potential opportunity for solar industries because according to Goldman estimates, it has a potential of around 4,500 crores. As solar industries is an extended range because Pinaka is an extended range and guided rocket. So solar industries will be involved in that entire value chain of orders that they will be getting, and they already have an orders that are up to 6,080 crores. And also because these rockets are lower cost, they are expected to have a wider adoption among India's overall defense network. Another long-term catalyst for solar industries is Project Kusha. DRDO has issued the RFP for Project Kusha, which means that the program is moving upwards from the designing phase into the testing and deployment phase as well. It is the India's largest long-range missile air defense program, and solar industries is the development and the production partner for it, along with Bharat Electronics and Dynamics as well. So this is the entire view of Goldman on the company right now.
Absolutely. All right. Thanks so much, Parth, for that. And who better to talk about this than Gurmeet Chadda, Managing Partner and CIO of Complete Circle. Gurmeet, thanks so much for taking the time, and what timing. We were just talking about solar industries and you popped in. You want to talk about some of the things that my colleague Parth was just mentioning?
No, I mean, you sometimes get lucky. I've been a beneficiary for last 10, 11 years. I think I personally bought in 3 digits. So it's been almost like a 35, maybe 40 bagger for me. So God has been kind. Sometimes you get things right. And I think we continue to hold it. I think when they keep looking, and optically, it's always been expensive last 4, 5 years. What you keep missing is the size of the opportunity. I think 2 big reforms which have gone unnoticed is that the DRDO is now virtually removed the monopoly of HAL in terms of the fighter jet program. and BDM in terms of the missile program, and which your colleague pointed out, which is development come production partners. It opens up a huge opportunity, and I think Pinaka itself could be another 4 to 5,000 crores more, maybe more, with yesterday's testing of the extended range. Then you have Bhargavastra, which so far hasn't been incorporated, which is basically an anti-drone system. Because you need to have a different to protect your important sites, let's say nuclear plant or a parliament or important religious monuments. And then is the Kusha. So right now it's 18,000 crore defense book. I think this can surprise. And I think we have, another strong 3, 4, 5 years growth more. So as I said, I think defense is right now still 30%. My sense is next 3 years it will be 50%.
Yeah, okay, so that's certainly a stock to keep on your radar. Gurmeet, I know that you track this very closely, so I'm going to ask you about this. I wonder if you've seen the Amphi data that came out just a short while back at 2 p.m. today. Seemingly the flows have recovered compared with the month of May, 28,000+ crore rupees into active managed funds, and on a gross basis, 31,700 odd crore rupees in the SIP book. That looks robust again. So seemingly that interest or that participation by retail is coming back to the fore.
No, it's visible at our end also, because we have a wealth management outfit where we do MF distribution. I think the flows are picked up. The SIP book is seeing traction. Also, the net inflows have picked up post March. Also, if you see, you have today the MF industries crossed 76 lakh crore. The FPI holding in India is less than 75 lakh crore. So I think the MF equity holding has crossed the FPI holding. To me, that's the big change which has happened. Obviously, we want FPIs to come back, but I think this is very structural. And look at, for example, US. You have the largest asset manager, which is $12-13 trillion, which is BlackRock, and you have JP Morgan, which is $3 trillion, which is the largest bank. So I think the largest asset manager are 2, 3 times, 4 times size of the largest bank there. I think we still have a long way to go. We have about 200 lakh crore plus deposits. MF industry is still 70-75. So we are playing asset management space. We have CAMS in the portfolio. We have Birla AMC and HDFC AMC in terms of asset managers we have. And I think SBI IPO, mutual fund IPO, I think would be another good one. 3,000-4,000 crore PAT, reasonably valued, and I mean about 12 lakh crores of AUM and growing. So I think that's one IPO I'm looking forward to.
HDFC AMC, Gurmeet, has been buzzing today. I think the earnings are expected next week, but it's seen a good volume growth also coming in as far as the charts go. But just going back to solar indices, because Gurmeet called it luck. I don't think it's just luck, right? It's all the hard work that you've put in, Gurmeet. So kudos to that. But Kunal, quickly on, since we were talking about all of these AMC companies, HDFC AMC is what I was seeing where volumes are looking very good. Do you think charts are looking attractive enough right now to make an entry?
I think it definitely looks attractive. It's almost on the verge of a breakout here. So 2850 is where the resistance has been. And once we break above that, we'll be seeing new highs coming. So yes, good time to add on to for HDFC AMC, can head towards 2900.
All right, I want to quickly head across to Parth, if he's with us, to talk about some of the stocks that are buzzing in trade, possibly on the back of significant volumes. Parth?
Right, Alex. So there are 3 stocks that are buzzing in trade today. The first one is Muthoot Microfin. The stock has gained over 12% today on the back of a strong Q1 update which the company posted yesterday. The stock has reached the highest level since July 2024, and volumes today are 14 times the 20-day average. Also, this is the largest single-day gain for the stock since April 2025. The second one is Newgen Software Technologies, which has gained almost 8% today, reaching the highest level since February 2026. Volumes today are again 11 times the 20-day average, and it might be a relief move for the stock because it is down around 70% in the last 18 months. Lastly, we have Shoppers Stop, which has snapped its 2-day losing streak, and it's up over 7.5% today. At highs, at today's morning highs, the stock had almost made a new 5-month high, and the volumes today are 15 times the 20-day average. Also, this is the highest volumes Shoppers Stop has seen since July 2022. So these are the 3 stocks that are buzzing on the back of volumes.
All Got it. Thanks so much for that. Gurmeet, quick question on Muthoot Microfinance. You may not have an individual view on this particular counter, but they've guided for a doubling of their assets under management by 2030, which is quite considerable if you think about the fact that they are in the microfinance space and the tenor of these loans is not much, right? So going to 30,000 AUM is quite substantial. If you have a view, what is it? And what is the view on microfinance lenders?
So, Alex, we've in general avoided microfinance, reason being that, I mean, some elections, some state elections somewhere, some waiver coming, some accidents happening. So that's one space we've avoided. So we have the Muthoot, the gold financer in our portfolio, because I think that's one category which is one of the fastest growing categories. Of it slightly under pressure because of gold prices, but that's one category which has really done well and I think continues to grow. We have recently added the commercial vehicle financers. I think the uptick has been there. You see the monthly updates on CVs now for I think almost 2-3 consecutive months. I think it's looking very good. And a lot of these CV financers, Shriram has done well on back of the deal, but Chola, for example, which is strong and hasn't done well. So I think that's something we are looking to add now, which is the CV financers as far as the NBFC space goes.
Right, okay. So that's the view coming in on a lot of these, BFSI names. But it's time to take a look at SBI as well, because it's unlocking value beyond its core banking franchise. With the SBI funds, of course, OFS, investors are once again focusing on the lender's valuable subsidiaries, while future monetization opportunities include the NSE stake and insurance business could keep the value unlocking story alive. Shara joins us with more details on this one.
Well, SBI is itself a big institution, and over the years they have been doing a lot of monetization all across. Now let's look at the value unlocking. First and foremost is, of course, we know about the SBI funds IPO, where they'll be selling shares worth 7,365 crore rupees. This is based on the RHP numbers. But let's look at the other key details also, where the value creation story pans out for SBI. Their stake will, of course, come down. We have already got to know about the pre-IPO which was done. Yesterday, the announcement had come in. Almost 1.4% stake was sold. And the market cap comes in at almost 1.17 lakh crore rupees at the higher end of the price band. And these are the key numbers to actually watch out for. But let's look at the value unlocking story of how much is actually it's panning out. Let's do the SOTP valuation, that how much value is assigned to the subsidiaries. Roughly, it comes at around 12 to 13 lakh crore rupees. And if you could show the table, the core bank is just 75% of the SOTP valuation. Almost 25% comes from the other businesses. But let's try to break that down. And of course, I have added a 20% holding company discount as well. Out of that 25%, this is the breakup, which is looking like. But remember, not just the arms, they also have investments in Yes Bank and NSE, which I have added in my analysis. And if you remove the holding company discount, that comes to 25%. So the SOTP valuation is something which I have given you. But let's also talk about royalties. Royalties is very much important. Why? Because SBI Mutual Fund is using the logo and the name and distribution of SBI. So a royalty payment is coming. If you just show the royalty payment also of how things are coming out, look at that. 500 crores SBI Mutual Fund is giving to SBI. So that's an inflow as well. And going ahead, let's give you the history of the value unlocking, what has already happened. 2 arms from SBI have been already listed. These are the numbers which is there on the screen. I have added in the calculations. This is what we'll be focusing on. That's an inflow coming in. And also 2 other arms, SBI General Insurance and SBI Payments. That's where the monetization can happen. So this is the entire picture of value unlocking.
Thank you so much for getting us those details. Kunal, a quick 20 seconds view on SBI for the charts.
Yeah, I think overall the setup still looks positive on the monthly chart. Immediate hurdle is at 1060. Once that is taken out, expect this rally to continue towards 1100, 1120 on the upside.
On that note, gentlemen, we're completely out of time. Thanks so much for taking the time and speaking to us, and happy Friday to the both of you.
Same to you.
Okay, let's talk about the equity markets as they close, as Mahima joins me to talk about the close of trade. And let's pull up the intraday chart for the Nifty 50 while we're at it. Holding at the high point of the day, 24,200 was that key resistance level. We're closing above that. That bodes well. Unless something happens over the weekend, let's hope that doesn't take place. While we're closing out, let's look at the weekly charts for the benchmark Nifty 50 as well as the Nifty Bank and the certain other indices as well. So for the week as a whole, you're still closing with cuts of about 0.5%, and that's because of the crack that you saw midway through the trading week. Pull up the Nifty Bank as well and see what the weekly move has been. It's still about 0.2%, so not too much damage done here. IT is a sector that you should look at as well for the weekly chart. So pull that up and let's see how that goes. And then we'll pull up the broader market gauges as well. Or maybe we can pull up the broader market gauges first, the mid cap index and then the small cap index as well. So the week for the mid cap index, because of the kind of run that we've seen at the end of the week, is in the positive. Pull up the small cap index as well and see where it's gaining. It is also gaining just about 0.2% at the end of the week. So anybody that deployed at this level has actually gained ground
significantly. I mean, and the last 2 days have been very good for SMIDs as a whole. But I think Realty will also be an interesting one to watch out for. Let's try to pull up the weekly chart of Nifty Realty if we can, because it's seen a significant run up. A lot of names have done very well. There you go, a 7% gain for the entire week, and we'll have to wait and watch out for whether this momentum sustains going forward or not. Let's also quickly try to pull up the heat map of the Nifty 50 and see as to how that chart is looking like. And you have Jio Finance topping that chart, followed by HDFC Life. Adani Enterprises up by 2.4%. Reliance doing also fairly well. So heavyweights have done very well, and that's kept the Nifty in check. But DRL closing by about 1.8% of a downtick. Nestle also closing almost 1% lower. And Eternal is also seeing a downtick of around 0.9%. Just a single day in this week where it's seeing a downtick of around 0.8%.
Yeah,
it's gained very well.
Just to drive home that point, and this is the last piece of data that we'll talk about, the contribution chart for the Nifty 50, right? Because you see what Mahima is just pointing out with regard to the heavyweights. There you go, Reliance Industries, ICICI Bank, HDFC Bank, Axis Bank. So all of the private sector banks, apart from Kotak Mahindra Bank in that list. Bharti Airtel, not too much to speak of, and neither are the other losers, not losing too much ground. So we're ending the week on a high, and that's certainly something to talk about. But that brings us to the end of this edition of India Market Close. From Mahima and myself and the team that put the show together from the NDTV Profit Suzlon studio, thanks so much for watching. Stay tuned. Up next is the editor's cut.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार. Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin rises near the $64,000 mark. Bitcoin ETF inflows see a good return. Swift launches blockchain shared ledger. And lastly, Brazil's B3 stock exchange launches crypto futures. Well, those were the top crypto headlines at this hour. But how should you navigate the digital assets, manage the risk, and spot the next big trend? Let's hear it from Ajit Khurana. He's the founder of Reflexical, as he shares his insights on what geopolitical tensions mean for your crypto portfolio.
So, an asset such as Bitcoin specifically, which was the first crypto, was created because of global tensions. And as a result, I think that this is the time for Bitcoin to shine. Having said that, the risk on geopolitical situation that we are facing has also created a financial situation where war tends to be inflationary. When war is inflationary, interest rates typically go up, which means liquidity in the market goes down, and this tends to have a downward pressure on crypto prices. And that is the tug of war we are facing in the markets.
And let's listen in also some advice from him in terms of what a crypto investor should do in these times.
For the common investor in the medium to long run, which I would define as 1.5 to 5 years, this does not mean much. However, for people who tend to be in it for the short run, and it has been noticed that crypto investors have a shorter investment horizon than, let's say, stock market investors, what we have found is that we are going to face a period of extreme volatility. We've already seen that over the last 2 or 3 months since the US war with Iran, and I think that could worsen over the next month or two.
Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, and with our tech, we built a prototype and learned that we can deliver the same output at 28 watts power.
What are your parents thinking at this time? Because you come from backgrounds where you've really had to fight to make it to IIT.
So I got placed in ISRO during my final year. My family was super happy. They all understand government job really well, but don't understand anything around business, right? And I convinced them that I have got an action. In fact, not convinced, I had to lie to them.
Before Atomberg, when I was in college, I started with an e-commerce business. We used to sell like cosmetics. They were like, यार engineering करके तुम lipstick बेचोगे.
Were you ever at a point where you thought the journey ends here?
We hardly have like very short runway.
Welcome, you're watching Editor's Cut. This is a show where we break down what's happened through the week and tell you what we think about what's going to happen next week. We base it on the many conversations we have with so many people, not just each other, through the week. And this week we're going to do something a little different. We're posing 4 or 5 questions which have come from the newsroom, and we're going to talk about what we think about each of them. So let me kick off.
Do you have your boxing gloves that you've hidden behind the table? Do I need to duck and cover?
So you already know who's going to
I know.
throw the first punch.
For sure.
I brought a tank.
You brought a tank?
So out there and just shoot.
Okay. Thanks, Neeraj.
No, nowadays it's all fought with drones. So,
Correct.
So your tank is obsolete
Correct.
now.
Completely.
I see your tank and I raise you.
No. This is not going to be
Check.
one of those fights. But just talking about some of the things that are top of mind, I suppose. And the first one, I thought this was an interesting question. Has the US-Iran threat receded no matter what happens next? What I mean by has the threat receded for our cohort as investors, has the worst of that threat receded no matter what happens next?
You want me to start? I don't think it has. Because we've seen in the week gone by itself that all it takes is a sudden spark or the possibility that there can be an escalation, and that lever of crude, which I think the equity markets in India, and in fact both the currency and the bond markets also get affected immediately. So even if you have a small inkling of an escalation in tension there, and the possibility that the Suez Canal, the Strait of Hormuz, not the Suez Canal, Strait of Hormuz gets affected, you have a situation for India.
Yeah. I kind of concur with almost everything that Alex has said. Maybe oil doesn't go all the way to 110, 112, but oil going to 90 as well would mean that there could be some pressure points for the Indian markets.
I would argue that it's never going to go back to the worst part of the US-Iran conflict.
But that's my argument. So you got to say something new.
No, I'm saying I would argue it's never going to go back. So it's the opposite. I'm saying that in my view, the worst is over as far as the US-Iran conflict is concerned.
From the perspective of Indian markets?
For the perspective of Indian markets, global crude markets, and everyone, except for the people who are on the other side and the receiving side of guns and bombs.
Why
not
though?
For them. So here's why. And I again come back to exactly what we observed this week. Yes, there was a very sharp reaction. There was a drawdown in Indian equities. Crude did jump up maximum till 80 on the Brent. Even that for a small period of time. It didn't go as far as shutting off the Strait of Hormuz, even though it went as far as Iran firing at a Bahrain and a Kuwait. So it could have gone that far. I think it's done in terms of the threat to global crude and global equity as a result for a couple of reasons that ships have been passing through one way or the other now for a while. Seafarers have figured it out. They shut off their transponders. There is an alternate route, and Kepler data that came out after this showed that there is an alternate route which is found. So it depends. Now there's a US blockade and there's the Iranian officials. Depends on who you talk to. Either one is going to give you a safe passage. A way out has been found. The fact that 2 days later there were 53 vessels which came through, out of them 20 Indian flagged, tells me it's never going to get so bad. The appetite for a fight to that extent is over. There will be some showboating on either side. There might be some skirmishes. Neither side is interested in going all the way to the top. One more point to bolster my view on this debate is that even when Trump was saying what he was saying, it's a very harsh language there, the technical committees on both sides are still meeting and talking. So these negotiations never really ended to that end, which is why the threat perception, at one point we were saying this is going to go nuclear, at least in my view, has now dialed down.
So, okay, so I take that point. But Neeraj, what you're saying is that the threat is not over. Why do you say that?
No, I'm just saying that even if the worst is over, and which may well be the case, that we will never have crude, possibly because of this reason, go back to 110, Brent that is. From a market's perspective, Brent at 75 versus Brent at 90 is a different argument, and therefore, if Brent were to go to, let's say 85, 90 also, if the conversations go south, it could have an impact on the market. So is the worst over? In fact, I concur with her. Yes, the worst is over. But can this still have an impact on the markets? To that, I'm saying the argument, my argument is it can still have.
I think it
can. The chances of going to 90 have also diminished in the interim. What's happened in the last 3 months is alternate sources of crude have bumped up. Large consumers of energy like China have figured out their alternative streams in a bigger way. At least to my mind, the chances of this going back to where is the crude in the world and the Strait of Hormuz is jam-packed have diminished greatly. No
In
matter
a
what happens.
sense, that is also on account of the fall in the demand or slightly lower demand and projection for slightly lower demand on account of slowing global growth, right? So that
So have
lever is
I managed to convince both of you all at the end of it
No.
to come around to my view?
No, I think
You've
it's
concurred.
still.
No, I'm concurring. It's the worst is the worst, as in 110 is out of the window. But can a slightly higher crude price have an impact on the markets, and can crude prices go slightly higher than where they are right now? By slight, I mean until 90. I think yes.
So that wasn't the question as well. The question is the US-Iran threat receded to that extent. No
For the
matter,
markets,
no
right,
matter
you're
what
saying?
happens next. Yeah, of course. For
No,
the
so I'm
people
saying it's not
sitting,
receded.
people sitting in Iran, of course, it's there.
No, I'm saying it's not receded because this threat could impact crude prices slightly more, and therefore it could impact the markets.
Yeah, through earnings and all of that, right? Because ultimately, if you think that the conflict is over, crude will fall, input cost pressure is over, earnings will get better.
Conflict is over. We have to now live with the new normal, where this can keep happening. It's possible this happens again next week, Wednesday, Thursday. But the responses to it, which you see, will become less and less sharper as we get used
Worst
to it.
may be over.
Yeah.
But so speaking of earnings, because I mentioned it, you were at TCS yesterday, right?
Yeah.
And I think the second question that the newsroom was speaking about was, is the turnaround underway for IT? Or can you say, basis what you've seen with TCS print, that the worst may be over?
Yeah, so I think all three of us heard the management. I did it in person, but all three of us saw the interview as well the next day, right? And the body language and the commentary seems to suggest that they believe that the worst is over. And by the worst, you mean the slightly lackadaisical growth without any kind of confirmed hiring or the choppiness in hiring, particularly at the TCS level, right? But the fact that they've hired 9,000 people, the fact that they've said that the margins which got impacted 24% will go to 26, 28 range, etc. All of that seems to suggest that even if they do 2%, which is done in the quarter, and if they just extrapolate it or annualize it for the year, 8-9% of growth, if they manage to do that with higher margins and therefore higher profitability and some commentary around execution, 79% of verticals showing growth, I think, and the valuations what they are, I think we got a winner on our hands.
For the IT pack, because that's the premise of the question. Is TCS results indicating a turning point for IT?
So maybe the proof of the pudding is in the eating, and we wait for the others to come in. But I would presume that the giant,
The largest one.
Yeah, the largest one is doing this. So maybe the Davids will also be able to do it well enough.
I don't agree with you on that. So for a few reasons, that TCS is optically looking better because the expectations were so low. And yes,
from a stock perspective.
Yes, from a stock perspective.
Yeah, sure.
So and the results, the way the results were seen. I mean, some of these expectations were baked in. The fact that they've not reduced their guidance or any of that is good. The fact that they have the highest hiring in 15 quarters, all of that is good. But if the question is the worst over for Indian IT, I would say that let's wait 3 or 4 quarters at least to see if this continues, because a few things there. Your growth is still at 2%. Could be improving, but your growth is still very anemic. The AI deals that you're getting in are shorter term than anything else. All of those AI transition deals, they're not as long-lived, so there's no steady view there. And any new technology can come tomorrow and spoil this entire game. So I would on this one say, no, I don't think this is the turning point or the base case for Indian IT.
What you just mentioned and what we were speaking about earlier, I can't remember if we were doing this on India Market Open or was it during the break, right? Where Neeraj, you were talking about the fact that what Tamanna just mentioned, a lot of these AI transformation deals are relatively smaller in size, and the duration of these deals are as well smaller. They're not annuity deals, right? You don't carry through, and so therefore you may see a situation where IT companies need to be looked at from a different lens. You had for many, many years the ability to predict within a very narrow margin of error the kind of growth that an IT company would deliver on a quarter-on-quarter basis. That may be difficult to do, and so therefore will the view change completely from the street's perspective if next quarter there's a 15% growth or there's a 10% growth? Suddenly everyone will say, oh, the best times are back again, and then the following quarter there'll be a negative performance.
So is it a yes or a no?
I don't think that the worst is over. I think that there will be a lot of losers from this pack, and that you cannot extrapolate what one large company is doing to the rest of the pack, because you will have to separate the wheat from the chaff.
So you have to defend because it's 2 versus 1 now.
So just one last point here, because we need to get 3 more topics. My limited point is this, that when we're talking about this question for IT companies per se, TCS is trading at the valuations that it is because it's really been one of the biggest underperformers on the delivery side as well. If that is starting to deliver, and it is so large that it's easier for the others to probably do what a TCS is doing in terms of, some demand, some AI-led things, some companies like Persistent and a few others are doing an acquisition, Coforge is doing that. I would suspect that the others are more nimble and will be able to do it. But you know what? This debate will be put to rest in the next 2 weeks when the other companies come out with the results and the commentary.
Yeah.
So let's do this 2 weeks out on
2 weeks out as well. And I have to tell all of you, please weigh in on any of these issues that we're debating. First round was 2 versus 1. Second round was 2 versus 1. Yeah. Let's see what the third one is. The third one is an interesting topic as well.
It is. In fact, with regard to the monsoons, and we've been talking about this, the threat to the Indian economy beyond crude and the fact that it has been very volatile is the fact that the southwest monsoons have been deficient, right? I'm going to start off this time because I think that a lot of people mistake this when they look at the southwest monsoon and the progress that it makes, and I think a lot of the officials from the IMD and SkyMet tend to warn against this. You look at the overall figure and you compare it with the long period average and you say you're 95%, so you're okay. If you look at the data, we were deficient by 40% earlier at the start of June. We're now deficient by 14%. So the gap is narrowed in a big, big way. But the problem is not with that overall number. The problem is with the spatial distribution in the monsoons.
Alex, is it yes or no?
I think that it's going to be a problem because in large tracts, you're going to have agriculture that is getting affected. And yes, one might argue that irrigation is there, and to that extent it will be mitigated, but there will be a hit to rural income, and so that to that extent there will be a little bit of distress, or at the very least a loss of consumption. What do you think?
I agree with Alex on this one, and I think it's also the distribution. Just because you have very heavy monsoons for 4 or 5 days is not necessarily a good thing. The monsoon deficit threat to rural incomes will definitely be there. Some of the kharif sowing has already been impacted. Maybe it could be blunted if we continue with rains. But remember this week on the show, we had SkyMet coming in who said that in parts of the country which have had very heavy rains for the last few days, there's going to be 10 days of now a calm period. Yeah. And then maybe it'll start again. And then we'll have to still wait and see. So I think maybe the threat could be blunted at the most, I would say, but the deficit threat is still looming.
Oh, yeah. So if I could just change the question a little bit, that is it well in the price or discovered and accepted? I would say that the answer is actually a yes. That most people now know that itna deficit tha ho gaya. Abhi isse zyada to market mein as things stand, probably there's no further impact unless the monsoon really worsens further. But I personally believe that the worst of the monsoon threat is priced in.
On the earnings front as well, Neeraj?
Yeah, I would believe that people have priced it in. In fact, I wouldn't be surprised, Alex, despite the monsoon and despite the conflict, if we actually have an earnings surprise, not just in Q1, when the quarters ahead as well. Because remember, ahead of Q4, we were actually in an earnings upgrade cycle. There was this big hit because of the conflict.
The GST tailwinds were panning out and all of that was happening. In fact, for the consumption, for the automotive package as a whole, and we've spoken about it repeatedly over the course of the last couple of months as well, the data shows it that demand is quite robust.
Yeah. Demand is quite robust with how it's been so far. If we continue with this monsoon in this patchy manner, and there is effectively a deficit, you could see it impacting prices as well, and maybe not all of it is priced in. Right now.
Dekhte hain. Again 2 versus 1, huh? But you guys are cornering me here. Okay, let's start with Alex.
Why don't you take the next question?
Yeah, I'll take the next question, and we have to put the man in the corner, right?
Yeah, okay.
So, Amphi data that proves that retail investors scared is exaggerated, right? And there was so much of chat. Will retail pull back? Now, Alex, you look at it every month.
I know that you're going to agree with me. Because what I'm going to say is 100% what you think. Okay, so let me put the data on the table, right? First of all, that SIP figure, even in the month of May when the flows fell dramatically to 22,900 crore rupees for active equity, right? It was quite a fall. Even then, you had the SIP number that was above 31,000 crore, very close. So that gross number was robust.
This was for the month of?
May.
May.
In the month of June, which just came out, the SIP figures come to 31,700 plus crore.
Okay.
780 crore, which is great. And your active equity inflows have actually also climbed quite substantially to 28,900 crore rupees. And it's strong inflows in flexi cap, in mid cap and small cap, 5,000, 6,000 crore. And not just that, I also think that tactical allocations are being made in passive. How do you see this? You look at other ETFs, which is your Nifty 50 ETF, your Nifty Next 50, etc., right? You also have the silver ETF, but most people will likely be putting money into equity ETFs. That number stood at over 13,000 crore rupees inflow net in this month gone by, compared with an outflow of 600 odd crore rupees in the previous month. So people have deployed money in the month of June on a tactical basis, and seemingly people have gone towards the passive side to deploy. So I think that the numbers are good. I think that people have bought the dip, and it's going to look positive going
Okay, I agree. So it's 2 already. Now, come on.
There is no way to disagree on this.
Debate.
I can't, for the sake of it, be. I think the other way to look at it is what cash volumes will be like. So not in the mutual fund space, but if direct volumes have come down, F&O volumes have come down.
Stocks,
so maybe individual retail investors are not so hot on playing the market right now. But this brings me back, and one of the questions also exciting, because a few weeks ago when Shankar Sharma came on the town hall and made that statement that India's SIP investors are actually funding FIIs from exiting, and there was a huge viral moment around it, and a lot of people actually commented that yaar SIP band ho jayega to gadbad hone wali hai. Clearly it's not happened. The data is showing it, and I think we've now passed that Rubicon where people will look at what's happening every month in their portfolios and decided to switch around.
You know, I haven't checked this, and I need to check this. Gurmeet was talking to us. Gurmeet Chadda of Complete Circle was talking to us earlier today on the closing show, and he was saying that active equity as a category as a whole, 76 lakh crore rupees, and it's more than the FPI holding in the equity markets in India. 75 crore rupees, lakh crore rupees is what it is. Not to say, and he was also making the point, not to say that you shouldn't have FIS come through, but if the argument 5, 6, 7, 10 years back was that domestic investors don't own enough, or retail investors don't own enough of India, then that argument can no longer be made.
One is not owning enough of India. Two is not owning enough of some of the best companies in India. And granted, we may not have a great AI company, etc. and stuff like that. But there are some amazing names, right? If it was HDFC Bank in 2011 to 2020 and many others, and it was not owned by institutions, not owned by retailers, because always ये होता था कि 75% threshold से थोड़ा नीचे जाता था तो FI flows आ जाएंगे HDFC Bank में, because it was FI dominated. It's great to see Indians owning great Indian 100%. Companies.
And it's great to see Indians deploy when the markets go down. And I'm not saying it's necessarily going to be a bet that has always worked. It doesn't.
So right.
But the fact that investors become so intuitive that when they see a dip, they're like, okay, I want to come and buy it. And that faith is persisting, I think, is a very, very important one.
Just one comment on here, a shout out to some of the advisors as well. You got to give credit to them. They are the ones who are keeping the retail investors, giving them sound advice that, right through this turbulent period, because there is a pot of gold.
I shout out to the investors as well.
As well, of course.
So if there is a contrarian view on this, we want to hear, because you don't ideally, everyone want to agree, but you also don't want to disagree for the sake of it.
I do have a slight nuance that I want to add to this, and it's an important point that you raised, because it's found, and data has proven, that average returns are not easy to get. Most people do not stay invested for the long term. They actually get out at all of the wrong times, and they get in at all of the wrong times. And so if you say that the average returns are 12, 13, 14%, whatever it is, over the long period, most people, it's actually the division of that is that most people fall at the bottom end of the bell curve, right? So it's not that traditional bell curve.
Sometimes you can't time it. People will also withdraw when they need to withdraw, and then that's
No, but people mostly withdraw because they're feeling, yahan se market niche jayega, I will buy at the lower level.
Yeah.
Or they feel ki, oh, this mutual fund has done better
But
than my
isn't
mutual
that the
fund.
exact opposite of what a SIP is supposed to be? It's
Which is
supposed to be
why.
an
But
average. That's why you have an
people
SIP.
stop SIPs and start other ones. Ki,
Yeah.
my neighbor's SIP is doing better than mine, I should shift to that.
Okay, no, don't do that. Don't do that. There's consensus on this table that the SIP scare was exaggerated. Okay, the last one. I found the story very exciting.
Yeah.
So there's this whole debate about Meta's new Muse image AI tool.
What is it?
So it effectively, as best I understand it, it allows you to create any image on Instagram. Now the scary bit is it can also dip into any image on any of the Meta platforms, which could be yours, which could be yours, which could be mine, which could be any of our voices. And you can use that to create a fresh image or video. And you must go to our website and read this piece if you haven't, about how to switch off those settings in your Instagram.
Oh, you can do that?
Yes, so that this cannot be used. Alex wants to look at
I want
his
to do it
phone
right now, yeah.
right now, because this is scary. So now, you know, not to cause fear, and I know I'm already biased with this question, Meta's Muse image AI tool is everyone's worst fear come true. I think yes.
Yeah.
Yes, because think about it. You have an AI tool from a platform that has
Yeah, but he's changing his settings as we speak, by the way.
I am doing it right now as we speak.
that has everyone's data.
Yeah.
All of us are on so many apps on this one company's platforms.
Yeah.
So I think this is the worst fear come true.
I mean, just look, I must confess that I read about this when I saw the topic that you'd highlighted, but just the idea of the muse, right? Where does it come from? It comes from Greek mythology. And the idea that you had somebody that inspired you to have creative art, right? And so the idea seemingly that Meta seems to have is that you will put images up by using somebody else as a muse. The only question is that person...
I don't know. I don't know if that's what they meant to do.
I mean, I guess that's what it means.
Muse is going to be more than just this imaging tool. There's already one version which is out 3 months ago. It was called Mango. Then, you know, they've added some more updates
But if that's
yesterday.
the idea, then the muse should have the option to say, hey, you know what? I don't want to be a muse.
Yeah. No, but I think privacy concerns are going to become very, very important going forward. Authenticity is going to become important. You've already had the digital arrests, fake claims, all of that happening, and that was the other thing with WhatsApp and Kunal Shah. After he came in, this was the big hullabaloo, right? That saying have usernames instead of numbers.
No, I just want to say that I was trying to do this for the last 2 minutes. While we are on air, I've been able to. So you got to teach me how to do it after.
You have to go to ndtvprofit.com.
Okay, I'll do that.
There's an article there that tells you what to do.
No, but this is I mean, in all stretch of imagination, I'm the reason why blockchain got so prominent, because your data should belong to you.
Yes.
And therefore privacy is so important, right? All of Apple's ads are around privacy, and if a lot of that is getting challenged by great cool tools, and if I've understood this problem correctly, great cool tools, then you ought to be worried about it. The tool may be great, but it may not be really what you
But I
want.
think this also brings to light, and I think this is last comment, I guess, you guys weigh in, on targeted marketing, right? Because a lot of what you do on social media generates impressions, and those impressions are ultimately used to have you targeted with marketing.
Yeah, that's the article that we're talking about. It's on the NDTV Profit website, Meta AI, how to opt out. To go and read it. I know Neeraj is going to try and read it right away. Last story before we wrap up, and this is something that our producers team highlighted, is the Chinese managing to do what Elon Musk couldn't for the longest time. They figured out a reusable rocket. And this is something which Musk has been planning for some time. So here are the pictures which came out, and it's a big step in the global space race. The country has successfully launched and gotten back and recovered the first stage of its Long March 10B rocket during its maiden orbital mission. But unlike Elon Musk's SpaceX, which lands boosters vertically, China used a giant sea-based net system to catch the returning rocket. The breakthrough makes China only the second nation to achieve controlled recovery of an orbital class booster. Cool stuff happening there. To add insult to injury, I think a few weeks ago, BYD overtook Tesla as the largest selling EV in the world. So there's a whole China versus Elon race also going on.
But profitability is an issue for BYD, right?
I mean, but they are making advances for sure. And well, let's give credit where it's due. By the way, some great changes around the India-China equations as well, right?
Important.
Chinese companies coming into India on the capital goods side.
Yeah.
The Vivo Dixon JV getting a nod as
big
well.
story.
Amber got it earlier, so I think there is some thought there, which is
There
good.
has been a shift there.
Yes.
There's definitely been a shift there, and it's great for companies that are waiting to tie up those deals with their Chinese counterparts. All right, that's all the time we've had. Please weigh in on what you think of any of the topics that we've talked about, what else you want to see on the show. We'll be back next time, same place, same time on NDTV Profit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया। आप बहुत सारी चीजें बना सकते थे।
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, you know. Shifted in the shawl outside.
You have a technology called BLDC, which powers your fans. Why is it different?
Traditional fan consumes 75 to 80 watts power. That's a huge power, you know. And with our tech, we built a prototype and learned that we can deliver the same output.
Benchmark indices ended Friday's session with the strong gains, but the Nifty snapped its longest weekly winning streak since September, ending the week lower. Broader markets, however, have outperformed the benchmarks. Indian Bank delivers a healthy first quarter performance with net interest margin rising to 3.41% while asset quality remains stable. Management says margins are likely to remain flattish in near term. Apollo Microsystems abuzz as it's set to acquire a 41.33% stake in Premier Explosives in a 1,550 crore deal. Speaking to NDTV Profit, Premier said management will remain unchanged. FY28 will mark the partnership's rollout, capacity expansion is on track, and stronger domestic growth is expected. Akasa hits the brakes on new airport routes. Akasa Air suspends flights between Noida International Airport and Navi Mumbai International Airport due to poor demand and connectivity. Flight suspension in less than a month. Flipkart, Walmart, Myntra under lens. Retailers body first seek CCI probe, alleges Flipkart engaged in predatory pricing and unfair marketplace practices. Delhi High Court refuses Google's plea in Hindware trademark dispute. No immediate relief for Google. Court had barred Google from auctioning Hindware keyword. After ethanol, government's big bet on hydrogen as alternate fuels, Transport Minister Nitin Gadkari has said that hydrogen is the future of transportation industry. Trails underway on 10 routes. Prime Minister Modi begins final leg of three-nation tour in New Zealand. Prime Minister Modi wraps his Australia tour after C at Melbourne Cricket Ground, highlighting the growing role of sports diplomacy in India-Australia relations. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So viewers, markets have ended higher on Friday with Nifty gaining over 0.1%. The broader markets has outperformed the benchmarks, and for the week if we talk about, so benchmarks indices have ended on a subdued note with Nifty slipping over 0.2%. Let's go over to my colleague Parth for a complete market roundup.
Well, a good day for markets today. Nifty 50 ends in green and gains about 1% When you look at the broader market, while that outperforms the benchmark, Nifty mid-cap 150 and small-cap 250 both end in green and gain over 1%. When you look at over the week, the picture changes. Over the last 1 week, Nifty ends in green, the Nifty performance, and is down about 0.2%. In terms of top loser over the week, we have stocks like Trent and DRL both losing the most, while the Trent is down about 13% and DRL is down about 9%. In terms of the broader market, well, those outperformed the benchmark over the week as well. Nifty mid-cap 150 ends in green and gains 1.2% and ends in green for the second consecutive week, while the top gainers in mid-cap 150 are stocks like Kalyan Jewellers, which gaining the most, gained about 25% for the week, and well, we also have Godrej Industry, which gained about 15% for the week. Now we'll look at the small-cap 150 when that ends in green for the second consecutive week, and while Nifty small-cap 250 gains about 0.6%. In terms of top gainers, we have stocks like J&K Bank and CE Info Systems, which has gained the most in the small cap 250 space. While if you look at the sectorial image, we do see that Nifty Realty was the top gaining sector for the week, which gains about for the fifth consecutive week, and it gains about 5.2%. In terms of top gainers in Nifty Realty, there are stocks like Lodha Developers and Brigade Enterprise, where they have gained the most for the week in Nifty Realty per se. Now, in terms of Nifty FMCG, that was a top losing sector, which lost about 1.5%, while Varun Beverages was a top loser of Nifty FMCG, which is down about 7%. Now, if we look at the key trends, we do make a note that Nifty PSU Bank, Nifty Oil and Gas snaps its 2 weeks of losing streak, while Nifty IT, Nifty Metal gains for the second week in a row, and Nifty IT seeing that momentum during the last couple of days after the TCS result, which came on Thursday, and we saw the impact on Friday market. Well, if you look at the other key trends, we also make a note, Nifty Pharma gains for the 5th week in a row.
All right, viewers, TCS roars on the back of resilient Q1 performance with modest revenue growth and headcount growth coming in at 15-quarter high. So my colleague and also executive editor of NDTV Profit, Neeraj Shah, caught up with K. Krithivasan Company's MD and CEO, and also Aarti Subramaniam, ED President and CEO, to discuss the quarter gone by and even the outlook ahead for the company. Let's listen in to a snippet of that conversation.
When I look at the reported line items per se, almost everything is in line with what my colleague Jasmeet penciled in. So I don't have any questions on whether it beat or not beat, etc. But just putting into perspective, a couple of brokerages said that the revenue growth was slightly higher than what they had penciled in. What went behind the quarter? Did geopolitics have a large impact on the quarter?
As I said, overall it's been a good quarter, very satisfying quarter for multiple reasons. Revenue being what it is, like obviously if there is a beat, we are all happy about it. Our order book has been good. Our largest vertical, BFSI, it's consistently it's growing. More importantly, our AI revenues continue to grow. The discussions that we are having on the size, the other point is that the ticket size of our AI projects are growing, and the discussions we are having with our customers on AI. So that's also resonating very well. Our customers like the overall 5-pillar strategy we put in front of them.
Viewers, Indian Bank has delivered a healthy first quarter performance with NII rising to 3.41%. And if we talk about the asset quality, so that also remains stable. And so what really stood out in the earnings, and what is the management outlook been like? To better understand this, my colleague Piyush, in fact, spoke to Binod Kumar, who's the MD and CEO of Indian Bank. Let's listen in to that conversation.
Your deposit book has grown by around 13-14% odd. I'm sure you are also mobilizing FCNR deposits. If you could give some guidance on how much of these FCNR deposits you have raised and what's the target?
Yeah, so far I have raised around 140 million, and I'm expecting to raise around 2 billion by the end of the period window provided by RBI.
Your advances also have done quite well. In fact, corporate loans have grown by around 12-13% year on year. What is the quantum of corporate loans that are in pipeline?
Pipeline is around 63,000. We have a pipeline of corporate book of around 63,000.
If you could share where this demand is coming from, which segments of loans, what corporates are putting up, and whether these are working capital loan or these are for fresh investments?
No, majorly are fresh investment, because WCDL, LOC, etc. working capital low yielding, still we have shaded around 6,000 in Q1. So, particularly I am saying good traction in data center, good traction in green finance. A lot of battery projects are coming. Data center we have underwritten also. 2-3 projects we have underwritten. And also transmission line. So few sector relating to green and data center we are seeing good traction.
All right, viewers, let's turn to a major development in the electronics manufacturing space now. Dixon Technologies is in focus after the centre has approved its long-awaited joint venture with Vivo Mobile India, and the JV will undertake smartphone OEM manufacturing, with Dixon holding about 51% stake. So the stock is reacting positively to the news, and my colleague Puneet is joining us with more details on this.
It's definitely a lot of perspective being covered, but a 19-month wait has essentially ended, because the company had actually alerted the exchanges on 15 December 2024 for the joint venture with Vivo. So it's taken a really long time for this approval to come through, and as you rightly mentioned, that one key aspect that management had mentioned, that 45 to 60 days ramp up is still yet, once the JV will be approved, will take. So you will see 2 quarters, quarter 3 and quarter 4 essentially, and most probably at this point of time, for the Vivo volumes to be visible in Dixon numbers as well. And the other aspect that the management had guided for 32 million smartphone guidance for FY27. That's a similar number that the management achieved in FY26 as well, but this does not have the Vivo JV numbers in. So, the IFL estimates is around 40 million. For brokerages like Jefferies, they see a 43 million volume guidance for FY27. So they will see essentially management coming out in quarter 1 and upping their guidance, and that's what most brokerages also feel. So JP Morgan has actually hiked their target price to 16,700 versus 14,300 earlier, and hence a lot more management upward guidance revision is likely on the cards.
Right. Thank you so much, Puneet, for that. In fact, viewers, moving on, June mutual fund data is also out, and it shows that investors are doubling down on equities with strong inflows into mid, small and flexi cap funds. My colleague Alex is here to tell us more on this.
Well, the numbers look better than the month of May, that's for sure. And here are a few takeaways that you should pay attention to. First and foremost, the SIP data is robust once again. That number for the month of June coming in at 31,781 crore rupees, and that is a 3-month high. It's within touching distance of all-time highs, and that's certainly something to be happy about. The second key takeaway has to do with the recovery in active equity inflows, and that number climbing as much as 26.5 base. And here I'm talking about the net inflows into the active equity category. The number stood at 28,973 crore rupees. The gross inflows had actually reduced quite considerably in the month of May. That has recovered by as much as 17.3% in the month of June. And the gross number stood at 67,600 odd crore rupees, as a result of which that net numbers looked much better. You've seen pretty good inflows in a number of these important categories, small, mid and flexi cap. Passive inflows is something to pay attention to. That's the third key takeaway. And other ETFs as a category have seen inflows of over 13,230 crore rupees compared with an outflow in the previous month. However, index funds have seen a small outflow compared with a small inflow in the month of May. So seemingly some people have taken money off the table, but the last observation, or the fourth key takeaway, is that seemingly the negative sentiment among retail investors in the mutual fund category seems to have dissipated a little bit, and tactical allocations seem to be in evidence, particularly given the other ETF inflows of over 13,000 crore rupees.
All right. Thank you so much, Alex, for breaking down those numbers for our viewers there. And in fact, viewers, retailers body First has approached the Competition Commission of India, alleging Flipkart being engaged in predatory pricing and unfair marketplace practices. Now, Flipkart has responded to the CCI complaint, and it has said that Flipkart operates in compliance with all applicable laws and will also cooperate with any sort of regulatory process. My colleague Rishabh is joining us for more details on this development.
Absolutely. We broke the story earlier this morning that a retailer's body called First has moved the Competition Commission against Flipkart over alleged predatory practices. What this body had said was that there were certain GST avoidances that Flipkart was creating, and this created a 3,000 crore rupee war chest that essentially funds the deep discounts that one can see on the Flipkart app. There were other allegations around several violations of the inventory-led model. There were claims that they are operating as an inventory-led model as opposed to having the permission to operate only as a marketplace model. There were other allegations as well, but what we have now is Flipkart's response to all of this. What they are saying essentially is that they are in compliance with all applicable laws here in India. They are saying that they will cooperate with any regulatory processes that come up as and when required. What they also are saying is that they do enable about 1.4 million sellers, most of which are smaller businesses. And that is something, and this is a smaller business body that has come up and made this complaint to the CCI. So all eyes peeled on whether this complaint actually gets admitted by the CCI and what sort of probe, if at all, is ordered by the CCI against Flipkart.
Rishabh, just stay with us, Rishabh, because we are getting another update in which TRAI has clarified, on use of 1600 series and 140 series. And they're saying that mandated use of 1600 numbers for transaction calls by government entities, financial institution, regulated by RBI, SEBI, IRDAI and PFRDA. So on this crucial development, what more are you picking up?
Yeah, so this is in accordance with what has been happening over the past few days. About 2 or 3 days back, you had the Truecaller CEO taking to social media and posting about why they feel that the introduction of these special series of numbers, has actually led to an increase in proliferation of spam calls and messages. TRAI has come out and said that they have mandated the use of these numbers for certain government entities and banks, financial institutions that are already regulated by the government in various forms like the IRDAI or the PFRDA. They've said that any tagging or blocking, if Truecaller or any other app like that blocks or tags calls from the 1600 series numbers, that is not permitted. And you've also had the TRAI that has come up and sought extra authorization from the MeitY to issue notices to such caller ID apps. So there is a sort of a standoff between TRAI and Truecaller at this point in time. One of the sharpest confrontations that one can say that Truecaller has indulged in publicly with the telecom regulator. So we are seeing a lot of developments on that front, which chatting later with Truecaller, the CEO of Truecaller today. So stay tuned to that as well.
Absolutely. Thank you so much, Rishabh, for getting us those exclusive details on this crucial development that has come in. And, it's key to watch that what really pans out in the future as well. And viewers, moving on, Prime Minister Narendra Modi has arrived in Auckland, beginning the next leg of his 3-nation tour after concluding a high-impact visit to Australia. Now, the visit saw both countries deepen their strategic partnership across trade, defense, clean energy, critical minerals, and even maritime security. Now, before his departure, Prime Minister Modi visited the Melbourne cricket ground, where he joined Australian Prime Minister Anthony Albanese to launch the India-Australia Sports Collaboration Roadmap. And viewers, through the journey of the JRC and NDTV campaign, Child Marriage Free India, we have brought you stories from India's villages and from the farthest, most remote corners of the country. Today, we turn our lens on India's cities. For every 2 girls married off in villages, 1 girl is married off in an urban space, an alarming reality that is echoed by the latest National Family Health Survey. or the NFHS 6. So this is a crime which often exists within touching distance of our own lives. And we look at a story from Pune now where a girl was saved from child marriage. Look at the report.
Every single day, lakhs of people arrive in our cities to chase their dreams and build their lives. Yet, within the folds of these concrete jungles thrives the insidious reality of child marriage. More often than not, it impacts girls and women known to us, who occupy the same spaces as you and I, removed just a degree or two from our own lives. 16-year-old Vaibhavi is one such girl, living a stone's throw from the bustling IT hub of Pune city. She was on the verge of being married off to a 25-year-old man when she was rescued in the nick of time.
एक्चुअली एक मेरी फ्रेंड है जो अहिल्या नगर में रहती है, तो उसने मुझे ऐसे ही कॉल किया था शाम के टाइम पे और हमारी बात चल रही थी, तो उसने मुझको शेयर किया कि अरे मुझे ना हल्दी में जाना है करके। तो उसको मैंने पूछा किसकी हल्दी है, तो बोली नहीं मेरी बाजू में ही रहती है एक लड़की और उसकी शादी है और उसका जो एज है वो कम है। तो उसको पता ही था कि मैं काम करती हूँ और उसको ये भी पता था कि बच्ची की जो शादी है वो पूना में होने वाली है। मैंने मेरे NGO को बताया इसके बारे में और उसके बाद मैंने चाइल्ड लाइन को इन्फॉर्म किया, CWC को इन्फॉर्म किया और इनको इन्फॉर्म करने के बाद हमने वहाँ पे जो स्पॉट था वहाँ पे हम चले गए। वहाँ पे जाने के बाद हमारे साथ में चाइल्ड लाइन का टीम था और जैसे ही हमने इन्फॉर्म किया था कि वहाँ के स्थानिक जो पुलिस थे वो वहाँ पे थे, ग्राम सेवक था, BDO था और देन और भी आंगनवाड़ी सेविका जो थी वो भी हमारे साथ में थी। हम लोग सब वहाँ पे पहुँचे और बच्ची का जो एज था तो सबसे पहले हमने वो वेरीफाई किया। देन जो फैमिली थी उनको बताया कि बच्ची का जो एज है वो कम है, तो ये चाइल्ड मैरिज होता है और अगर आप चाइल्ड मैरिज करते हो तो आपके ऊपर FIR दर्ज हो जाएगी। तो उनका काउंसलिंग किया दोनों भी फैमिलीज़ का और फैमिली को समझाया। देन वो समझ गए कि नहीं बाबा कि हमें चाइल्ड मैरिज नहीं करना है।
The collective action of Child Helpline, the Gram Sevak, the Block Development Officer, Indapur Police, an Anganwadi worker and the local NGO, Committed Communities Development Trust or CCDT, a partner NGO of the Just Rights for Children network, stopped the wedding before it could happen. As a result, no arrests were made. Today, CCDT continues to follow up regularly with Vaibhavi and her family to ensure her safety, education and overall well-being. Vaibhavi is still living safely at home with her family and is now preparing for her Class 10 exams. Child marriage is a crisis thriving right inside our urban centres, fueled by migration, economic pressure and a lack of awareness and action on our part. Ultimately, child marriage is a crime and a grave violation of human rights, regardless of its geography.
ग्रामीण में तो केसेस वैसे आते हैं हमको, लेकिन ऐसा नहीं है कि शहरी भाग में नहीं आते। शहरी भाग से भी केसेस हमको आते हैं। शहरी भाग में भी जो भी वहाँ के जो ये है कम्युनिटीज़ वगैरह है जो कि रूरल मतलब जो चाल वगैरह जो बोलते हैं, उस एरिया के भी लोग कैसा रहते हैं, उनको ज़्यादा इन्फॉर्मेशन नहीं रहता है या फाइनेंशियली उनके इशू रहते हैं, उनको फाइनेंशियली वो बच्ची को सपोर्ट नहीं कर पाते, तो उनको दिमाग में क्या रहता है कि बच्ची की शादी करवा दो और जो है बच्ची की शादी करवा दी है तो उनके ऊपर से जिम्मेदारी निकल जाएगी।
Vaibhavi's story tells us that vulnerable girls can be protected and given a second chance at childhood when vigilant local communities and civil society networks work together. Each one of us can make a difference. Stay alert to the warning signs in your own ecosystem. Your one act of vigilance can rescue a life and save a childhood.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
बरसों से सरसों.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
IIT Bombay, engineers, brilliant students, so much drive to create something new. You found a new technology, this new motor. इसका फैन बनाया. आप बहुत सारी चीजें बना सकते थे.
Atomberg did not start with a clear idea.
What idea? We were desperately hunting for it. And then that hunt was on for 4 years. Nothing changed, shifted in the shawl outside.
You have a technology called BLDC, which
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, finding you the best stories, and also, is there any alpha to be made from here onwards or not? Today is a very interesting company I've got. I'm going to explain you, but before that, try to guess it. It's an Ahmedabad-based pharma company. Very interesting name. Of course, it was recently listed, so I'm sure you'll try to guess it. A very interesting name also they have. This is one of the fastest growing companies amongst the top 30 Indian pharma peers as per the data, and Street is quite bullish on it. Recently, it was listed in the month of December 2025, 15th to be precise, but from then onwards, the IPO has been strong, the listing was strong, the stock is up almost 90% from the IPO price. IPO के भाव से लगभग 2 गुना बढ़ चुका है ये स्टॉक. लेकिन ये स्टॉक का नाम क्या है? What is this pharma company? Ahmedabad based? Interesting. No, it's not Torrent Pharma. The company's name is Corona Remedies. This is what we are talking about. But why are we calling this company? What is it that they are doing different than the markets? Why are they doing better than the industry? A lot of questions. I'll try to find you all of these answers. The commercial production of women's hormone facility. ये धंधा कैसा है? इसमें margin क्या ज़्यादा है? We'll try to understand that, and also the capacity utilization and expansion. एक हिमाचल प्रदेश, and of course the second one is in Gujarat. Another important question to be asked for the company is on the portfolio mix, chronic versus acute. Where is the company's focus actually going ahead? Another question, the fourth one, which we'll try to understand, is the inorganic growth. There is Bayer Zydus relaunch portfolio also which is coming in. How does that strategy work out for this business? And this timelines for this Vocadine acquisition. That's what the street has been looking forward to for this acquisition. It's a very interesting story though. And the biosimilar biologics, what's the entry looking like, product launch. So they are going all out as a pharma company.
and the growth in the international business. It's very small right now, it's domestic focused. देखा जाए तो Mankind Pharma जैसा जो है इनका exposure है. To put that in perspective, we'll have Bhavin Bhagat, the CFO of Corona Remedies, trying to explain us what's the real story behind it. And yes, the company is coming first time in KYC. तो company के बारे में आप समझते हैं. About the company, what is it all about? It's a pharma company. It was established in the year 2004, Ahmedabad based. Interesting origins. Let's talk about the other key reasons why we are interested in this counter. They develop and market therapies in women's health, कार्डियो डायबिटीज़, पेन एंड यूरोलॉजीज. लाइफस्टाइल के जो आप कह सकते हैं बुरी आदत का जो इम्पैक्ट आता है, that is what they are catering to. So this is a very interesting theme, to be honest. They operate, of course, on the certified manufacturing facilities, and Invesco has bet in this stock. 4.4% stake they are holding. So this is an interesting story. Formulations, roughly 1.65 billion units. That is the capacity which I am talking about. Sachets comes around 20 billion and bottles comes at around 10 million units. This is what they can keep manufacturing. It's the fastest growth amongst the top 30 Indian pharma companies. This is the MAT industry data which we have taken and analyzed the key details about the company. Also 76 brands are there. They are having 32 engines brand as well. So the way they have this brand acquisition at play and the way they commercialize it, that seems to be quite important in this re-rating. Now they are commercialized recently this approval of women's hormone manufacturing facility, और इस पे जो है हमारी सबसे पहली सवाल रहने वाली है मैनेजमेंट के साथ. Everybody is talking about it. This is a very important trend and a high margin business. Also, let's look at the other key announcement. Of course, for hormone and oral solid dosage facility approvals have also started coming in. याद रखिए इनका जो हिस्ट्री है सिर्फ 6 से 7 महीने ही पुराना है. So that is how we have put our analysis as well. But let's move on from the recent announcements. What you should know before you start this. Remember the acute का जो business है. This is for sudden, severe and short-term condition symptom whenever we talk about acute. Number 2, chronic. This refers to a long developing, persistent, long lasting condition. ये 3 महीना या lifetime हो सकता है. यानी कि chronic के धंधे में ज़्यादा customer stickiness है. That is the reason why everybody is moving towards chronic. This progress happens over a lifetime. Why this is that? Because there is a higher customer stickiness and chances of margin expansion. अगर आपको lifetime के लिए कुछ fever या आपको कुछ टाइप से कह सकते health issue है, then you'll keep buying these products. Portfolio breakup, that is how things have changed. Look at that. The story moves on to the chronic segment. 72% of that comes from just this. The acute has come down. So this is the trend which we are looking at, and this is how things have changed for the company over the last 10 years. And remember, 96% of the revenue comes in from the domestic space and 45% comes from the western region in India. So definitely there is a skew coming in towards this, but company is expanding in the other sectors as well. This is how the domestic business looks. But इस कंपनी के पॉजिटिव ट्रिगर्स क्या हैं? तो मैंने 5 ट्रिगर निकाले हैं. द ग्रोथ फॉर द क्रॉनिक सेगमेंट दैट इज एट 19%. Compare that with the industry growth, it comes in at 10%. That is a very important point to track. Also, the geographical expansion is still at play. And India is such a huge country for pharma that पहले domestic business पे focus कर लिया जाए, and that is why a lot of players are focusing on it. There's more DI and FI participation likely. इसका lock-in का जो overhang है stock का IPO का, that is also almost over, but still a good absorption is coming. That's a really good sign. The expertise in the strategic collaborations and product scaling, बड़े brands के साथ, the way they scale up and make their products, that is one of the moats which I have discovered in the history while I was studying this company. And also important approvals are being announced, and that is why the market is rewarding, at least in terms of premium valuations. But what may not work? Not everything is right. In KYC, we make sure that we give you both the sides of the story. The valuations have become expensive if you are looking for fresh positions. Regulatory risks, आपको US FDA या आपके कह सकते हैं कि बाहर वाले जो रेगुलेटरी अथॉरिटीज़ होते हैं उसका इस धंधे में हमेशा रहता है. And they do a lot of integrations and acquisitions. So if there is any delay, it might be impacted in the numbers. and that is what the story is all about. But the KYC story, that's also very much important, and that's what I write. 8 rating parameters I get for you. This of course includes the income statement, balance sheet, cash flow, and the usual return ratios, especially the ROC numbers. Very important to track as an investor, especially if you are from the long-term thought process. Street cred and shareholding, take it with a pinch of salt. सिर्फ 6 महीना का ही data है, उतना ज़्यादा है नहीं. Valuations, I'll give you an interesting peer list, and more than 3 of them are there. It'll be very interesting to analyze. Is there any fair valuation left, or the stock has run up already from the IPO? And the outlook, where is the overall guidance looking like? And companies coming for the first time in KYC, so this is something which everybody will be excited about. But let's talk about income statement and see what's happening here. This is the first one to talk about. Largely the 3-year CAGR numbers look pretty decent. That's around 17 odd %. 32 to 33% growth coming in the EBITDA as well. That is where we see a good momentum coming in. So it's kind of ticking all the right boxes, and this is where the business model थोड़ा change हो रहा है. और अब 20-21% पे जो है margins आ चुके हैं, and it's a significant jump, and they're sustaining it. This is what I like about companies, you know, the way they change, and the change is the biggest constant in life, as everybody talks about. So let's talk about balance sheet, what's happening here. In balance sheet, I feel a little bit of debt levels are on the higher side, and the way the expansions happen or integrations happen, then of course stress comes in financials, especially in balance sheet, and that's what is looking like. But nevertheless, it's decently managed as of now. हाल ही में IPO भी हुआ था, तो capitalization was decent. So it's a neutral rating right now for my analysis. But apart from this balance sheet, let's talk about the cash flow segment, what's happening here. In cash flow, we see a good amount of movement has happened. It's at 229 crore rupees. Compare that, it's around 157 crore rupees. So you see a good momentum is coming in. Let's talk about the overall absorptions, the way things are panning out, and this is around 115%. It's pretty decent. ज़्यादा net cash flows अभी check ना करें. Company is in its growth phase right now. ये ज़्यादा important होता है. इस पे आप ध्यान दें. So right now it's a strong positive sign in the operating cash flow segment. But let's talk about return ratio. What's the story looking like? And wow, the ROC numbers, something was there in FY23, FY24, especially for margins and the return ratios, and there seems to be a change happening in both these years, and it is sustaining. So now it's a high ROC business as well. And I had mentioned they are looking after a lot of these important, you could say the chronic segment. That's where the focus is, and we can see that in the numbers. So it's a strong thumbs up when it comes to the ROC numbers. Let's talk about shareholding and just take it with a pinch of salt. सिर्फ 2 quarter का ही data है, उतना ज़्यादा नहीं है. So largely things are not moving so much, but yes, minor increases happening from the DIs and the FIs. If you could just show us the shareholding, how things are moving. And largely, let's pull out the shareholding numbers to give you that entire picture of what's happening here. And yes, this is over here, and just wanted to get that thing on the screen as well. Just once, छोटा error बीच में हो जाता है, but the error in analysis is not there. Public, that's where around 22 odd % is there, and FIs and DIs we see that's also holding up. That's around 2 to 7%. So that is what we'll be watching out for. Let's talk about street cred now and see what's happening here. And yes, this time it's right. Street cred, let's see from the IPO price, listing price, stock has done really well. It has almost doubled up, and the listing price also, stock is up 38%. And if you look at 2026, stock is up 46%. पिछले एक महीने में भी stock में तेजी आई है. That's up 14% as well. So net a good momentum coming in. So I'm going to give this a thumbs up as well. Let's talk about valuations to see so much run up has happened. Are the valuations comfortable or not? And no, it is not comfortable. Corona Remedies, it's at a trailing 12-month P of 62 times. Compare that with the other players. Of course, this is on the higher side for Torrent Pharma, 76 times of valuations coming in. Other players are still cheaper. Alchem Labs सिर्फ 32 गुना trailing P पे चल रहा है. Let's get in the other two companies also, that where we'll show you Abbott and Mankind Pharma. They are still, on the cheaper side. Of course, Mankind Pharma is a very close competitor, but nevertheless, their expensive valuations are there, but not as so much as Corona Remedies. And right now, it's not a good time to enter because the valuations are not that attractive for an investor. So I'm going to give this a thumbs down. Let's talk about outlook to show you how the picture is looking like. There are 5 pillars of growth which the company is focusing on. They want to increase their market share in the domestic space. Of course, largely in the Western India, they have a better concentration. They have expanded into other 2 therapeutic areas as well, and we'll try to understand from the management which are these areas. Are they very high growth, high margin? The strategic acquisitions and in-license agreements, this is there in their business model itself. It was there before the IPO also, and now they are sticking to their culture, expanding the sales in select 5 overseas markets. Right now, only 4 or 5% of revenue is coming in. So I would say that the outlook is pretty strong. So I've given this a thumbs up as well. Let's also talk about the overall ratings, how things are looking like. And let's just get in the numbers. Largely the numbers, income statement, balance sheet has been pretty strong. Cash flow also looks decent. Return ratios, it has changed. The model of the business has changed, and that's what we are seeing in the numbers. Take things with a pinch of salt. Just 6 months of data, street cred and shareholding for you. Street cred, it has been really wonderful. 90% gains coming from the IPO price, but the run-up has made sure that the valuations are not attractive in the stock, but the outlook is pretty strong and the street is quite bullish. So the total rating in the KYC segment for Corona Remedies comes around 6 out of 8. It's largely positive from the normal averages which we give here. Let's talk about the management. After this, how things are going to be coming up. We'll have Bhavin Bhagat, the CFO at Corona Remedies, talking about the company's growth plans. Now we are joined in by Bhavin Bhagat. He's the CFO at Corona Remedies. Good afternoon, Bhavinji. It's always a pleasure to have you with us at NDTV Profit. And a lot of announcements are coming in. And of course, your company makes a debut at KYC as well. The commercial production of women's hormone facility. That's what the street is talking about. Just wanted to understand what is this facility and why are you focusing in this segment?
First of all, thank you so much, Sharatji, and thank you so much for inviting me in the KYC. So it is delighted to share you about our company first. And as you asked about the hormone facility, women's healthcare is a need of an hour in these days, and it is an evolving era in the modern medicine. Henceforth, we have started our EU GMP approved women's hormone manufacturing facility on 30th June 2026. As far as the women's healthcare is concerned, we are into top 5 in India as far as the covered market is concerned. And out of our several brands, 7 brands are into top 3 category in terms of rankings are concerned. So we are niche in gynecology and women's healthcare. We are present from menarche to menopause into it. So from 14 years young girl to 75 years old lady, we are catering the entire basket as far as the women's healthcare is concerned. Out of 30,000 gynecologists and IVF specialists in India, we are present in 85% of the market. And after the total revenue, 31% revenue comes from the women's healthcare and gynecology segment in us. So that is the reason it was a need of an hour for the company as well to go for a dedicated hormone facility. And we have secured our supplies not only from the manufacturing side, from the API as well, as we have invested 31% equity stake in an US FDA and EU GMP approved La Chandra facility. It is just outside, it's in Gujarat, and we have invested 31% equity to secure our supplies. So we are going all out as far as the hormones and the women's healthcare is concerned.
Right, hormones and women, that's a very interesting take which you have given and also given us an industry perspective. But Bhavin ji, अगर बताया जाए तो आपकी कंपनी की मोट क्या है? What's your moat? It's been 6 months, the markets have rewarded you, the shareholders have been rewarded, but we want to understand and maybe do a revision. आपका मोट क्या है आपके धंधे में?
So first of all, we see our business is very simple, to be very honest. Right. You are into such business where you deal different types of people and businesses. But as far as pharma is concerned, we are into simplest form of business where every day a new company is entering into this competition. So out of 1,200, 1,300 odd pharma companies, every day a new company is entering into the business. And as you asked the question, what is our moat? We are very simple company. We are very focused company. our moat is very clear, is a razor sharp focus and ruthless execution in whatever we do.
Wow, that's interesting. Bhavin bhai, let's try to understand chronic and acute, the way your business has changed. Chronic is getting more, preference going ahead, and we all know why. But just wanted to understand what's the growth outlook for acute as well as chronic now going ahead for the next 2 to 3 years.
So I'll tell you the last 3 year scenario at Corona is concerned. If the chronic is growing by 10%, which is 25% faster than the overall IPM, we are growing by 19% in chronic since last 3 years. And as far as the acute is concerned, acute is growing by 6 odd percent, whereas we are growing double than the IPM, that is 12.5%. So acute and chronic mix, and out of which 72% is chronic in nature, chronic and subchronic, which contributes 76% of the total revenue out of it, and which is growing by 19% since last 3 years.
But the inorganic growth strategy is also something which, I've just noticed, the history also, the way you do your strategies for the portfolio launching, talking with the bigger guys, it's a very good setup which you have. But what's your inorganic growth strategy right now?
So, as far as the last 3 years growth of Corona is concerned, out of the 100 rupees growth, 85% rupees growth have come from the organic side. Only 15% came from the inorganic. That means we are not highly focused on the inorganic side. We are focused purely, majorly on the organic activities. Yes, having said that, if anything adds into the kitty, we'll definitely go for it. So our strategy as far as the inorganic acquisition is concerned is very clear and simple. We have three philosophies whenever we acquire any brand. First, that brand should have a strong brand recall. Means the doctor should be on the pen and mind of the brand should be on the pen and mind of the doctor, which is the first and foremost. The second philosophy of R is there should be an underlying science with that brand. And the third and most important is that perfect fitment in our basket. If all these three philosophies are done, we go all out for that brands. Hence, we never say that whatever brands are available on the street, we go for that. But if these three philosophies are tick in the box in the right manner, then we go all out.
Right, you do go all out. But Bhavin, by the Vocadin acquisition, that was a very important, step for your company. Any kind of timelines, how things are looking like, when the integration will start coming in?
Yes. So as far as the last two acquisitions, what we did, that is from Bayer Pharma and in the form of a Dr. Reddy's, that is Vocadin. So just to tell you that by the end of FY26 means